हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव कमोडिटी एनालिसिस। इंडियन मार्केट को देखोगे, गैप डाउन ओपनिंग, सेलिंग कंटिन्यू है। कमोडिटी मार्केट, क्रूड ऑयल हल्का सा गैप डाउन साइडवेज हो गया है। नेचुरल गैस भी गैप डाउन साइडवेज हो गया है। नेचुरल गैस में कॉन्ट्रैक्ट चेंज हो चुका है, ध्यान रखना। नेक्स्ट मंथ का फ्यूचर ट्रेड हो रहा है करंटली। 12:30 लंदन सेशन ओपन, इवनिंग पे 5:30 न्यूयॉर्क सेशन ओपन, 7 PM यूएस मार्केट और 7:30 कंज्यूमर सेंटिमेंट का डेटा इम्पैक्ट करेगा मार्केट को। बिटकॉइन 70,000 के नीचे गया, नाउ अब 68,000 के आसपास वापस ट्रेड करना शुरू कर दिया है। देखते हैं अब ये 66 के भी नीचे जाता है या फिर होल्ड करता है। डॉलर कंटिन्यूसली स्ट्रांग बना हुआ है, 99.6 100 700 के आसपास ट्रेड कर रहा है। $100 के आसपास जितना कंटिन्यू ट्रेड करता रहेगा, चांसेस है ब्रेकआउट होने के आने वाले टाइम में। मेटल्स आज थोड़ा बहुत पॉजिटिव हुए हैं। क्रूड ऑयल डाउन किया इस वजह से। स्टिल अभी भी 4,400 300 के आसपास गोल्ड बना हुआ है, एंड $69-70 के आसपास सिल्वर बना हुआ है। वापस कल गया था $66 के आसपास, वहाँ से $66 से $69 के आसपास अब होल्ड कर रही है। मेटल्स ने थोड़ा बहुत गेन दिखाया है। नीड टू सी कितना गेन रुकता है। बाकी अगर निफ्टी को देखोगे, वैसे बैंक निफ्टी फ्यूचर गैप डाउन, ऊपर इक्वल टू हाई फर्स्ट 15 मिनट कैंडल फ्यूचर में, एंड देन कंटिन्यूसली सेल ऑफ। ऑलरेडी 1-1% डाउन है दोनों ही, बैंक निफ्टी निफ्टी अभी भी कंटिन्यूसन में ही चल रहा है सेल ऑफ। विल निफ्टी गो डाउन मोर? निफ्टी 50 फ्यूचर पॉसिबल, थोड़ा सा और डाउन आ सकता है अभी। ये देखते हैं कितना नीचे और डाउन जाता है। पॉसिबिलिटी है 22,950 के आसपास कहीं रुके। यहाँ पर भी नहीं रुकता है तो फिर वापस 22,600 की ओर चला जाएगा निफ्टी फ्यूचर। फिलहाल क्रूड ऑयल गैप डाउन जरूर हुआ है, देखना पड़ेगा रिकवरी देता है या नहीं। बाकी एक न्यूज आई थी दैट यूएस का जो वॉर डिपार्टमेंट है पेंटागन, वो 10,000 मोर ट्रूप्स को मिडिल ईस्ट भेज सकता है, ठीक है, टू प्रेशर ईरान। दैट इज आल्सो नॉट गुड न्यूज़ बाय द वे। The White House and the Pentagon are considering sending at least 10,000 additional combat troops to the Middle East in the coming days, according to the senior US defense officials. Pentagon is developing military option for a final blow in Iran that could include the use of ground force and a massive bombing campaign. This is a major news actually. If this happen, positive for crude oil and natural gas. I think need to see troops on the ground will happen or not. Trump administration decide to send extra troops, it will significantly increase the number of combat soldiers the US has in the region. It is another signal that a US ground operation in Iran is being seriously prepared. The massive surge in ground troops is being considered as Trump says the US is negotiating with Iran on a deal to end the war. Iranian officials have not agreed yet to hold a high-level meeting with the US, and they are suspicious that the US diplomatic push is another trick. US defense official expects the decision to be made next week, and the troops will be from different combat units than the one which have already been sent to the region. Major news, you can say it. This is a major news right now. Okay, the Treasury announced that the President Donald Trump's signature will appear on the future US paper currency in honor of the 250th anniversary of the United States of America. President Donald J. Trump's signature will appear on the future US paper currency along with the Secretary of the Treasury, making the first time in history for a sitting president.
But the third time we made it too big to rig. So for those people that say the level of popularity, CNN, your friends at CNN, fake news CNN, one of the worst networks you'll ever see, one of the most dishonest, disgusting groups of people. But what happened is they did a poll, and the poll came out yesterday or day before. And is Trump losing MAGA support? The poll was 100%. And you know their pollster, he's got a lot of energy, and he's pretty good. He probably won't have a job very long. But he said, whoa, whoa. It was 100% of the people, the MAGA people, and which is mostly, I think MAGA is almost the whole Republican Party. You want to know the truth. Almost everybody endorsed wins. Almost every single person that I endorse wins. Watch him on television, a total loser. And they use this, I watch poor Chuck. I mean, Chuck Schumer is a great Palestinian, represents the Palestinian nation right now. He's no longer Jewish, I guess. What he's done to the Jewish people is incredible. They hate him. But remember this. Watch him on television, a total loser. And they use this, I watch poor Chuck. I mean, Chuck Schumer.
Extend Iran talks by 10 days, continue pause on energy target. As per the Iranian government requests, please let this statement serve to the represent that I am pausing the period of energy plant restriction by 10 days to Monday, April 6, 2026.
I'm here on behalf of the United States of America. I look forward to meeting with them. I don't know what reception I would get from them. I think they should be happy that I'm going.
Well,
If not, we don't have to go.
They might be happy, but they're not happy with what's going on.
Well, again, I'm not there to make them happy. I get along with all of them on a personal level, and we work with those governments very carefully, but the people I'm interested in making happy are the people of the United States. That's who I work for. I don't work for France or Germany or Japan. These are all good people. We're going to have great meetings.
Can the straight
It's in their interest. It's in their national interest.
Do you think President Trump criticizing NATO this morning, that sentiment?
I think he just made an observation, and the observation is that the United States is constantly being asked to help in a war, and we have more than any other country in the world, on a war that's happening in another continent, in Ukraine. But when the U.S. had a need, he didn't get proper positive responses. So right now he's just making the observation that, I think there was a couple of the leaders in Europe who said that this was not Europe's war. Well, Ukraine is not America's war, and yet we've contributed more to that fight than any other country in the world. So it'll be something to examine. The president will have to take into account down the road. It's in their interest. It's in their national interest.
Do you think President Trump criticizing NATO this morning,
I want to borrow from both of your expertise about missiles and space, and build on what Senator Ernst was discussing, the launch of the intermediate range ballistic missile towards our base in Diego Garcia in the middle of the Indian Ocean. That's bad. I'm glad that it failed. I'm glad that we shot down one. It also, of course, shows that the fatwa against missiles of that range is not exactly worth the paper it was written on, probably like the fatwas against other long-range missiles and nuclear weapons. But let me just ask this. The technology needed, not for an intermediate range missile, but an intercontinental missile, a missile that could hit the United States, is pretty much the same as an intermediate range missile. Isn't that right, Admiral Carrera?
Yes, Senator, that's correct.
General Whiting, isn't that correct?
It is, Senator, and it's not too much different from a space launch vehicle either.
Yeah, and you need enough booster thrust to get something into space, and you need a reentry vehicle to get it back from outer space or from space into the Earth's surface. And as you said, General Whiting, Iran has long had a space launch vehicle program. Have you, in your observations about space, have you seen any Iranian astronauts up there lately?
They do not have a manned spaceflight
Wow,
program,
shocking.
Senator.
Do you think maybe the space launch vehicle program is just flimsy cover for an intercontinental missile?
I do think they were developing
क्योंकि क्रूड ऑयल में देखोगे, क्रूड ऑयल में एक्ट एज अ रेजिस्टेंस लेवल एट अराउंड 9000 में भी लास्ट डेज approximately high, otherwise major resistance 9500 600, मेजर सपोर्ट नीचे 8000 के आसपास है। वहां से मार्केट अभी कंटिन्यू रैली में ही चल रहा है। कि नेचुरल गैस देखोगे स्टिल ऑन द रेंज। बाकी निफ्टी एज सेड जा सकता है थोड़ा सा और नीचे 22,950 की ओर, वहीं को जाता हुआ निफ्टी फ्यूचर 22,950 की ओर। देखते हैं वहां पर रुकेगा या फिर नहीं। निफ्टी ऑलमोस्ट आ गया 22,000, निफ्टी फ्यूचर 22,950 की ओर। देखते हैं 950 पे होल्ड करता है नहीं करता। अगर यहाँ होल्ड नहीं किया तो फिर ये वापस चला जाएगा 22,600 700 के आसपास। इंपॉर्टेंट सपोर्ट है 22,950 फ्यूचर में निफ्टी। कंटिन्यूसली फॉलिंग। फाइनली ओपन नहीं, ओपन इक्वल टू लो नहीं है, नॉर्मल कैंडल है, मोमेंटम आ रहा है नेचुरल गैस में।
This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersachi in Dubai. As the 2026 BRICS chair, India is facing intense pressure to lead the divided bloc towards a unified response to the ongoing U.S.-Israeli war on Iran. However, the group is deadlocked because its members, which now include both Iran and the UAE, are on opposing sides of the military conflict. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. I just want to repeat that point, that both Iran and the UAE are members of the BRICS. Are the BRICS actually still relevant after, I mean, they were supposed to be a counter to the G7, but obviously you have competing and very differing views about this ongoing war.
Exactly, Jumana. And just looking at that video there, it speaks to really how multifaceted and complicated this is becoming. And really, it underscores sort of the complications behind this. So as you were just mentioning there, India is the chair of BRICS in 2026. And a lot of the concern right now is that we haven't really heard any definitive statement against the war in Iran, unlike what we did see back in July of 2025. Which was a pretty swift condemnation of what we saw from the U.S. and Israeli strikes. And that was a comment coming from the BRICS group condemning it. And back then, Brazil was actually the chair of BRICS. And so the concern here is what then is the role of BRICS? We should mention that BRICS is not meant to be a grouping that is brought together because of ideological similarities or even political alignment. As you can see there, there's quite a disparity of countries here. But still, if in fact this is emerging and developing economies that want to have some sort of assertive role on the global stage, if they cannot speak out against some of these defining moments like we are seeing in the Middle East, what then is their purpose and is their role? And we should note, it was only a few years ago that BRICS was just 5 members. It doubled in size now. And so a lot of the members really do sit on a few different sides when it comes to some of these geopolitical crises. And so, yes, it's becoming quite a bit of a pressure point that Narendra Modi now, as the chair of the 2026 BRICS, is facing behind the scenes.
Yeah, and Jen, I'm curious to hear where South Africa stands in all of this. Obviously, some political issues with the U.S. What has been the official stance towards the war in Iran?
So what we heard from President Ramaphosa early on was that he condemned what he did see early on and actually said it was a violation of Article 51 of the UN Charter. And we did hear from a spokesperson from the Foreign Ministry who did say that there are ongoing talks about potentially South Africa supporting a possible BRICS statement. But still, South Africa sits in a pretty difficult situation right now. South Africa has a long history with Iran. That complicates it. Not only that, earlier this year, South Africa had come under fire yet again by the U.S. administration for what the U.S. saw was South Africa's involvement in some of the naval drill exercises that we saw here south of where I am with Iran participating. And of course, you have the added element of the U.S. And South Africa being at odds. We talked about how we have some reporting about how potentially South Africa has been uninvited from G7 meetings that are happening later this year because of some of the concerns coming from Washington. So quite a lot of concern for South Africa as it sits here and its own position on the current developments in the Middle East.
Jen, thank you so much. Jennifer Zabazaja, our Chief Africa Correspondent in Johannesburg. And coming up, shipping through the Strait of Hormuz remains under intense pressure as the war disrupts the critical trade route. We discuss the risks ahead with Salim Khan, Chief Data and Analytics Officer at Polestar Global. This is Bloomberg.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump extends his deadline for Iran to reach a deal again, while repeating his claim that talks with Tehran are ongoing. But market optimism seems to be fading as Israel and Iran continue with strikes. Asian stocks drop for a second day and oil bouncing from earlier losses. And Fed officials express growing anxiety over the economic outlook in the U.S. and for energy importing countries due to the war in the Middle East, with the OECD saying it is hobbling the global economy. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. TGIF, everybody. But again, looking back, the war has been going on for almost a month. It marks almost 28 days, well, full 29 days tomorrow since those initial military operations were launched. And what a month it has been. The latest being, of course, more headlines coming through from the White House suggesting that negotiations are underway and pushing back that deadline to reach a deal by another 10 days to April the 6th. So in reaction to that, initially you saw a bit of a bounce in global equities and futures. But in the last couple of hours or so, some of that optimism has been taken out. Still, we speak about the ongoing military operations that are continuing, strikes and counterstrikes from Iran overnight too. So that's still going on very much in the background. The Asia Pacific, the handover somewhat muted, down 0.1%. S&P futures up 0.6%, though we did have a very weak close yesterday for Wall Street, the worst close actually we've seen since the inception of this war. And then Brent moving higher. At one point we drifted lower to around $103 a barrel, but up again, so we're up about $3-4 on the session, and now trading sideways at around 107.40. So still the significant amount of premium being priced into oil markets here, and we're still speaking about the effective closure of the Strait of Hormuz. We'll discuss that with our next guest. 10-year yield sitting at 4.42. Not a lot of movement today, but of course, over the course of this war, we are up about 40-50 basis points, and the market is now pricing interest rate hikes out of the Fed for this year, about 15 basis points worth of rate hikes priced in for 2026. Right. With that, let's also check in on how markets in Asia are faring. Winnie Su is in our Hong Kong studio. Winnie, I've just been sort of giving the summary of some of the handover here that we've got, but a bit of cautiousness prevailing, I would say, as we head into the weekend.
Yes, exactly, Jomana. Sentiment remains very fragile, as you mentioned, headed into this weekend, because now with this postpone of deadline, some say that we basically avoided the worst case scenario, while others see this just as an extension of uncertainty. And hence you're looking at MXAP here down almost 0.2%. Now, just to put things into context, we're looking at 4 weeks of declines already for the MXAP, and that is the longest of such streaks since November 2022. And for the month of March, we are looking at the downside of about 10% on MXAP versus 6% decline for the S&P. And leading losses today, you can see pretty much all in the red, with the Hang Seng actually seeing a bit of a green. But that's also coming after 2 days of sharp declines as well. Now you flip the board and take a look at how we are looking at for Japanese assets. Here on the board, you can see that actually, when it comes to the cross-asset space, we are looking at the Japanese yen still pretty much in focus here, strengthening just 0.1%, and that's coming after the finance minister warning that the government may take bold actions given the weakness in the currency. Right now, just trading slightly below that 160 level against the dollar, which is where we saw previous interventions. And when it comes to the yield space, still seeing yields coming up with the 2-year yield up 3 basis points to its highest since 1995 on those inflationary concerns and bets that the Bank of Japan might have to move earlier than later, and a rate hike to come in April. Back to you, Jomana.
Winnie, thanks so much. Winnie Su in Hong Kong. Now, shipping through the Strait of Hormuz remains under intense pressure as the war disrupts one of the world's most critical trade routes. Iran is now considering introducing tolls for safe passage through the strait, tightening its grip on a key global choke point, while the U.S. prepares to roll out an insurance program to insure vessels back into the waterway. Now, U.S. Secretary of State Marco Rubio says the route could reopen quickly if threats to shipping stop.
It can be open tomorrow if Iran stops threatening global shipping, which is an outrage and a violation of international law for all these countries that care about international law. They should be doing something about it.
Joining us now to discuss is Salim Khan, Chief Data and Analytics Officer at Polestar Global. Really good to have you with us. Let me start off by asking you whether you think this new insurance mechanism that the U.S. is introducing is going to move the needle on ships passing through the strait.
Yeah, the new insurance mechanism could potentially provide a new backstop for vessels to potentially move through the Strait of Hormuz. Obviously, war risk insurance has pretty much halted or increased by nearly 1,000% since the start of the conflict. And so introducing this new war risk insurance and insurance capability, $20 billion backstop that the U.S. is introducing, could potentially open up the strait. The other piece of this puzzle is also the question around naval escorts. So will the U.S. Navy and other navies potentially escort vessels that are also insured by this new insurance scheme?
Can I just ask how technically feasible that is? I mean, at one point, the strait is literally only 30 miles wide. How impactful is the naval escort program actually going to be? And could you be also exposing the escorts to the risk of explosions and mines on the strait?
Yeah. Absolutely. I mean, it's a very tenuous situation. It's about a 21-mile, stretch there between the border, therefore the Strait of Hormuz. You potentially have the smaller boats that could be mined coming in to hit U.S. naval vessels. Any vessel trying to pass through that has not reached some sort of negotiation or agreement with Iran could potentially be up for being hit by a drone or a rocket attack. It is, from a physical standpoint, a bit unfeasible, right? You literally have two lanes, one lane in, one lane out. It's a 21-mile stretch that you have to go through. And if you're a large VLCC, very large crude container, you steam at about 10 knots, which is about 15 miles per hour or 20 kilometers per hour. And so you're essentially a sitting duck. You're moving quite slowly through that strait.
And I know it's difficult to say at this point. So if you don't have information, that's fine. But do we understand whether the strait is actually mined already? Do we have that information?
We don't know for sure whether it's mined. We do know, though, that there have been a number of attacks in that area. We've tracked 28 distinct incidents in the Persian Gulf involving everything from vessels being sunk by the IRGC to tankers being set ablaze by the IRGC. And more critically, I should mention, a dozen merchant mariners have been killed. So one big thing we have to remember is that there are about 20,000 merchant mariners that are trapped within the Persian Gulf right now. They cannot leave because of this. But we don't know of any specific mines in the area, but we do know that the IRGC is coordinating attacks, and they seem to cluster right around the Strait of Hormuz, the entry and the exit of the strait.
Yeah, and Salim, let me just ask you something else. It's not just the threat of being harassed or attacked, but there are other maritime threats as well. And we've reported on signal jamming that's been taking place too. What does your own data suggest?
Yeah, we're seeing a number of different techniques being used here, different techniques, but there's three main behaviors that we're seeing. Number one is GPS spoofing, which is where a ship will kind of deliberately falsify its position. So that's number one, and that's really more a deliberate attempt. The second sort of behavior that we're seeing is signal jamming. That's where navigation systems are disrupted by high-frequency radio signals, typically used in missile defense systems. So these missile defense systems can not only interfere with the automatic identification system, the GPS system on these vessels, it could also interfere with everything from an internet-connected toaster all the way through to these vessels' navigation system. And so those are two items we're seeing. The last item we're seeing here from a vessel positioning standpoint is that some vessels are actually turning off their transponders, their AIS transponders completely. This is a very dangerous scenario for vessels because they could be mistaken for potentially being malicious actors by the U.S. Navy and others that are, having bases there in the Gulf area. You could potentially be attacked if you turn off your transponder. So those are the three main behaviors that we're seeing right now.
Yeah, and yet there are a few vessels and a few ships that are managing to make it through. What do we understand about the nature of those vessels and the types of security arrangements that they would have agreed prior to attempting the transit?
Yeah, so what we're seeing, it's really, I would call it a sort of a tale of two risk appetites. We're seeing Western flagged tonnage or vessels essentially clearing out of the region, but Iranian, Chinese, Indian-linked vessels are still threading the needle through the Strait of Hormuz. And the really concerning part here is these ships are using digital disguises. Every vessel broadcasts its identity through a system called AIS, which I mentioned earlier, the Automatic Identification System. Think of this as the ship's passport. What we're seeing now is essentially forged passports at sea. These vessels are changing their destination fields mid-voyage to broadcast things like China owner, effectively signaling to the IRGC that they are friendly and they should be let through. We actually verified this just today. There's a tanker called the Bright Gold, which is doing exactly this right now as it transits through the Gulf. So we are seeing some countries have sort of negotiated deals with Iran and are able to safely transit through.
So interesting. Salim, thank you so much for your time and also for staying up late for us. I know it's late over there in New York. Salim Khan, Chief Data and Analytics Officer at Polestar Global. Well, coming up, we'll also be speaking to Ayman Goma, a U.S. Joint Special Operations veteran, as the U.S. considers sending more ground troops to the Middle East. That's next. This is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Dubai. Well, the Pentagon is weighing sending 10,000 more ground troops to the Middle East, according to the Wall Street Journal. It comes as President Trump paused strikes on Iran's energy infrastructure for 10 more days, giving more time for peace talks. Meantime, NATO Secretary General Mark Rutte says members should move away from their overdependence on the U.S.
For too long, European allies and Canada were over-reliant on US military might. We did not take enough responsibility for our own security. But there has been a real shift in mindset, a collective recognition of our changed security environment.
Happy to say that Ayman Gumara, a U.S. Joint Special Operations veteran and founder and CEO of Acacia Innovations Technology, joins me right now. Really good to have you with us on the show. We had been reporting not just that extra Marine expeditionary units are being deployed to the region, but also specifically that Marines from the 82nd Airborne Division are also being deployed. Can you describe to us what that division actually does?
Good morning, Jumana. It's good to be with you this morning. So basically, the 82nd Airborne Division is not a Marine unit. A lot of people mistake that with like normal Marines. The 82nd Airborne Division is an Army unit. It's an entire division that has about three. I'm not going to get in a lot of specific details for sensitivity, but it does have 3 combat ready combat brigades. Every combat brigade is about 5,000 to 6,000 soldiers. It's light infantry. It's basically designed for quick global response force. They usually, when they have an issue, like they need somebody to deploy quickly, they deploy the 82nd Airborne Division. Usually it's not the entire division deploys. Usually they go with a combat brigade team. The last time they deployed the entire division was Desert Storm, Desert Shield in 1990-91. Other than that, they usually deploy a combat brigade. It's kind of like it bridges the gap between special forces, small special forces teams, and larger follow-on forces. So quick reaction to get troops on the ground between special forces and to prepare for larger forces to deploy.
Okay, so thank you for spelling it out for us. And the fact that there are reports that they are being deployed right now to the Middle East region suggests that the U.S. are looking for a quick and faster mobilization of forces, to your point. Am I reading that correctly?
Correct. And usually it's in preparation for larger deployment. So if they do deploy the 82nd will not be the only unit deploying. Usually the 82nd will be come in, and then after that, they'll have larger units. The 82nd is designed to seize airfields, terrains, airports, islands, but it's not designed to take over a country.
Okay, so what do the current movements indicate about what could likely happen in the next few days?
So right now, I don't believe the 82nd have moved. I think they are preparing to move. So usually the 82nd is used for deterrent. When the president or the Secretary of Defense, right now the Secretary of War, declare that the 82nd is getting ready, usually it's a deterrent. It shows the other side, the enemy, that the U.S. is taking this seriously. And there is always a brigade on readiness, so like an alert. So they have 3 combat brigades. One of them is always on alert. That's 12 months a year. That's every day of the year. There is a brigade on alert. And from notification to that brigade being on the ground anywhere on the globe is hours, not days.
Okay. Are there any logistics considerations that you need to bear in mind when thinking about the deployment of this airborne unit?
Yeah, obviously, of course. So the division itself, it has its own strategic air assets. So if you're going to deploy like a large amount of number of soldiers, you're going to have a lot of air assets. However, the 82nd is self-sufficient, so they have from the cook to the guy who puts up a tent to the division commander, everybody's airborne qualified. So everybody basically can parachute. So they can leave in, the U.S. leave in North Carolina, that's where they're based out of, to go somewhere in the world, and they can actually parachute all their deployed soldiers.
And maybe we're going too much into the weeds here, but I am interested to hear the distinction between what you would classify as a brigade versus what you would call a division.
So a division consists of usually 3 to 4 brigades. So every brigade will be about 5 to 6 soldiers, 5 to 6,000 soldiers. And those brigades, when you combine them together, that will make a division. A division will be a lot larger. and a division headquarter can manage and operate more than one brigade. So a brigade will take, let's say, a brigade will take an island where a division will take 3-4 islands, but each brigade will take an island by itself.
Okay, so interesting. The context, very important, given all of the deployment news that we've been reporting on over the course of the last week and heading into a crucial weekend. U.S. Joint Special Operations veteran Ayman Goma, thank you so much. And coming up, Ukrainian President Volodymyr Zelensky has kicked off a surprise visit to the Gulf region. More details next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Welcome back to Horizons Middle East and Africa. I'm Jumana Persacci in Dubai. South Africa's central bank has held interest rates steady, but warned hikes may be needed if the Iran war drags on. The benchmark rate was kept at 6.75%, with policymakers raising their inflation forecast as oil prices surge. Officials say prolonged conflict could push borrowing costs higher as the country, which imports all its oil, faces growing inflation risks from rising energy prices. And Ukrainian President Volodymyr Zelensky has kicked off a surprise visit to the Gulf region as he seeks to offer his nation's anti-drone expertise. In exchange, he's seeking support in getting supplies of U.S.-made missiles, and there was some footage of him arriving to Saudi Arabia yesterday and being received there. And I believe this is the first world leader to make a trip to the Gulf since the beginning of this war. So quite a notable development there. And you've got to think that on the table, one of the subjects that they're going to be talking about is going to be the quid pro quo, perhaps, of them, the Ukrainians, providing some of their expertise in drone interceptions. They have a lot of expertise in intercepting some of those Shahed drones because they had been launched at them throughout the course of the war with Russia. So for more, I'm joined by our Russia economy and government team leader, Tony Halpin. So Tony, you know, the trip comes as Kyiv is struggling to get hold of U.S. weapons. That's the backdrop to all of this. What is Zelensky looking to achieve?
Well, I mean, two things, essentially. As you say, the concern in Ukraine is that the intensity of the war in the Middle East and the fact that so many regional nations are coming under missile and drone attack, that's putting pressure on demand for air defense missiles, and Kyiv is worried that it will simply lose out to other countries and be more exposed to Russian attack. At the same time, President Zelensky is making the point that, look, the country that has the greatest expertise in dealing with these Shahid-style drones is, in fact, Ukraine, which has been fighting them in Russia for a long time. And it has expertise to share, and in return, it may be able to get more access to supplies of air defense missiles. So that's essentially his message now as he goes to the Middle East.
Yeah, I mean, his first stop is in Saudi Arabia. What did Zelensky have to say? What did he have to offer to the kingdom?
Well, precisely that, really. He was making the point that there are already hundreds of Ukrainian specialists in the Middle East helping Gulf nations like Saudi Arabia and others to defend against these drone and missile attacks. And he's looking for ways really to shore up diplomatic support for Ukraine as well, because at the moment, talks to find a peace deal between Russia and Ukraine are simply sidelined. The US doesn't really have bandwidth to focus on this issue. And so Zelensky's taking advantage of that by trying to build up some diplomatic capital with important states in the region so that when they do eventually return to these talks, that there'll be more support for Ukraine's position. He's signed an air security deal, or is going to sign an air security deal with the Saudis, and he's going to other nations in the region as well.
Tony, thank you so much. Bloomberg's Tony Halpin. Well, the war has been going on for a month. I'm going to leave you with a snapshot of how major financial indicators have done throughout the course of this war. Starting with global equities, you can see a bigger dip for Asia Pacific and for emerging markets. Switching over some of the local markets as well. This has been the performance. It's been going on for a month now, and you can see that the Tadawul is the relative outperformer here, up 3.6%. Dubai down 15%, and then the last one, oil, no surprise, significantly higher alongside gas prices. Gold has not glittered throughout the course of this war. All right, that's it for Horizons Middle East and Africa. I'm Joanna Versace in Dubai.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Vonnie Quinn with your top stories. The U.S. president says Iran has an extra 10 days now to reopen the Strait of Hormuz. European and U.S. futures extend gains. Oil declines. Meanwhile, the Pentagon is reported to be considering sending an extra 10,000 troops to the Middle East. Plus, Bloomberg understands that Pernod Ricard is exploring a potential acquisition of the owner of Jack Daniels. Let's take a look at these markets then, because sure, it's a little bit lower when it comes to oil, but we are still talking about nearly $108 a barrel for Brent and over 94 for WTI. That is not $100 a barrel. That's an extra premium of $8 a barrel right now. So yesterday being the worst day since the beginning of the war for stocks because of the oil increase is getting reflected again in today's trade. You can see the 10-year yield also much higher from this time yesterday morning. We're at 442.78. We're seeing that across the world. Japan yields have just blown out at this point. And Treasury market depth is actually really suffering. Macquarie is talking about if this war extends till June and the Strait is closed until June, we could be looking at $200 a barrel oil. And really, forecasts are all over the place. Even Federal Reserve governors have come out with a spectrum of notions as to what the Fed should do and should be looking at. If you look at futures, though, we might be in for a little bit of relief today, with futures in Europe and in the United States pointed higher. Gold also higher as well, which maybe should give us a little pause given the way that's been trading recently. All right, other risk events on the table today. 7 a.m. UK time, we get UK retail sales. We're expecting those to drop pretty precipitously. 9 a.m. UK time, ECB's 1-year and 3-year inflation expectations come out. And then at 9:30 p.m. UK time, we'll be watching out for President Trump. He's giving a special address at the FII Priority Miami Summit. The biggest monthly sell-off in global stocks since 2022 has eased after President Trump gave Iran more time to reopen the Strait of Hormuz. Let's see how markets are faring now across Asia and beyond with Winnie Su in Hong Kong. Winnie.
Yeah, morning, Bonnie. As you just mentioned, sentiment remains very weak as we head into this weekend because the postpone of deadline, essentially some people see that as us avoiding the worst case scenario, while others say that it's pretty much just an extension of uncertainty. And hence you're looking at MXAP here down 0.4%. And just to put things into context, we are down about 4 weeks already, and that is the longest of such streak since November 2022. And when it comes to the monthly decline, we're looking at about 10% down in the MXAP versus 6% decline in the S&P. So still lots of weakness when it comes to Asian stocks on that front. Now you flip aboard cross-asset, we are also looking very closely at the Japanese yen because we are seeing a bit of a strengthening for the yen right here earlier today after the finance minister warned that the Japanese government may come up with some bold actions just in face of this weakness of the Japanese yen. And we are looking at the yen now trading 159.6 against the dollar, just slightly lower than that 160 level where we saw more government intervention previously. Now you also flip aboard and take a look at what's going on in the bond space, because still that next round of regional bond sell-off, we're looking at that in Japan, Australia, New Zealand, and also even South Korea. For the Japanese bond here, 2-year yield up about 3 basis points to the highest since 1995. And when it comes to 30-year yield, also up to about 18 basis points. That is really coming after these inflationary concerns and potentially the Bank of Japan having to raise rates earlier than later, expecting a rate hike in April for now. Back to you, Vonnie.
All right, Winnie, thank you so much. Winnie Su there in Hong Kong. Oil falling a little bit now after President Trump decided to once again push back that deadline for Iran to make a deal or face more attacks on its energy sites. The Wall Street Journal reporting that Tehran had not sought a pause in strikes. The president spoke to Fox News earlier.
I gave them a 10-day period. They asked for 7. You're going to say, oh, Trump's a terrible negotiator. They asked for 7, and I said, I'm going to give you 10. because they gave me ships. We talked about the 8 ships, the president that I talked about the other day. But they asked for 7, and I gave them 10. You got 10 days, and they were very thankful about that.
Let's bring in Bloomberg's Deputy Washington Bureau Chief, Laura Davison. Laura, the extension does allow more time for talks, but do we know if they're even happening or who's even talking to whom?
Yes, the Trump is now, this is essentially the third deadline he's given, each one successively longer to allow Iran to engage. Where we are right now is we have, Trump and the Iranians are both speaking publicly, but not necessarily directly to each other. There are mediators involved, both in Pakistan and Egypt, but it's unclear that there are any sort of, direct negotiations or really even substantive negotiations happening. Trump has continued to insist that Iran wants to sit down and wants to make a deal, where Iran has continued to at least publicly say that is not something that they are interested in. Both sides have put out some of their list of demands. They're very far apart. It's clear, both in sort of where the public rhetoric is, but also in terms of what we've seen, of Trump giving longer and longer deadlines here, that this is not necessarily something that's going to come to a quick resolution. On the backdrop of all of this, too, is we have the U.S. Preparing more troop deployments to the Middle East. There have been, several announcements of about 5,000 Marines, another 2,000 or so paratroopers. Then plus the Wall Street Journal just reported that the White House the Pentagon rather, is considering sending another 10,000 ground troops to the region. So you have both military escalation while there are sort of nebulous talks of a ceasefire happening.
Well, then, the Treasury Secretary, Scott Bessent, also saying that shipping insurance program, Laura, through the Strait of Hormuz will begin soon. I mean, it was announced, at the very beginning of this month. But the president seems adamant he doesn't even need it.
Yes, this has been another sort of confusing angle here in that, the White House has announced that it would back these financial insurance programs for ships. A lot of shipping companies, however, said it's not so much the lack of insurance that's an issue, it's a safety issue, that they can't send their crews and ships in there and ensure that they'll have safe passages as Iran continues to control the strait. This is Trump has sort of had more bombastic language about all of this and said that, if troops are not able to get, or if ships are not able to get through, that the U.S. will help them. He's sought on help from allies. Allies have essentially rebuffed all of those requests, and now it's really the U.S. alone, though it's not clear at all, what Trump's action plan might be here. This is as Iran is putting a lot more, sort of a process in place for allowing certain ships to go through. They're, asking for payment for some of these and asking for detailed cargo lists, crew lists. And so essentially certain ships that Iran has decided can pass, can go, whereas everyone else is sort of out of luck.
Yeah, absolutely. Laura, thank you so much. That's Bloomberg's Deputy Washington Bureau Chief, Laura Davison. Lawmakers in Iran are calling for the war to continue until the enemy is, quote, forced to regret its actions. This according to the semi-official Iranian Students News Agency. Tehran and Israel are showing no signs of let up in the conflict as several waves of strikes between the two nations continue. Joining me now is Bloomberg Horizons anchor Jumana Bersecci. So, Jumana, it really does seem like Iran is not inclined to reach a deal. What's the readout in the region?
Yeah, well, the rhetoric that's coming through is still rhetoric of defiance. They're not showing any inkling that they want to capitulate at any point soon. And actually, the Iranian Foreign Minister, Abbas Araghchi, was giving an interview on local Iranian TV, obviously. And he said that there had been no direct or indirect negotiations, but that some messages have been passed through to them through, as we understand, Pakistan. And we had reported on this earlier in the week that the U.S. had put forward this 15-point proposal to Iran via Pakistan as mediator. And in return, a couple of days later, Iran came back with their own counter terms, including stipulating that they would like to retain sovereignty over the Strait of Hormuz. Obviously, that's a non-starter for the U.S. and Gulf allies, that they would like war reparations, and they would like security guarantees that the U.S. would not attack Iran once again. So the two sides still very, very far apart. And as of now, there has not been confirmation that any such direct meeting is going to be taken place. And we know that Pakistan have put themselves forward as a potential location for the two sides to meet. There has not been confirmation that this meeting is going ahead. That being said, President Trump did, as Laura was just describing, announce that 10-day postponement of potential strikes on key Iranian energy infrastructure, which would
no doubt come as a relief to the region. But yet, lots of skepticism here about whether this diplomatic window is actually going to lead to an off-ramp or whether it is just a time-buying exercise at this point.
Yeah, absolutely. Meanwhile, we are hearing of a few more ships getting through. So this time it's Malaysia. Malaysia's Prime Minister saying Iran is allowing some of its ships through the Strait of Hormuz. Can we continue to expect these sort of one-off waivers by Iran, if you like?
And that seems to be the pattern that's emerging, Vonnie. To your point, the Iranian side are maintaining that the strait is not closed. It's actually open, they say, to countries that are non-hostile. And there have been a trickle of vessels that have managed to make it through. From our own reporting, we actually reported that there's been a payment of up to $2 million per voyage that the Iranians have been asking for in order to secure a safe transit of some of these vessels going through. But we understand overnight that Malaysia has secured the safe passage of some of their own vessels, and actually the Prime Minister there thanked the Iranian president for allowing that to happen. As we speak now, it appears as though there are 2 Chinese-owned vessels that are making their way through the Strait of Hormuz as well. But all of this to say that the strait is effectively shut, but it's also still being effectively administered and controlled by Iran. Yesterday, we were talking about them putting together a proposal to actually start charging transit fees for vessels looking to pass through. And as I was just describing earlier, this is a position that would not be acceptable to pretty much all nations around the world. This is a natural geographic strait, and it actually contravenes, I should say, international law that one country should have sovereignty over the passage of such a key amount of energy supplies to the rest of the world. And so what is emerging now is that the strait has become a key sticking point in these discussions, as opposed to where we were even before the war started, when it wasn't closed. So it's just an additional dimension for negotiators and for the U.S. to think about in terms of what they want to achieve with this war.
And it's definitely moving these markets. All right, Jumana, thank you so much. That is Bloomberg's Jumana Bercecci. Fed officials are voicing concerns over the impact of the Iran war, saying inflation could now be a bigger concern than employment. Let's hear from the Fed's Lisa Cook, Michael Barr and Philip Jefferson.
I would argue that the inflation risk is greater right now as a result of the Iran war. The balance of risk has shifted more to inflation. With respect to the labor market, I see it as being in imbalance, but precariously so.
Our current policy stance puts us in a good place to hold steady while we evaluate incoming data, the evolving forecast, and the balance of risks.
A short period of disruption is unlikely to have a noticeable effect on the economy beyond a quarter or two. A sustained energy price shock, however, could have material implications.
Let's bring in Ven Ram, cross-asset strategist at Bloomberg Live. So, Ven, I just want to ask you about the spectrum of reactions at the Fed. Is it fair to say that there's any kind of general bias even towards holding for the moment until we get more data? Or are there very different reactions in terms of whether the Fed should be thinking of maybe even hiking?
I think that the balance of risks, Vonnie, points to the Fed being in a position where they have to hike, where they may not have a choice. Of course, the Fed started out the year with pointing out to one rate cut, but that is now all but priced out by the markets. The markets are pricing in some 15 basis points of policy tightening by the end of the year. But I think that that understates the risks of lying out there in terms of inflation. We saw core PCE already averaging well above the Fed's target already before the war started. So the additional inflationary impulse from the war has not been factored in fully by the markets. And I think that that 15 basis points of tightening that the markets are pricing in is likely to increase in the coming weeks, probably 25, 50 basis points even by the end of the year, because we do know that the disruption to oil supplies is huge and it's going to take months to be restored, even assuming that there is an imminent imminent stop to the war. So I think that the risks are definitely skewed to the higher side on inflation and therefore Fed rates as well.
Then we had a few weak auctions this week, and treasuries have been sliding as well. A bit of a chicken and egg situation, right? But it is concerning for the treasury market, which apparently is seeing less depth now as well. When do policymakers need to get really concerned about the US treasury market?
Well, absolutely. In terms of, investors want an additional inflation risk premium, and that is reverberating through the markets. Because if you look at where the 10-year treasuries are priced, they are not priced for even before the war. I think they were kind of underpricing the risks, and I think that now that the war has begun and is continuing, I think that the inflation risks are underpriced, and I think that the 10-year treasuries are going to go much higher than here. And of course, we have seen the yield curve flatten a bit, but not to the extent that we have seen in Europe and elsewhere. And I think that the flattening story has got further to go, especially in the context of US and in the context of treasuries.
Can I ask you about the BOE? Because the OECD is now saying that the UK economy is most at risk of all the G20 countries of inflationary impacts from this war. Meanwhile, even though Andrew Bailey was so hawkish the other week, BOE policymakers are now saying there won't be any dramatic rate hikes then. Does all that add up?
Well, it doesn't quite add up because, I think that what we have heard from the doves on the BOE is that, look, this is a situation that is dissimilar to 2022 when Russia invaded Ukraine. Because, the economy is at a much weaker point, the labor market is much more brittle, and therefore they are thinking that the bargaining power of labor bargaining power for higher wages is much more muted than it was in 2022, and therefore the pass-through or the second-round effects of inflation in the economy are going to be much more subdued. And I'm not too sure that's correct, because if you look at what the Riksbank was saying earlier this week, they were saying that, look, it is kind of dangerous to assume that the second-round inflationary effects are going to be milder than previously is unfounded. So I think, there is no question that the UK economy is much weaker. But I think that, we need to keep in mind that the UK economy hasn't seen 2% inflation in a long time, for the better part of 5 years now. So to assume that, the risks are going to be dissipating pretty soon is kind of unfounded. And I would think that the markets are right, therefore, in pricing in 3 rate hikes from the Bank of England by the end of this year.
Wow, Ven, so much market action to come for the rest of the year. Thank you so much, Ven Ram, cross-asset strategist at Bloomberg M Live. Coming up, Algeria is ramping up LNG supply to Spain as the Iran war causes global gas concerns. That's next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Algeria will increase gas supplies to Spain as global energy markets face heightened instability linked to the war in Iran. The North African country is already Spain's main gas supplier, but will now operate the main pipeline between them at close to full capacity. Let's bring in Bloomberg's European energy and gas reporter Priscilla Azevedo Roca. Priscilla, what can we tell about the turbulence in the global gas markets by this action, and also the fact that Giorgia Meloni also visited Algiers this week? They're all looking for Algerian gas now.
Well, good morning, Bonnie. I think we can say that this deal only shows that European countries, they're looking for alternatives of supplies after everything that after the turmoil in the Middle East, right? You suddenly have gas producers such as Qatar, the UAE, which are key for European supplies. And the supply is no longer available in the market because of conflict. And suddenly you start looking as a policymaker, what can I do to maximize what I can get from my contracts, from my supplies? And let's remember that Spain as well has a big liquefied natural gas capacity. So imported a lot of seaborne supply, not only for Qatar, but Spain was one of the main recipients in Europe of Russian gas, which is being phased out by the European Commission. So in a situation like this, where global markets are tight, you need to look for alternatives.
Yeah, and the Spanish Prime Minister, of course, was very against Donald Trump and all of this. So you have to wonder if this wasn't a little bit behind it. Obviously, the resetting of relations with Algeria, too. So it's obviously a crucial time for supply. So what do we know about the decision by Australia to cut production at several LNG sites because of disasters, really?
Yes, the decision is a precaution because the cyclone is going through the country, and that's really the protocol, what you do with LNG operations. LNG operations, they are complex, they're complicated, and it's very risky to live personnel in there. So whenever you have a risk like the cyclone that is lashing through the coast, straight through those plants, you have to do this, you have to close. But that implies that there is even less supply in the market available at the moment. It comes at a very tricky time for global balances, especially for Asian countries that rely on the supply. Asian countries, they were also very reliant on offtakes from Qatar, and now they have the impact from there. So we might see prices rising in the global markets as a consequence of this.
Yeah, I wanted to ask you about that because we're seeing, the Dutch front-month contract trading at around 55. Most recently, it was above 70, so we're well off our highs. But back in the Ukraine war time, at the beginning of Russia's invasion, we got to multiples of that, really. So where does the price go from here? And is it possible to move supplies around the world? So, for example, U.S. natural gas is not that high at the moment.
Yes, that's right. So during at the peak of the Russia-Ukraine conflict, in the first year after the Nord Stream explosion, we've seen gas prices in Europe reaching 300 euros a megawatt hour. Now we are more than double. We're roughly 70% higher than where we were at the start of the war. But the interesting thing here is that the shape of the curve. Gas prices are rising more towards the end of the curve, prices for next year and the year after, which means that traders in Europe, they're pricing in longer-term supply disruptions from Qatar. And this will impact gas prices in the longer run. And it comes at a very, very tricky time for Europe because we're days away from starting the stockpiling season. It starts on the 1st of April. So European countries, they will have to look abroad for supplies to fill in the tanks ahead of next winter.
All right, Priscilla, we're going to continue to monitor that situation as shoulder season gets underway. That's Bloomberg's energy and gas reporter for Europe, Priscilla Azevedo Roca. Coming up, Ukraine's president goes on a surprise tour of the Gulf. Details next. This is Bloomberg.
you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back to Bloomberg Daybreak Europe. Some breaking news. The Senate has just passed a DHS funding bill. It's a major step towards ending the government partial shutdown. And of course, it comes as airports were snarled. It was absolute chaos at major U.S. airports in the last week. In particular, just now, the U.S. Senate passed a voice vote legislation early this morning to fund most of the Department of Homeland Security. That forges a path now to end that partial shutdown. Of course, it has to go through the House and also be signed by President Donald Trump. But it's an abrupt reversal for Republicans. And once again, it could help to unsnarl the chaos at some U.S. airports. Let's take a look at these markets now, because oil, while it is coming off its peak, it's still trading around $107 plus a barrel on Brent and $97 plus a barrel on WTI. Gold is higher. Again, a mixture of risk on and risk off trades today as the European session waits to get going, and of course a few hours before the US session. But we do have futures pointed higher after the worst day since the beginning of the war for stocks yesterday. Coming up, a turbulent month for oil traders as the Iran war drags on. We'll discuss that next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From London, this is Bloomberg Daybreak Europe. I'm Vonnie Quinn with your top stories. The US president says Iran has an extra 10 days to reopen the Strait of Hormuz. European and US futures extending gains, oil on the decline. Meanwhile, the Pentagon is reported to be considering sending an extra 10,000 troops to the Middle East. Plus, Bloomberg understands that Pernod Ricard is exploring a potential merger with the owner of Jack Daniels. And we also got some breaking news in the last few minutes that the Senate has actually passed in the last few minutes a vote that would potentially reopen the Department of Homeland Security on snarling, the chaos at airports and so on. It does have to go through the House and get signed by the president, but it's the passage now of something that was a major challenge to Republicans. We'll see if that gives a little lift to futures in the United States. They've already been showing that they're pointing to gains today, and this partially because oil is coming off. Still, though, we're at $107 a barrel on oil and $97 on WTI. As you can see, S&P futures, European futures higher. Gold also higher as that trade continues to really confound. S&P futures and Euro futures definitely higher because we had the worst day since the beginning of the war yesterday for stocks. The S&P was down 1.75%. So we are expecting a little reversal today. But of course, the president also giving an extra 10 days. April 6th is now your new deadline. Time now for your front page news. Starting with the Financial Times, whose headline says the Israeli military doubts the war will force the collapse of the Iranian regime. It says the prevailing view within the IDF is that the conflict has not been able to erode the regime's grip on power. The Wall Street Journal says the Pentagon is looking to send up to 10,000 additional ground troops to the Middle East. It says the move is to give President Trump more military options amid potentially ongoing peace efforts with Tehran. And France's Le Figaro leads on Ukraine, fearing it will become collateral damage in the war with Iran. It says President Zelensky is concerned his country will lose the Americans, the Europeans and their weapons all at once. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. Oil dropping just a little bit now after President Trump pushed back a deadline for striking Iran's energy, offering the market some near-term respite. Let's bring in Anthony DePaola, Bloomberg's Middle East energy markets reporter in Dubai. Oil traders beginning to maybe pull back just a tiny bit, Anthony, though we're still very, very elevated. I mean, at some point, it doesn't matter if the oil isn't getting through the strait. Prices have to go higher, right?
Good morning, Vonnie. Yeah, I think we're going to see oil continue to bounce around here because now we've got an even longer deadline, as it were, for potential additional attacks. And with that longer period of time, there's so many other things that can happen during that period in terms of initiatives, in terms of jawboning, talking down the market. So I think that's a lot of what's going on. I think there were a lot of that found that initial deadline at the start of this week for attacking Iran's energy infrastructure and power plants, a very hard deadline to meet, a very point of no return almost in the conflict, because that would really escalate things and bring in some Iranian retaliation against Gulf allies. So pushing that back gives more time for talks that the Iranians initially denied were taking place, but they've come back with their own counter proposals. Part of that includes control of the Strait of Hormuz, which is the real issue that we're dealing with now, which is that oil not getting through. We have seen some Iranian-linked vessels getting through with some oil, an increasing number, in fact, as well as the Iranians letting through other vessels, charging them a fee, a toll to get through the Strait of Hormuz to get some more oil back in the market. So we're seeing that trickle come through, but that's Iranian controlled. So the bulk of oil is still stuck in the Strait of Hormuz. We do have some workaround pipelines, but that's going through Saudi Arabia's Red Sea coast and to the UAE's port of Fujairah. But those are only a part of what had been going through the Strait of Hormuz before. So we're really lacking those volumes there. And it's not only crude oil, it's also a lot of the products. The Gulf has taken a lot of time over the last couple of years, investing billions of dollars to build up these export-oriented refineries to produce a lot of jet fuel, Euro-spec diesel to go into Europe and other countries. That's not coming out. So that's a big drag on the market. Diesel is that workhorse fuel for industry. And of course, we're talking a lot about airline prices going up because the jet fuel is simply not there and it costs a lot more. So we're having all these knock-on effects. The longer it goes, the more this will cost us. We've seen one analyst from Macquarie today saying that the longer this goes, we could see oil even at $200 a barrel. So the risks are on the upside as this goes on. There's potential for more damage to facilities from attacks and bombs. The longer those facilities stay off, the harder it is to bring them back up. So the longer this goes on, Vani, the harder the situation is to get back and bring those prices back down.
All right, Anthony, thank you so much. That is Bloomberg's Anthony De Paula there. A little good news for the French government. The French deficit came in for last year, 2025, at 5.1% of GDP. Now, that is better than the government goal, which had been 5.4%. So some good news for Sébastien Lecornu. And it beats the previous year by a considerable amount as well. The previous year's economic output was a deficit of 5.8%. So the deficit reduction then for last year narrowing to 5.1%. You'll remember all the turmoil in the French bond markets when it got a ratings downgrade and everyone just started to sell the country's bonds. Well, this will come as a little bit of a relief, particularly with the Iranian situation pushing up oil prices. The EU foreign policy chief has said it's important to find an off-ramp for the war in Iran, saying it's having devastating consequences for everyone. Speaking with Bloomberg at the G7 foreign ministers meeting in France, Kaja Kallas also said efforts are being made to reopen the Strait of Hormuz.
What we are discussing is that what we can do to keep the Strait of Hormuz open. And there, we have our own operations, but we are also discussing whether, there could be a joint coalition of the willing to really keep this the strait open. But right now, no naval vessels really standing to that.
U.S. Secretary of State Marco Rubio says it's in the G7 nations' interests to help reopen the Strait of Hormuz. The U.S. Secretary of State will hold talks with allies when he attends the G7 foreign ministers meeting in France today. As he left the U.S., Mr. Rubio said he expects G7 allies to help restore normal shipping lanes in the Gulf.
It can be open tomorrow if Iran stops threatening global shipping, which is an outrage and a violation of international law for all these countries that care about international law. They should be doing something about it.
Let's speak now with Bloomberg's Western government reporter, Richard Bravo. So, Richard, what kind of deliverables do you think Marco Rubio is going to try and come away with from the G7 foreign ministers meeting?
Hi. Well, as he said, he really does want to get allies on board with the American objectives in the Middle East. And from the European perspective, their biggest objective is to just get more information from the U.S. in terms of what exactly their strategy is, what the duration of this conflict will look like, and what exactly President Trump wants from them, because he's been really outspoken in his criticism of NATO allies, calling them cowards for not doing more. But as you heard Kaja Kallas say earlier, there haven't really been any specific asks in terms of what they want European navies to do in the Middle East. And France and Germany have said specifically that they will not use their military to go into the Strait of Hormuz while the conflict is ongoing, but they do have vessels in the Red Sea. But the interesting thing about this G7 is just the economic context in which it is happening. And we saw the OECD increase its inflation forecast yesterday, and Italy and Germany are both weighing cuts to their growth projections. So it's important to keep in mind that next week on Monday, we'll see the G7 finance and energy ministers along with central bankers meeting to go through just how this situation is playing out and what it means for the European economy.
It's kind of insane. It's been maybe 50 years since central bankers have gathered with finance ministers and foreign ministers for a meeting like that. So we'll see what happens. Richard, thank you so much. That's Richard Bravo, who leads Bloomberg's Western Europe government coverage. So just a few minutes ago, the U.S. Senate passed a DHS funding bill. It's a major step towards ending this partial shutdown that had seen complete chaos, particularly at airports, but also just bunged up the system. Now, it has to get passed by Congress, obviously, and signed by the president. But let's get more from Bloomberg's Deputy Washington Bureau Chief, Laura Davison. Laura, were we expecting this vote to pass? And what exactly has now been funded? Do we know?
This is one of those situations in Congress where there's nothing that happens for a long time and then very quickly something comes together. This is a proposal that's actually sort of been on the table for weeks, but was really precipitated by all of those airport delays we've seen play out over the past week or so, with people waiting in line for 5, 6, 7 hours waiting to get through TSA, the Transportation Security Agency checkpoints, as workers have called off work because they haven't been paid for about 5 weeks. So this bill would essentially extend government funding for most of the Department of Homeland Security, with the exception of ICE and Border Patrol, those sort of being the two most controversial pieces that will continue to be negotiated in Congress. I'll note this is just one step in a process. This bill needs to go to the House next, and then Donald Trump's desk for signature. So this is still something that is tenuous and could take several more days, if not a couple weeks.
Sure, yeah, and presumably it helped that Donald Trump called for paying the TSA agents yesterday. Laura, thank you for all that context. That's Bloomberg's Deputy Washington Bureau Chief, Laura Davison. Now to some other top stories we're following this morning. NATO's European allies and Canada both raised defence spending by 20% for a second straight year in 2025. The NATO estimates reveal the increase totaled $574 billion after yielding to the US president's demands and responding to escalating threats from Russia. NATO Secretary-General Mark Rutte says it reflects a shifting balance within the alliance.
For too long, European allies and Canada were over-reliant on US military might. We did not take enough responsibility for our own security. But there has been a real shift in mindset, a collective recognition of our changed security environment.
UK Prime Minister Keir Starmer has suggested he will not be bullied by President Trump as the Iran war frays the so-called special relationship. Starmer was speaking as Trump again criticised the Prime Minister, saying it was shocking that the UK didn't want to help in the war in Iran. Ukrainian President Volodymyr Zelensky is on a surprise visit to the Gulf region as he seeks to offer his nation's anti-drone expertise in exchange for defence support. Ukraine is expected to sign an air security deal with Riyadh in exchange for supplies of US-made missiles. Coming up, how the Iran war has divided BRICS nations and their competing interests. More on that next. This is Bloomberg.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question. I mean,
I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. I'm not here to say what I would and wouldn't do in the future. But the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. But that's where I'm at today.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now to some corporate news. Bloomberg understands that Pernod Ricard is exploring a potential acquisition of Brown-Forman, the owner of Jack Daniel's whiskey. Sources say the French beverage company has held some initial discussions with Brown-Forman about a potential combination. Both companies have each been looking at ways to strengthen their businesses as consumers drink less and switch to less expensive liquors. Anthropic has won a court order blocking a Trump administration ban on government use of its AI technology. A U.S. judge issued a preliminary injunction pausing the move, saying the rationale didn't appear to be tied to national security concerns. The order is on hold for 7 days to allow for an appeal as the case unfolds in federal court. Apple is planning to open Siri to rival AI assistants in a major shift to boost its artificial intelligence strategy. The move is expected with its next iOS update and would allow users to route Siri questions to third-party services such as Google's Gemini or Anthropic's Claude. The change is part of an attempt to turn around Apple's fortunes in AI, which it has lagged behind Silicon Valley peers. India, which currently holds the rotating BRICS chairmanship, is facing intense pressure to lead the divided bloc towards a unified response to the war in Iran. The group is deadlocked because its members, which now include both Iran and the UAE, are on opposing sides of the military conflict. Our chief Africa correspondent, Jennifer Zapazacha, joins us now from Johannesburg. Jen, you know, the BRICS were supposed to be a little bit of a counter to the G7. Are they as relevant as they have been in the past?
That's really the big question, Vonnie. And I think when you take a look at just that video of some of the leaders that make up now this expanded BRICS grouping, many people are wondering just what is it that this group stands for. And it really speaks to what it was that you were just speaking about. We haven't yet heard a definitive and firm stance from this group on the war in Iran. And that really is counter to what we did see last year in 2025, which was a pretty swift condemnation of some of the actions that we saw from U.S. and Israel, and specifically what the BRICS group had said, speaking out against some of those actions. And so many people are looking to the chairmanship of India and Prime Minister Narendra Modi this year as BRICS chair, and also this grouping, and wondering what it is that the group stands for. And in particular, if there isn't a definitive stance against the war in Iran, what is the credibility of this bloc? Now, we should point out that it was just a few years ago that the BRICS group went from just about 5 members, doubled in size. I remember covering that. But this group is not at all, they don't come together as part of a political or ideological grouping. They really align, as they say, because of emerging and developing economies. And yet we are seeing more and more pressure being put on them to take a stand, especially because of what we are seeing at the war in the Middle East. Though, as you were just mentioning there is a bit of a counter that the BRICS has gotten, especially from President Trump, in terms of, you know, what he has called an anti-U.S. bias from the BRICS grouping. And so really the question is, when will we get some sort of stance? And just given the members that now make up this BRICS grouping and the members that are now potentially involved in the Middle East conflict, what, if any, definitive stance will they take?
India has sort of written up basically a neutral kind of a draft. What is South Africa's response to that? Is it backing the neutral draft, or is it siding with Iran's rebuke of the U.S. and Israel?
South Africa sits in a unique position, Vonnie. If we just take a look at what we've heard from President Ramaphosa shortly after the attacks had begun, we actually did hear him say it was a violation of Article 51 of the UN Charter. We did also hear from the Department of International Relations and Cooperation saying that there were ongoing engagements underway to potentially seek some sort of BRICS consensus of a potential draft to come out. But we should also look at where South Africa sits in this overall conflict. South Africa has quite a long history with Iran dating back decades. That's one complication here. Not only that, President Ramaphosa is potentially looking at potentially higher energy costs if the blocks along the Strait of Hormuz continue to filter down into higher energy costs here in South Africa, considering this country is a net importer of refined products. And not just that, Pretoria here in South Africa and Washington have increasingly had a fractured relationship since President Trump came back into the White House. And so there's also that complication factored in here. And so you can almost see a bit of a cautious stance that we're seeing the South African government taking at this point in time. But still, the real question is, what is this BRICS grouping as a collective going to come out in consensus and speak to the actions that are happening in the Middle East? And then potentially we then see South Africa speaking separately about what are the potential implications for itself. We should also note that South Africa is reportedly being uninvited from the G7 meeting later this week off the back of France being alleged to have been persuaded by the U.S. So still a bit of animosity between these two nations, still a very important relationship for this country. So quite a lot of factors here as far as the story goes.
Yeah, a huge slap in the face, given that it's France that's hosting in particular, right, Jen? Jen, thank you so much. Yeah. Jennifer Zabazaja is Bloomberg's chief Africa correspondent. And I do want to mention, catch Jen in the latest episode of Next Africa. In this particular episode, Jen's looking at the continent's water security. You can stream Next Africa now on the Video Hub at Bloomberg.com/videos. Plenty more coming up. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
We have a coalition for them, but they should have been up here a long time ago. And you know, they're affected. The amazing thing is we don't need the Hormuz Strait. We don't need it. We don't need it at all. We have so much oil. Our country is not affected by this. We have twice the amount of oil as Saudi Arabia or Russia, and soon it'll be 3 times the amount.
President President Trump there speaking at a cabinet meeting, and he sounds very convinced that the U.S. doesn't need the Strait of Hormuz to be open or oil from that region whatsoever. And yet, if we take a look at oil, it's been rising, and that $100 a barrel does really seem to be support and resistance. Support for Brent, which is still above $108 a barrel, even after all of the efforts yesterday to calm the nerves of market participants, and resistance for WTI. But WTI is still above $94 a barrel. So, for one thing, maybe we do need some of that oil, or at least the global supply needs it. But for another thing, let's take a look at treasuries, because we're seeing a huge effect here on U.S. treasuries as well, right? So the full faith and credit of the U.S. government is literally at stake here. So when the president says we don't need the Strait, well, maybe we do. At the moment, dealers are holding a huge amount of treasuries. We had 3 exceedingly weak auctions this week in the U.S. in 2s, 5s and 7 years. And as you can see, it's all to do with treasury volatility. Also reports that breadth and depth in the Treasury market is really suffering at the moment because traders are moving to the sidelines. And if you take a look at this next chart that's illustrating how treasuries are reacting, you can see the flattening in the yield curve just continues, right? And the yield on 10-year treasuries moving up along with global sovereign debt. So maybe it's not just for the oil market that we do need the Strait of Hormuz. To access, search and save all of the Bloomberg Terminal charts used on this show and across Bloomberg TV, Terminal subscribers can now use the brand new function CHRT TV Go. So there are some more risk events on your horizon today. At 7 a.m. UK time, you get UK retail sales. We are looking for some disappointing figures, some deterioration from the previous month's figures. At 9 a.m. UK time, we also get ECB 1- and 3-year inflation expectations. They'll be watched most closely and in the coming months as well. And then all the way tonight, 9:30 p.m. UK time, President Trump is giving a special address at the FII Priority Summit in Miami. We'll be looking for any comments, obviously, to do with the Iran war. So let's take a look at where markets stand now. We have Brent crude turned positive. It's up now at 108.11. Japan is one of those countries really suffering. It's a huge oil importer, basically imports all of its energy needs. And look at that 30-year yield, up 17 basis points. The yen is also very close to 160, and there's a huge expectation of a hike at the meeting in just a couple of weeks' time. The U.S. 10-year yield also higher, not though obviously by as much, at 442.98, creeping back up there though. If we take a look at U.S. futures and European futures, we were looking at a positive open, but we're coming down off those highs now, and gold is putting on some couple of percentage points once again. Do stay with us. The opening trade is coming up next. Lizzie and Tom will take you through the next couple of hours. This is Bloomberg.
A cidade estava sitiada.
Isso, ao começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Good morning. It's Friday, March 27th, and here's what's on the agenda. President Trump extends the energy attack pause again. Oil drops and the stock sell-off eases, and central bankers voice growing concern over the war's economic fallout.
Oil has actually turned higher, up 0.2%, closing in on $109 a barrel, above 108 right now, on question marks about what this time frame change means for President Trump and the Iranian reaction. European futures then pointing to modest gains of 0.3% after dropping more than 1% yesterday. Energy was a sector in positive territory yesterday. It was basic resources and tech that was under pressure for Europe. Today, though, modest upside being flagged by the futures. Japanese JGBs, look at the sell-off there, particularly on the 10s and the 30s. A pronounced sell-off in inflation risks for Japan and expectations that maybe the BOJ has to go earlier than some in the markets expect. Yields jumping almost 18 basis points higher on the 30-year at 370. The countdown to the opening trade starts right now.
Welcome to Friday, everybody. We're nearly at the weekend, but we are going towards the weekend with a bit of optimism, at least when it comes to the futures picture on both sides of the Atlantic. Tom, you mentioned that oil is just higher now on Brent. It's lower still on WTI, but it, of course, comes back to the geopolitics in the Middle East and President Trump extending his deadline for Iran to strike a deal with the US or face more attacks. Again, this is the second extension since Saturday's threat. And the market, it seems, futures, choosing to focus more on that than the Wall Street Journal's report that the Defense Department in the US is still considering sending as many as 10,000 troops to the Middle East on top of the thousands already in the region.
And both of those stories point to how this could play out in two very different directions. And that is the challenge for the markets, who should and still seem to be laser focused on the timeline. So push to April the 6th. Is that then a signal that this is a Trump administration determined to get some kind of deal? Or is it, in fact, a Trump administration that's giving itself time to build out those military assets, 10,000 additional troops on top of the 5,000 Marines and 1,000 of the 82nd Airborne that are in station and getting close to the Middle East? And those seem to be the two different directions that markets have to contend with. Is this a Trump administration buying itself time, or is this an administration determined, it seems, to try to give the Iranians some space, some time to come back with a deal that maybe the two sides can land on?
Yeah, and that's the military side. President Trump says that the talks are going well on the diplomatic side. It's not clear who the US is talking to. Trump claiming that Iranian negotiators asked for 7 days and he gave them 10. The Wall Street Journal reporting that the Iranians were still actually considering how to even proceed with the negotiations. And you had the Tasnim news agency out of Iran indicating that Tehran's still waiting for a response to its own conditions, including an end to a war on all fronts, which likely means Israel's parallel war on Hezbollah in Lebanon.
We have to focus on what's actually happening on the ground as well, and particularly, of course, on the Straits of Hormuz. The UAE coming out, and there are reports that the UAE is in discussions with other regional partners to put together a maritime force. once there is more stability in the region to open up the Straits of Hormuz. We've had reporting that the UAE, that the Saudis are closer to thinking about their own military action. But the news today from the UAE is they are considering being part of a maritime alliance to support the opening of the Straits of Hormuz. But when the conditions are right, we're not there yet. France is making similar moves as well. So we could get to a point where there is an international alliance to reopen, but that seems to be only coming if we can get a cease in terms of hostilities that would allow that to happen.
And indeed, US Treasury Secretary Scott Bessent saying that a US insurance program to try and boost shipping through the Strait of Hormuz is going to start soon. Trump saying that Iran's allowed 10 boats of oil to sail through the Strait as a goodwill gesture. We were wondering what that present was. This, it seems to be what it is. So we talked about the oil impact. Brent now at $108 a barrel, up 0.4%. But we've got to talk about the broader market reaction as well.
Yeah, so to your point, oil prices high, WTI now pushing higher as well. Macquarie putting out a note suggesting that if this conflict continues into June, you could be looking at $200 a barrel. That would be a record high, of course, for oil. That, the view from Macquarie in terms of projection into June. How do you trade this then? The markets for many have still seen, and equity markets, relatively resilient. Is it complacency? Is it resilience? Interestingly, in terms of some dynamics that's come through in the last few trading sessions, if you look at the 60-40 mix and that balance, that classic balance for your portfolio, the worst month since 2022 on these inflation concerns. So 60-40 is not working for you. And in terms of the other dynamic that's come through this week, interestingly, is through the week you've seen oil lower and equities lower at the same time. So oil is actually lower this week, equities lower as well. Of course, across the month, oil is still up more than 40%.
OK, well, we're looking at futures higher, as I say, on both sides of the Atlantic. We're up 0.4%, both for Eurostoxx 50 futures and S&P E-minis. It's always difficult positioning into the weekend because if history teaches us anything recently, it's that a lot can happen over the weekend. So do you want to be piling on risk going into it?
It's also worth noting what happened in tech yesterday. So some pressure on Mag 7, its worst month since October. You saw pressure on Meta, you saw pressure on Alphabet. Part of that was linked to this court case that found them liable for the mental health crisis for a young lady. Broad implications from that story, but also sentiment reduced in terms of the AI trade. So that is worth noting as well. Tech was under pressure. The Nasdaq 100 closed lower by 2.4% yesterday.
Now, in your market check, you flagged the long end of the JGB curve, higher yields, particularly on the 30 and 40 years, on this expectation of a hike, but also that coming back to Japan's exposure to the Middle East energy market. We've got to talk about central banks in general. We've had a lot of commentary over the past 24 hours, central bankers growing in concerns about the economic impact of the war. We had a raft of Fed speakers yesterday. I'll just call out a few of them. Lisa Cook saying that the inflation risk is greater with the labour market only precariously in balance. Michael Barr saying it's making sense to assess conditions. And Philip Jefferson saying he wants to monitor the higher costs if they get embedded in prices. But we also had that OECD outlook. They sharply increased their inflation forecast for major economies. And indeed, they say that Britain is going to suffer a bigger growth hit than any other G7 nation. Inflation picking up and rate cuts to be abandoned.
And to that point, BOE speakers yesterday seeming to diverge from what we're hearing from the ECB and Fed speakers generally. Interestingly, in terms of the ECB, just worth noting that Christine Lagarde has been speaking to The Economist. This line stood out to me. This quote to The Economist from Christine Lagarde: "We are facing a real shock that is probably beyond what we can imagine at the moment." A pretty stark assessment from the ECB head, of course. But to the point around BOE voices diverging from the ECB and the Fed, interesting to hear from Deputy Governor Sarah Breeden saying that there is a lower risk of second-round effects this time round for the UK than 2022. And part of that is down to the broadly weaker fundamentals underpinning this UK economy right now versus the picture in 2022, the ability for the consumer, for example, to spend, the ability for the government to step in with stimulus to cover some of these energy price pressures. And so that divergence is interesting in terms of what we've been hearing from central bankers.
Yeah, and that sentiment echoed by Alan Taylor and Megan Green at the BOE as well. Just in terms of the economic picture here in the UK, we've got some breaking data in the form of retail sales coming in lower than expected in February, falling by 0.4%, including fuel, and by 0.4% if you exclude include it. So economists had predicted 0.7% and 1% declines respectively. Very little reaction, in fact, to this data, which, like so much covering February, really has been made somewhat irrelevant by the implications of the war. So the pound about flat for the day, but that being driven more by the move in the dollar.
Yeah, 133 right now on the pound, largely unchanged on the back of that data, to your point. Let's tell you what else is coming up today on the show. James Meadway, Verdant founder, is going to be coming up to view and give us some details in terms of how the Green Party here in the UK is thinking about possibly trying to win over the bond markets. Fabiana Fideli, M&G Investments, Equities and Multi-Asset CIO, on how to position around all the volatility and uncertainty emanating from the Middle East. And Dex Hunter-Torek, Centre for Tomorrow founder and president, formerly working at the likes of Google, Alphabet and with Elon Musk as well. So an important voice in terms of what's happening in terms of tech and AI.
Let's take a look at what else we're watching throughout the day. We have Marco Rubio attending the G7 foreign ministers meeting later on. We'll be watching out for the arrivals. Then later we get BYD earnings, and at 2 p.m. London time, the University of Michigan sentiment data. And then more Fed speak. We get to hear from Thomas Barkin, Anna Paulson and Mary Daly before finally at 9:30 p.m. London time, President Trump will be delivering a special address at FII Miami's summit.
Here's what else you need to know this morning. The US Senate passing legislation to fund most of the Department of Homeland Security, forging a path to end a lengthy partial government shutdown that hit airport security and threatened to ripple through an economy already roiled by the Iran war. The bill, which must still pass the House and be signed by President Trump, marks an abrupt reversal for Republicans who had blocked similar proposals backed by Democrats to partially fund the department for weeks. Bloomberg understands that Pernod Ricard is exploring a potential acquisition of Brown-Forman, the owner of Jack Daniel's whiskey. Sources say the French beverages company has held some initial discussions with Brown-Forman about a potential combination. Brown-Forman shares jumped sharply on the news, giving the company a market value of $11.8 billion. Pernod closed down 5.7% in Paris for a market cap of just north of $17 billion. And Bloomberg understands Anthropic is considering going public as soon as October. Sources say the maker of the popular Claude chatbot has held early discussions with Wall Street banks about taking leading roles on a potential listing. Anthropic has been boosted by a win in court, with a judge blocking a Trump administration ban on government use of its AI tech. The company sued earlier this month to block a declaration by the Defense Department that Anthropic posed a threat to the US supply chain, escalating a high-stakes dispute over safeguards on AI technology used by the military. So a potential mega IPO from Anthropic that has gone, despite that political and it is political and legal challenge from the Department of Defense in the US, has gone from strength to strength in terms of the products it's putting out and all the additional capabilities, to the point, of course, where we've seen market volatility on the back of Anthropic news. But this is a company that is leading, particularly when it comes to enterprise, and we'll see how well react, or what the response is to this potential IPO. The assumption is there's going to be massive demand to get exposure to Anthropic if they are listing in October this year.
Arguably, this court case has now put the wind in their sails now that they've won. Interesting that the pitch for Anthropic is that it's more responsible as a steward of AI than competitors. I'm interested why that is, really, how that manifests. But notable that so many of the founders of OpenAI, the original staffers of Anthropic, came from OpenAI, including the CEO.
And that's the genesis of that safer, quote unquote, safer large language model that they are pursuing. Is they split off from OpenAI because their view was that OpenAI at that point wasn't taking safety seriously enough. OpenAI, of course, would make the contention that they absolutely do. They have systems in place. But certainly it's been part of the branding, at the very least, for Anthropic. And certainly they seem to have won big enterprise clients largely on the back of that. The strength of their models, but also that focus on safety and reliability.
Yeah, healthcare and finance as well. Well, coming up on the opening trade today, we have the EU's top diplomat saying Europe's discussing how it can help with efforts to keep open the Strait of Hormuz. We'll bring you some of that interview with Kaya Kallas later on in the show. Plus, we'll go live to France as US Secretary of State Marco Rubio arrives for a high-stakes meeting with G7 foreign ministers. But up next, we're going to be speaking to Hugh Gimber, global market strategist at JP Morgan Asset Management. And if you've got any questions of your own for any of our guests, please do send them to us on IB plus BBTV Go. Good morning from London. This is Bloomberg.
ओके गाइस, ये क्रूड ऑयल में देखो एक सेलिंग का ट्रेड लगाया है, अभी एंट्री मत करना, एक कैंडल ओपन इक्वल टू लो बनी है, ध्यान रखना। दिस कैंडल इज ओपन इक्वल टू लो, वी नीड टू सी ये कैंडल नीचे क्लोज होती है नहीं होती है। ओपन इक्वल टू लो कैंडल है करंटली, मोस्टली शायद किसी न्यूज़ बेस्ड मोमेंटम पे जा रही है, सो डायरेक्टली एंट्री मत करना, वेट करेंगे, छोटा सा ऐसा लगाएंगे। नहीं तो इस कैंडल का ओपन देखोगे 8955 है, लो भी 8955 है, तो 8955 8955 ओपन इक्वल टू लो, नीड टू सी विल सस्टेन और नॉट क्लोज होनी चाहिए 9000 के नीचे। 9000 के नीचे अगर ये क्लोज होती है तो इसमें एंट्री बन जाएगी। इन केस अगर ये 9000 के ऊपर क्लोज हुई, इवन दो रेजिस्टेंस के आसपास ही क्लोज होगी, बट फिर हम एंट्री नहीं कर सकते उस केस में, फिर सेम एक कुछ इस तरह का प्राइस एक्शन देखना पड़ेगा, लाइक आई एम काइंड ऑफ तभी सेल करेंगे 9000 के ऊपर अगर क्लोज होती है तो। एक ही मिनट रह गया है ऑलमोस्ट, लगता नहीं है आएगी नीचे। ठीक है, देखो कैंडल हो गई क्लोज, ओपन इक्वल टू लो थी लास्ट कैंडल, एग्जैक्टली अभी भी देखोगे रेजिस्टेंस पर ही क्लोज हुई है एक छोटे से, बट इट इज क्लोज्ड अबव द एंट्री लेवल ऑफ 9000 के ऊपर क्लोज हो गई है। ये कैंडल भी ओपन इक्वल टू लो दिख रही है। देखो अब हो सकता है प्राइस यहाँ से नीचे आ जाए, बट अब डायरेक्टली एंट्री मत करना, वी नीड 9000 के नीचे कुछ एक इस तरह का एम पैटर्न बनाएगा तभी सेल कर पाएंगे। वैसे ये भी ओपन इक्वल टू लो कैंडल है, ठीक है, एग्जैक्टली रेजिस्टेंस पे बनी है। अगेन आई एम सेइंग दैट हो सकता है सेलिंग आ जाए, बट कांट एंटर बिकॉज ऑफ द प्रीवियस कैंडल। वेट करेंगे, देखते हैं पैटर्न बनता है नहीं बनता। इन केस अगर प्राइस बाय एनी चांस 9070 के ऊपर क्लोज हो गया, फिर तो एंट्री नहीं बनेगी। इट इज स्टिल ऑन रेजिस्टेंस, लास्ट कैंडल ने एंट्री रोक रखी है, लेट्स सी एम पैटर्न क्रिएट होता है या फिर नहीं। मिल रहा है 9000 के नीचे आने का वेट करना पड़ेगा वापस अब। बाकी निफ्टी फिफ्टी मैंने बताया था आपको 22,950 के आसपास एक सपोर्ट है, वहीं पर रुका हुआ है प्राइस काफ़ी देर से, देखते हैं होल्ड करता है नहीं करता है फ्यूचर में। अगर यहाँ पर ब्रेक कर गया, ये सस्टेन कर गया नीचे, तो फिर हम चले जाएंगे वापस 22,600 650 की ओर। तो 22,950 जो सपोर्ट एरिया मॉर्निंग पे बताया था, वहीं पर प्राइस साइडवेज हो गया फिलहाल के लिए 15 मिनट में। देखा मैक्सिमम टाइम ऐसा ही करता है, ओपन इक्वल टू लो बना के एंट्री के वक्त फिर बाद में वापस नीचे आता है। ऊपर गया भी तो ऊपर 9300 9600 रेजिस्टेंस ही है। थर्टी हो चुका ऑलरेडी, लंदन सेशन ओपन। ये रेजिस्टेंस काफी टाइम के बाद बना है यहाँ पे। डायरेक्टली सेल मत करना, अभी क्रूड ऑयल में वापस से वेट करेंगे, करना ही पड़ेगा वेट। यहाँ से अगर ऊपर निकलता है मार्केट तो फिर हम एक्सपेक्ट करेंगे 9300 से 9500 के आसपास जाए, वहीं फिर नेक्स्ट रेजिस्टेंस मिल सकता है 15 मिनट में, वहाँ पर हायर टाइम फ्रेम का भी रेजिस्टेंस है, तो आई होप दैट विल होल्ड। ये कैंडल भी ऊपर ही निकल रही है, लग रहा है जाने देते हैं।
And for me, that's exactly what they did at recent meetings. Whether it's the Fed, whether it's the ECB or the Bank of England, the message was, we've got a grip on this. We're not going to repeat the same mistakes of 2022. The question I'm then asking is, OK, you're talking tough, but can we really see 75 basis points of hikes delivered this year? I'm much less convinced. You heard it from several Bank of England members yesterday. Markets are thinking about this today in terms of an inflation shock, but we also have to think about the pressure on growth that would come at a later date. And so that, for me, is where maybe the bond market is listening to that really hawkish tone, but perhaps translating a little too much of that language into intended action.
So fiscal stimulus seems to be being priced in by the bond markets, maybe being priced in too much, to your point. How much is priced in across the equity markets in terms of the potential fiscal support that could come through?
So the equity market is still looking at this shock, I think, in a relatively optimistic fashion. The equity market is taking its cue from the energy markets, which is to say that this is significant disruption, that there is a hit to supply over the medium term, but that ultimately this situation is improving. That partial de-escalation base case that I laid out in terms of, let's say, oil at $100 a barrel to the middle of this year and then moving back to somewhere in the region of $90 by year end.
Is that a complacent reaction function that we're seeing from the equity markets?
I think it's a reaction function that reflects the pressure on all sides to find de-escalation. I do not think equity markets here are pricing in multiple quarters of significant supply disruption, but I think you can understand that when I come back to those incentives. I spoke about the US earlier, but you think through this through the Asian lens. This is where I think the pressure on Iran, and maybe that's what those 10 days are buying here, more time for countries like China, like India, like Pakistan to be coming to Iran and saying, look, this is hitting us really, really hard, and therefore can we find some trickle through of oil? And perhaps that's the next step, where we see more tankers going only to Iranian allies. But again, through my framework, that is a positive step forward in terms of improving the supply of oil.
All right, Hugh, thank you for your analysis. As always, Hugh Gimbert, Global Market Strategist at JP Morgan Asset Management. And coming up, we'll discuss whether the Green Party here in the UK can provide the economic framework for government. Up next, we'll speak to James Medway, the founder of green think tank Verdant. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food. I never had this ingredients never used in Japan. Kind of like a wow, you know, and cilantros, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish, but Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with the lemon juice. You know, never use the soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make novel style.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back. Happy Friday. We are 30 minutes from the start of the opening trade. European futures are losing momentum, pointing higher by just 0.1%. That's in the context of a drop of more than 1% by the close yesterday. There's a lack of conviction. There's that continued uncertainty, of course, emanating from the Middle East. So that's the picture across the benchmark European Stocks 50 futures. Here in the UK, FTSE 100 futures pointing to very modest gains of 25 points. CAC 40 futures over in France are currently flat. Lizzie.
Well, in your bond space, not much doing this morning, really across the curve, across the continent. Even in the US, Treasury yields pretty steady. Where the action is at the long end of the Japanese curve, and you've still got the 30-year yield up 17 basis points, the 40-year up 19 basis points on the expectation of a hike, and because Japan is just so exposed to energy coming from the Strait of Hormuz. Well, we're still waiting, of course, for the gilt market open, but let's turn to the UK now. The leader of the UK's Green Party, Zach Polanski, says government shouldn't be, quote, strangling business, tempering his left-wing bloc's economic message ahead of the nationwide local elections in May. Verdant, a new economic think tank, aims to provide progressive policy ideas suited to adoption by left-of-centre parties, such as the Greens. And its founder, James Meadway, I'm pleased to say, joins us now in studio. James, thank you for making time for us. We've heard lots of comments on the left about not being in hock to the bond market, some of that being walked back more recently as we approach elections, notably. Do you think that it's important that left-wing parties are aware of the bond market, that they tell a story that bond markets can believe in?
Well, it's not just being aware of the bond markets. It's like whether you're aware or not, the thing is still there. And if you're a country like Britain with this sort of extraordinarily large, for a developed country, international exposure, the 40% of food that we import, the 50% of the natural gas that we have to buy from the rest of the world, the 60% of fertiliser, the third of government debt owed to the rest of the world, it's a very, very big international exposure. So what happens internationally translates very rapidly into what people feel in their pockets. And that's the exposure that you have to think about. It's no good saying the bond market will just disappear if we kind of print enough money or we borrow enough. It really doesn't matter. That's actually not going to be true for a country like Britain. And that's a hard constraint on what any government can do, unfortunately.
And so many governments have learned, right, over the years recently. But then it becomes a question of how are you radical? How do you come up with radical ideas to boost economic growth, but also keep it realistic when it comes to pleasing the bond vigilantes?
Well, there's two bits to this. First is that we shouldn't mistake radicalism for a kind of fiscal radicalism. There's no necessary need to think that if you want to do something interesting in the economy, it's all about how much you spend, how much you borrow, and that's the end of it. I think for too long, especially on the left, you can fall into a bit of a trap of going, well, if we just spend more, then that makes us even more radical than someone who's spending less, and that's all we have to think about. Actually, the situation we're in now, particularly in Britain, I would say, is that we have deep institutional failings right the way across the piece. I don't think the Treasury is a particularly functional institution. I don't think the way the Bank of England sees its role as controlling inflation, but we're being hit by massive external shocks over which the interest rate has no impact. You know, the Bank of England can put up the interest rate here, the base rate can go up, the Strait of Hormuz will stay shut, right? So it doesn't really work. We have to rethink the institutions, and that's where the radicalism comes in. And that, I think, is where there's some potential that you see with the rise of the Greens over the last 6 months with Zach Polanski as the leader. There's some potential to take that desire for a change and turn it into an institutional shift of the sort that we really need to get the country moving again.
Have you convinced him, though? I'm not seeing much evidence, if I look at the Green Party or the Labour Party, on the left of the Labour Party, that those members of Parliament, or indeed the Green Party, really do understand the functioning of the gilt market, really do understand just to what extent we are held in the grip of this bond market, and the fact that additional spending is going to cause a significant problem. We are incredibly vulnerable, and gilt markets have shown that consistently.
You can do additional spending if you have the additional taxes without very much problems there. Now, you can argue about who should be paying the taxes and how much tax you can get, and that, I think, is an important...
So what's your prescription on tax? I mean, you think, is a wealth tax something that...
Yeah, I think the wealth taxes...
What are examples of wealth taxes that work? And if there are, give me one.
Well, Norway, for instance. I mean, Switzerland, yes, it works very well. I mean, they increased it over the last year and got more money in. I mean, what more do you want from a tax from that point of view? Switzerland has had a wealth tax for about 200 years now.
How would your wealth tax work? How would you encourage and incentivise innovation? We need entrepreneurs to innovate and build companies. How do you keep those people here whilst threatening higher taxes, wealth taxes?
Well, what you've seen, for example, in Norway is that, of course, a few people leave and a few people make that decision that once you've increased the tax, that's it for me, I'm off. But actually, most people don't do that. They're attached to this country for all sorts of reasons. If you're building a business here, if you have all sorts of social relationships here, if your kids are going to school here, you don't just up sticks and go somewhere else. And also, let's be a bit more realistic about where entrepreneurialism comes from. It's not necessarily right at the top. I mean, this is one of the things I think Zach Polanski and the Greens in general have been quite good at, is talking about what happens to our smaller businesses, what happens to the people who aren't going to be millionaires and billionaires and everything into the distance somewhere. What are we doing about what's happening on our high streets? What are we doing about the quality of people's lives? That's not a big picture question.
What about tech entrepreneurs? I don't hear him talking about that.
Of course,
of course they are.
And one creates jobs, which leads to wages for the other.
This isn't what's happening. This is part of the problem. This is why you're seeing this populist upsurge everywhere. You have, for example, this government heavily focused on let's build whacking great data centres everywhere. How many jobs is a huge hyperscale data centre in the northeast of England going to create for anyone in the northeast of England, right? How many jobs is that going to create? At enormous expense, by the way, in terms of the energy costs, the water costs. There's a real disconnect that's appeared. So if we're sitting there going, oh, let's get the billionaires, let's treat them nicely so they'll create jobs for everyone else, that's not happening and people can see it.
So if AI displaces jobs, what's your answer? Universal basic income?
Well, I would like to see a basic income, and it's part of a Green Party policy, for example, and I think there's a solid argument for saying, regardless of what happens with AI, a basic income would be a good idea.
We've already got a problem with benefits and how to afford it, so surely that just adds to this tax and spend balance problem.
I think there's decent costed proposals out there. There have been for a number of years. People like the economist Howard Reid a couple of years ago with a plan to reform the benefits system by introducing basic income, and I think that's how you'd have to treat it. Not just like, here's a load more money, but here's how we're going to get the benefits system to actually work, because it's really failing all sorts of people in all sorts of ways at the minute. Introduce something simple, clear, consistent, basic income, and that way the whole thing can work a lot better.
People don't just need a basic, they need a job. They need a job. And you've got how many people, is it 9, 10 million people right now of working age who are not participating in the UK labour market?
Particularly young people.
How do you fix that if it doesn't involve cutting benefits?
Well, I think, I'm sorry, I'm trying to understand the link between you're going to get your benefits cut and that's going to magically create a job. That isn't how this thing is going to work. I mean, part of the issue that you're seeing with unemployment and pockets of unemployment is a problem of demand, and is a problem of demand in local economies. That we have an extraordinary focus, still with this government too, to be honest, when it talks about what is its plan for growth. It says, well, let's expand Heathrow, let's make a Silicon Valley in Oxford. OK, everything's in the southeast forevermore, everything's in London forevermore. That's no good if you're in the northeast of England, or where I'm from, in Wigan. It doesn't do anything for people there. You've got to get the demand back into these local economies. That means some spending, some investment has to take place there. That's how you're going to start to create jobs.
James, we haven't got long with you, so I do want to focus on your response to the current situation in the Middle East. You said at Verdant's launch on Wednesday that you think Rachel Reeves' response to the energy price spike has been totally inadequate. What would you like to see? And really, should the state be stepping in every time we see higher energy bills?
Well, the issue we've got at the minute is that, look, take the last just 6 years now, we've had 3 major shocks. Coronavirus, the Ukraine war, and now this Iran war that's just taken place. We keep getting hit by these things. And every
the bill
time
keeps rising.
Exactly, and every time you get this response where, oh, it's an emergency, and you scrabble around and you try and prepare everything. We know what the longer-term part of the solution is, particularly to energy shocks. It has to be domestically produced renewables, but that takes a long time to kick in. What we need to do now is think about how best to protect households. Now, I would favour something like a block tariff, where you say, OK, this is the allocation that's protected, and if you use more than that, then you're facing a higher marginal cost. So that way, you don't have just subsidies for people with very large houses, very wealthy people, that sort of thing. The government isn't talking about doing that. They're talking about narrowly focusing on a few people already in receipt of benefits, and then leaving a whole load of other people not in receipt of those benefits to face that exposure. That isn't adequate.
James, thank you very much indeed
for
your time. James Meadway, founder of the think tank Verdant. Coming up mixing drinks on a Friday. Pernod Ricard confirms they are in talks to merge with Brown-Forman, the owners of Jack Daniel's whiskey. More on that and other stocks to watch at the European Market Open. It's coming up. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
What we are discussing is that what we can do to keep the Strait of Hormuz open. And there, we have our own operations, but we are also discussing whether, there could be a joint coalition of the willing to really keep this the strait open. But right now, no naval vessels really standing to the...
Kai Kallas, the EU's top diplomat, speaking to Bloomberg at a meeting of G7 foreign ministers in France on Thursday. Bloomberg's chief Europe correspondent, Oliver Crook, is on the ground at those G7 talks in Vaud-Desarnais. Ollie, Kayas talking about a coalition of the willing. Meanwhile, Marco Rubio, of course, Secretary of State of the US, said it's in the G7's interest to help the US with the Strait of Hormuz. What are the latest developments on this? What are you hearing on the ground at this G7?
Yeah, so what we understand is Marco Rubio arrived here late last night at about 2 a.m. He should be arriving here any moment now to have bilateral meetings and, of course, a large sort of meeting and a gathering of G7 foreign ministers. Will also include the Saudis of particular interest at this moment in time. For Marco Rubio, this is really going to be an effort to try to enlist some of the G7 allies in the war in Iran in some capacity or another. We know there's been very limited appetite for there to be any sort of kinetic or active military involvement by any of the G7 allies, and that's really been echoed echoed by everybody I've spoken to, whether it's Kaja Kallas, whether it's the Canadian foreign minister we spoke to yesterday. They're not really have the appetite to get involved in this war. That being said, there are discussions, we understand, behind the scenes about building out this coalition of the willing. According to Mark Rutte, who spoke yesterday, the NATO Secretary General, there are about more than 30 countries that are willing in some way to get involved. Now, we should say we're not clear on what these nations are willing to do and the timeline in which they're willing to do it. Of course, many of the comments we've heard from, for example, Emmanuel Macron, is it would be the day after the war. And in the moment, we're still very much at the day of. The other issue for the European foreign ministers, of course, for Marco Rubio, is try to get him on side and keep him on side on Ukraine.
And Ollie, Bloomberg Economics is writing this morning that the war in Iran has been a, quote, gift for Moscow, given the surge in energy prices. Do you think that the US is going to use support for Ukraine as leverage over the G7 on Iran?
So what's really very interesting is I think you have this dual dynamic where I think on the one hand, maybe the Europeans can offer something in order to guarantee that sort of support from the United States. But of course, the United States has been fairly unreliable in its commitments over the last year or so. So it'd be hard to really get that guarantee from there. That being said, what we got from Trump yesterday out on Truth Social saying that NATO nations have done absolutely nothing to help with the lunatic nation now militarily decimated of Iran. The USA needs nothing from NATO, but never forget this very important moment in time. A few minutes later, he put out an article that suggested that the Ukrainians had potentially had an idea of putting funding towards the Biden campaign. So whether or not these things are true or sort of irrelevant, it gives you a sort of opening into the frame of mind of the President of the United States going into this meeting. And before boarding the plane last night, Marco Rubio said a couple of leaders in Europe who said that this is not Europe's war, he's referring to Iran. Well, Ukraine is not America's war, and yet we contribute more than any other to that fight, any other country in the world. So that's something to examine for the President of the United States, is to take into account down the road. So, of course, for the Europeans, they will try to make the argument that actually the war in Iran makes very clear that the Russians are on the other side of the United States because of the intel sharing, because of the potential drone deliveries to Iran. And that's precisely the point that Kaja Kallas made yesterday here.
Ollie, thanks for the update. Bloomberg's chief Europe correspondent Oliver Crook there reporting from France ahead of those foreign ministers arriving. Well, joining us now is Bloomberg's executive editor for Asia markets, Paul Dobson, with the markets in 3 minutes. Morning, Paul. Looking at the futures picture, pretty optimistic heading into the weekend. How are markets in general setting up for the time when we always seem to get the most news?
Yes, hi Lizzie, that's right. It does seem that a lot of the action takes place at the weekend. Feel some sympathy for the Asia colleagues. We're the first responders in the market sense, at least when we get in looking at what's going to happen. And I think positioning is so crucial at the moment. It's very, very interesting because although investors are very aware of the negative impact that the war is going to have on the global economy and the adverse impact on inflation from very high oil prices, at the same time, people are keeping in the back of their heads that if there is some kind of a deal and a resolution and the Strait of Hormuz is reopened, then markets would move very sharply in the opposite direction. We were looking yesterday at a similar sort of parallel that we saw post what Trump called the Liberation Day, where he introduced his tariffs. And as soon as he started to relent, the S&P rallied nearly 10% in a single day. That kind of a scale of a move is the sort of thing that investors don't want to get caught out by. So you sort of see this kind of trying to hold both of those thoughts in their heads at the same time. I think we dribble lower, but people now are factoring in the risk of an upside surprise over each weekend, as well as the possibility that things deteriorate.
Paul, we're almost a month into this war. What for you are some of the key market takeaways as we look back on that 4 weeks at the energy shock and the inflation impulse?
Yeah, it's been very interesting, hasn't it, the market response? We've got this handy widget on the homepage of Bloomberg.com that gives you some idea of what's going on. Obviously, big rally in crude oil, up nearly 50%, and European natural gas prices. Likewise, the worst month for stocks in about 3 years on a global basis as well. And what I think is really telling here is a 50 basis point move up in the 10-year US yield shows you that bonds are no refuge in such an inflationary or or stagflationary environment. We've seen another big move in Japanese government bonds today as well. Very high increases in 30 and 40-year yields there. What you can see from that map is gold also not a haven, but the dollar really outperforming the place where people are scurrying to put their cash, up more than 2.4% so far since the war broke out. So that's a little bit of a overview of the markets.
And what, apart from the dollar, has shown resilience? Not gold, of course, but where else have we seen it, Paul?
No, so what do you think is one thing that's interesting is China has performed pretty strongly in among all this. Most of the rest of the world is worried about how inflation is going to be much higher. China was stuck with deflation, so now it's managing to sort of profit from this a little bit. So we're seeing companies raising their prices, asserting some pricing power, and the market responding positively to that. So that's one ray of light there in global markets.
Bloomberg Executive Editor for Asia Markets, Paul Dobson. Paul, thank you. Have a great weekend. Remember, you can get up-to-date analysis and insights. Just go to MLive Go on your Bloomberg terminal. Let's get your stocks to watch now with Bloomberg's Louise Moon. Louise.
Good morning, Tom. This morning, starting off with a bit of a Friday story. So we've got Pernod Ricard in talks to merge with US company Brown-Forman. Two huge alcohol companies. It would bring together two family-owned businesses if these talks do result in a deal. So in that sense, quite an attractive deal for them both. You can see both of their shares are down quite heavily over the past year. That's as consumer demand change, alcohol, a weaker demand from alcohol, particularly from China. And now, after news of this potential deal came through, Brown-Forman shares really surged in America on the back of that news. So investors, kind of welcoming that potential deal. So we'll be looking out for the reaction on the European side this morning as trading opens. Next up, another deal is Novartis. They've announced they've bought a company called Escalating. Now, this is a biotech firm that's for about $2 billion US. This is all part of Novartis trying to, again, strengthen their business. They're moving into new products, things like immunology, which Escalating specializes in. And, this comes on top of they're moving into cancer drugs as well as that. This is as their best-selling drugs kind of age, and they're trying to really bolster their business. Now, they have risen about 9% year to date, beating the likes of AstraZeneca, Sanofi. So they have, beaten their peers in that sense, but they're really trying to strengthen that business and boost things going forward via that deal. That's expected to close in the second half of this year. And finally, Santander, a positive story from them this morning. Their chair is expecting better profitability for the full year ahead. Now, you can see their shares so far in the year to date are down, but slightly outperforming the banks index in Europe. Over kind of the longer period, their profitability has surged, so she's expecting this to continue and this streak to continue, which will hopefully kind of boost shares at the open and then going forward.
OK. Louise Moon, thank you very much for those stocks to watch. 8 minutes away from the market open here in Europe. Looking broadly at the futures picture, we are pointing higher in Europe. We're up 0.2% on Euro Stoxx 50 futures. Interesting that FTSE 100 futures are only up a little more by 0.3% when we have got oil up again. Brent up 1.4% at $109 a barrel, 109.57 as things stand. The weakness will be, the futures indicate, out of Paris. The CAC 40 only flat to the upside. The DAX up 0.3%. And that's about the same sort of move that we're seeing on the other side of the pond. Futures up about 0.3% on S&P E-minis and Nasdaq futures as well.
Frankly, there's a lack of conviction in these markets right now. And who can blame investors leading up to the weekend when anything can happen when it comes to the Middle East? To your point, across the futures picture, just gains of just shy of 0.2% for Europe is what's being flagged. The tech story is really interesting, Lizzie, yesterday. Tech did not help in terms of providing any ballast. You saw some pretty pronounced sell-offs, particularly when it comes to Meta. Meta closed lower by almost 8%. Part of that was down to this finding, this ruling in a pretty monumental historic case, finding that they were liable, alongside Alphabet, the parent company of Google, of course, for the mental crisis harm caused to a young individual as a result of their platforms, and particularly how their platforms were designed. And the bigger picture is they could face additional legal suits, not just from individuals, but from states as well. That happened, but also a lack of conviction around what's happening in hardware. There was the focus on the chip makers, and particularly the memory chip makers, so they were under pressure. ASML in Europe was one of the biggest losers as well, so tech was one of the biggest losers losers as a sector for Europe yesterday, and then you saw that in the US session. So we'll see if that reverses to any extent today. I'm going to certainly have an eye on what's happening in tech.
Yeah, if we take a look at the US, okay, so up 0.3%, as I say, for both S&P E-minis and NASDAQ futures, really latching on to what President Trump is saying here when it comes to the geopolitics. But as you say, a lot of headlines come out at the weekend. This is a picture that could whipsaw throughout the day as we get closer to the Wall Street Open. We're waiting for that G7 foreign minister's arrival. Marco Rubio, Secretary of State of the US, should be arriving any moment now. And it was interesting to hear from Ollie there how much this could impact the Ukraine conflict, how willing G7 members are to support the US in the Middle East.
And the effort by the Europeans to refocus US attention on Russia as the adversary, pointing out, Kaja Kallas, pointing out that the Russians now, according to Western intelligence, are supplying hardware and intelligence to the Iranians, as Kaja Kallas put it, to ultimately try to harm American troops. They are trying to refocus that. Whether or not the Trump administration bites is looking doubtful, given what we've heard from Trump recently. But certainly that's the focus, it seems, for European members of that grouping. Currently, European futures pointing up by 0.2%, US futures, S&P E-minis up by 0.3%.
Well, we're 5 minutes away from the market open. Don't go anywhere. We'll bring you the opening trade up next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Happy Friday, everyone. So a few minutes to go until the opening trade this Friday. Let's sort of reflect briefly on the session yesterday. This is where Europe closed lower. The Stoxx 600 by a little over 1%. Then this is the session with the S&P 500. And as you can see, the grind lower, ending lower by 1.7%. Mixed messages coming from the Iranians, coming from the Trump administration in terms of this conflict. And of course, ultimately, President Trump coming out and saying he was been kicking the can down the road in terms of these threatened attacks on Iranian energy to April the 6th. Whether or not that's positive for the markets or just further uncertainty is a question in terms of where you sit on that debate. European futures are pointing modestly higher then after the selling pressure that we saw yesterday, putting high by 0.2% across the benchmark. FTSE 100 futures looking to add 38 points as things stand. Energy was the sector that outperformed yesterday. Tech was under pressure, as was basic resources. We'll see how that changes in the session today. DAX futures in Germany pointing higher by 80 points, up 0.3%. Lizzie, what are you looking at?
I'm watching some of the individual stocks this morning. Pernod Ricard for a Friday, on the back of a Bloomberg scoop that it and Brown-Forman, the owner of Jack Daniels, of course, are looking at a merger to consolidate their companies because of the backdrop being an industry downturn. So this was a Bloomberg scoop, but in separate but similar statements, they did say that they are in talks to combine. More M&A news coming from Novartis. It's agreed to acquire biotech firm Escalating for as much as $2 billion. So watch them as well. And then Santander out with earnings, saying they had a strong start to the year, growth in customers and revenue, and backing their targets despite the global economic uncertainty, Tom.
Oil started the session a little weaker, at least started the morning a little weaker. That has changed. So Brent is up 1.3%. The open is right now, as we look at the equity markets and, of course, the linkages to the oil story. So up 0.4% on the FTSE 100, and we'll see to what extent the energy sector plays that role in terms of supporting the broader UK benchmark in the session today. Across the headline Stock 600, you're seeing very, very modest gains, just a couple of points right now. We're waiting for the DAX and the CAC current to open as well. Geopolitics, of course, remains in focus with the war in the Middle East, but also the meeting of the G7 foreign ministers in France. The CAC current up 0.1%. The DAX is currently a little negative, currently flatlining on the German index. The IBEX over in Spain up 0.3%. But again, there doesn't seem to be a significant amount of conviction. Yes, the sentiment has turned from the negativity of yesterday, but you're only gaining across the benchmark just shy of 0.1%. Given what could happen over the weekend, of course, when it comes to Iran, the decision-making of the Trump administration, maybe it's not a surprise that there isn't significant conviction across these markets, at least for now, Lizzie.
Well, it's very strange when I'm looking at the sectoral breakdown today. I'll start by saying that you've got half of sectors in positive territory, half in negative. Basic resources leading the gains, up 0.5%. But you'd flagged energy, Tom, because we have got Brent past $109 a barrel now, up more than 1%. And yet energy is the 17th out of 20 sectors. It's one of the worst performers this morning, down 0.3%. Which is strange, right? And we look at that breakdown geographically across the continent. The FTSE is outperforming. It's up 0.5% compared to the Stock 600, as you say, up 0.1%. So I want to dive into some of the individual energy names, but Total, BP and Shell, indeed, all in the red this morning. Some of the individual stocks that I had said we should be watching, Pernod Ricard up 2.9%, Novartis, more M&A there, up 0.25%. And so interesting moves there following the broader risk-on move, but with some individual idiosyncratic stories for those stocks to watch.
Let's bring you live pictures right now from just outside Paris, a couple of clicks outside Paris, where G7 foreign ministers are meeting right now. Marco Rubio, of course, landing in early morning, around 2 a.m., according to Oliver Crook, who's on the ground. You can see that live picture right now. G7 ministers, of course, meeting. There's Marco Rubio with the bright red tie, of course, alongside his counterparts from the UK, France, Germany, Canada, of course. There the camera is pushing in to Marco Rubio. And so that is the focus, of course, in terms of how those conversations evolve with the Secretary of State of the US, no doubt bringing a message that is going to try to convince those members to join US efforts to try to contain Iran. We know that the US is unhappy that NATO members and EU allies haven't done more, as they see it, to support the US in that conflict. But we know the Europeans as well have their focus on Ukraine, Lizzie.
Yes, indeed. Well, let's get further market analysis now. We have Fabiana Fedeli joining us from M&G Investments. She is, of course, Equities and Multi-Asset CIO. Fabiana, taking in the geopolitics and looking at how markets are performing into the weekend, I know you tend to advise looking through geopolitics, but is this war an exception?
It is different from the geopolitics that we've seen in the past, Lizzie. In the last 2 years, we've seen geopolitics that didn't really have an impact on either credit conditions or earnings, and those are the two transmission mechanisms on risk markets, whether it's credits or equities. Now, there is a powerful transmission mechanism, and that's energy prices. So the longer this conflict lasts, and also the more the damage to the energy facility, obviously, the more impactful that transmission mechanism is going to be.
And so when you look at the equity picture so far, has it been complacent or is it resilient?
So that is very interesting. I think this market has actually told us what we already knew from the past 2 years, which is that the playbook of the risk the flight from risk to safety and the traditional safe havens are just not working anymore. I would say that equities have been calm given the situation. I would also say that that flight to the US dollar, yes, we've seen the US dollar, the typical safe haven, up, 2.4% versus currencies globally. That's not a lot if you consider what is happening in the world right now. And it's only up 3 and a little bit % versus emerging market currencies. Emerging markets would have been the typical beta trade in a situation like this. So that playbook where yields are going down because of the flight to safety, it's simply not working anymore. And investors are looking more for diversification as their best way to keep their portfolios resilient.
How does that story evolve if we got one of two extreme different scenarios? One, there's an agreement between the two sides before April the 6th. Two, you see actually members of the US military on the ground in Iran. How would that change your thinking, those two potential outcomes?
Well, that is really the issue here, that we don't know what those outcomes are going to be, and it's so binary, right? At some point, this conflict is going to end, but we don't know when. We don't know with what level of damage. So it is very difficult right now taking a position on the market only based on oil prices. You need to go one step beyond that. You need to still think about the longer-term themes that you believe will continue to be valid after this end. And so think about this. Energy security is coming to the fore. It's really important. The G7 are getting together. That is going to be a big part of what they're going to talk about. Think about infrastructure. There's a lot of rebuild and also resiliency that has to be put into that infrastructure. And think about innovation. Companies are finding their markets being completely fragmented. And so innovation is going to help them to have more pricing power.
Where else are you finding balance sheet resilience in this environment?
You know, the interesting thing is if you look at the overall indices, the volatility has been quite limited given what is happening. But when you look at under those indices, you look at the stocks within different sectors, the dispersion in price behavior has been significant. Think about sectors such as technology, but also in consumer, in industrials. And you've seen also sectors that are not behaving as you would expect, such as, for example, the energy sector as of late. So there is a lot of balance sheet resiliency, but it's really, and again, we talked about this in the past, is stock by stock, security by security exercise.
I just want to come back to the dollar because Hugh Gimbo was on earlier, and he didn't say this on air, but it is in his notes, that investors will prefer to deploy capital in their home markets the longer this goes on, which would then weaken the dollar. So do you believe that? And ultimately, does that mean that the war becomes a sell America story?
Look, I'm not sure if it is a on-market bias, but we've seen, for example, from European investors that they're far more willing to invest in Europe and away from the U.S. than they were in the past. So they've come from very overweight positions in the U.S. to a much more diversified portfolio when it comes to risk assets. And I'm not really seeing that change.
I want to get your take on what's happening in the credit markets, because there is a link, obviously, in terms of what we're seeing on the geopolitical side, yields higher, repricing across the curve, and how that is reflecting across credit markets as well. at a time when we already have that AI software disruption. How concerned are you about what's happening in private credit? Is it a systemic risk? How close are you watching that?
So we're concerned. We're watching it very closely. It doesn't appear to be a systemic risk now, as of now. But clearly, some of the volatility you've seen on the credit side, also in public markets, is probably due as much to what is happening in the private credit market as much as to the war. And so we need to really make sure that when we invest, we know what we're investing in, because not every security out there is the same.
But are you worried about contagion to European banks? Because many guests will argue that we're less exposed here than in the US.
We're definitely less exposed, and there are other factors that are coming in. I mean, one of the things that we've been looking at as of late has been the impact of savings that for some banks have come from the implementation of artificial intelligence on their costs. I mean, there's so much more that is happening to banks also in Europe that can offset a limited contagion from the credit side. It's all a matter of relative impact.
What assumptions are you making about central bank reaction function? The assessment seemed to be very broadly from Fed speakers and the ECB yesterday were on hold. And the BOE voices that we heard from seem to be suggesting that maybe the markets were overpricing the number of hikes.
But just a week after they were sounding oh so hawkish on both sides of the Atlantic.
So how do we think about the central bank reaction function? Are markets accurately pricing right now how central banks react to this?
I think they're actually pricing the fact that even central bankers don't know what's going to happen. And because it all depends on the oil price, energy price, gas prices, and we still don't know how far this is going to go in terms of the damage to the facilities, in terms of the duration of the war. But right now we're at a time of uncertainty, both on the side of central banks and obviously investors. And that's why we say do not take directional trades based only on where oil prices are going to go, because the conflict could end tomorrow or could last much longer.
Appreciate the honesty, Fabiana. Brent at 109.30, up 1.2%. Fabiana Fedeli, Equities, Multi-Asset and Sustainability CIO over at M&G Investments. Always a pleasure to have you with us.
Let's bring you some breaking lines right now. So red head across the Bloomberg terminal, China starting retaliatory trade probes against the US. We've forgotten, of course, trade very much has been put to the sidelines, but shouldn't have been, arguably. The focus, of course, rightly so, on what's happening in the Middle East. But trade has been a theme, of course, over the last, well, since President Trump took office, and continues to be there. And this is a reminder that this story is not going away. So China starting a retaliatory trade probe against the US. This is in retaliation to the US 301, Section 301 probes, according to China. China saying it strongly opposes those 301 probes. It can take corresponding measures depending on the probe/investigation. So this is a reminder that China is looking to ensure it has the tools in place and a bit of leverage, arguably, as well, ahead of that meeting between President Xi and President Trump in May.
Well, we've got the MSCI Asia Pacific Index down 0.5%. In fact, we've got the Hang Seng Index up 0.4%, and the CSI 300 up 0.6%. But taking our focus back to Europe, let's just check in on the Core 6 on this Friday morning, shall we? 8:11 a.m. here in London, and we have Nestle, the only member of our Core 6, eking out gains this morning, up 0.3%. But losses here for LVMH, Novo's losses pronounced here, down 2.5%. But in the red as well for Rheinmetall, ASML and Schneider Electric. But let's get a check on some of the other individual stocks on the move this morning with Louise Moon. Louise.
Starting off with Pernod Ricard, shares into the green. This is after talks that they might merge with US liquor giant Brown-Forman. Now, this is kind of echoing the moves that we saw in Brown-Forman in late trading in the US last night. Their shares also rose on the back of this potential deal, so showing that shareholders are welcoming this as they're both trying to strengthen their businesses against a weaker consumer, particularly for the alcohol space. So shares up almost 4% into the green on the back of that. AstraZeneca seeing similar moves, also up over 3%, almost 4%. And that's after one of their drugs for a deadly lung disease, saying that this reduces flare-ups. Now, this, again, is them moving into new spaces, trying to kind of bolster themselves. And this drug, in particular, is projected to have huge revenues. So good news for AstraZeneca. Shares ticking up higher into the green as a result of that. Next, we're moving to Poland. Polska, the supermarket operator, shares plunging down into the red, over 15% lower. That's after their earnings, showing that costs are higher, guidance is seen as negative, a record low margin. So really dragging down their share price this morning as it opens. And then finally, moving to Rio Tinto here in London, the huge mining company Rio Tinto, only slightly into the green. That's after they've been raised to an outperform at Macquarie. And this would imply Macquarie's new price would imply about a 10% higher than their last closing price, but only slightly taking them higher into the green. So we'll be keeping an eye on that to see if that moves further upwards today.
Louise Moo, thank you very much indeed on stocks on the move this Friday. Coming up, a turbulent month, of course, for oil traders, to say the least, as the Iran war drags on. We're going to take a closer look at the outlook. Macquarie saying you could get to $200 a barrel, a record, if this conflict continues into June. We're going to get the latest from the Middle East. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Up to the minute global news whenever and wherever it happens. I'm Jumana Bersecci in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
As I walked into the Bloomberg building this morning, futures were in the red. You've just told me futures are in the green. You're getting whipped around on truths, on tweets, on these kind of news flow, which with the best will in the world, none of us can predict at all. So I think a lot of it is about trying to square the position and just being very, very humble around the things that we don't know at the moment.
You cannot invest for tomorrow or the next day at the moment. As we look forward, we think there are tremendous opportunities caused by the volatility, the dispersion that's building both through geopolitics, through economic concerns as well.
The recent developments just showed that Europe is a bit more fragile and vulnerable, but overall, if we have de-escalation, that is positive for the risk on.
We're likely going to move to a lower intensity war that will mean that Iran will continue to disrupt the region with occasional drones, with disruption in the Strait of Hormuz. That means we're not going to go back to a time where the strait was fully open. So I think we have to assume the base case is ongoing disruption.
Keep your strategic vision and don't get dragged into the short-term movements, because as we've seen from yesterday to today, it's just massive swings. Stick to your guns, don't get dragged in.
All right, some of our guests this week weighing in on, of course, what was another volatile period in markets. Let's check in the markets right now. We've seen volatility again. We were leading up to this session with futures pointing higher by 0.2. Right now, European stocks across the benchmark are down 0.3%. As you can see, the FTSE 100 is holding its head just above the water, though, up 0.1%, helped by what's happening in the energy space. The DAX over in Germany is down 0.5%. That's where the biggest losses are coming through across the region right now. Over in France, the CAC 40 is down 13, almost 14 points. We're seeing a bond sell-off as well. It's not dramatic, but it is there. There had been some drama in JGBs, and you're seeing that reflected to some extent in the sovereign debt of the Eurozone and gilts in the UK. Yields are up 5 basis points across the curve. Lizzie.
Well, one stock that's managing to gain this morning is Pernod Ricard, up more than 3%. Pernod and Brown-Forman, the owner of Jack Daniel's whiskey, of course, have confirmed that they are in merger talks. In a statement, Pernod said that the partnership would be akin to a merger of equals, and Bloomberg understands that the transaction being discussed has a significant stock component. So let's get more detail now with Manuel Baigorri, Bloomberg's deals reporter. Hi, Manuel. So just talk us through what we know about this potential acquisition.
Yes, Lizzie, what a fascinating transaction here. We've been following both companies separately over the years. Pernod Ricard has been quite active on the acquisition front, buying different brands globally. Brown-Forman has been, talked about a potential takeover target for years as well. And now, finally, it sounds like they are opening to talks for a merger, a combination with Pernod Ricard. So fascinating, and definitely remains to be seen how it's going to play out. There is, as you said, an important stock component being discussed between the two families behind the companies, and it will be important actually for Brown-Forman's family to have a say and a significant share of the combined entity to potentially pick up of any upside down the road, given that the company and not just the company but the whole industry is going through a lot of setbacks and a very, very subdued demand, weak demand globally amid different shifts in consumption these days.
And Manuel, Pernod Ricard, as you would know, of course, one of the largest drinks companies in Europe. And looking at its portfolio, it includes Absolute Vodka, Havana Club Rum, Jameson Whiskey. I wouldn't necessarily recommend mixing all of those even on a Friday. With this acquisition, Manuel, how big does this company become?
Yeah, it will be very transformative, definitely, adding to all the rapport of brands, Tom, that you were mentionioning. So for sure, yeah, just Jack Daniel's to mention one, but there is other very iconic brands across different categories behind Brown-Forman, and it will be a very transformative transaction, one of the biggest in this, alcoholic beverages space for sure, that will obviously respond to the trends that we are seeing and the challenges that this industry has been facing for quite a while as different trends in consumption evolve. So this is poised to be one of the largest transactions globally this year, definitely within the sector. And interestingly, we've seen quite a number of big deals in consumer, broadly speaking, as well.
OK, Bloomberg's deals reporter Manuel Baigorri. Manuel, thank you very much indeed for the details on that merger. Now to the oil space. Almost a month into that deepening conflict, of course, in the Middle East, oil traders continue to reel from weeks of massive market swings, beginning to pull back, creating a drain on liquidity that threatens to exacerbate future moves. More, let's bring in Anthony Di Paola, Bloomberg's Middle East energy markets reporter in Dubai. Anthony, always appreciate your time and your insights. We're looking at oil prices higher again. Brent closing in on $110 a barrel. What underpins this, given that Trump has pushed this deadline back, this apparent deadline, until April the 6th?
Yeah, good morning, Tom and Lizzie. The deadline is pushed back, but the bottom line is we still don't have oil coming out of the Persian Gulf. So we are seeing that oil price tick back up. Again, this morning we were a little bit lower yesterday, opened higher today, and it's come back up as well because we're simply not getting the supplies that the market needs in the quantity that it needs. So we've seen some vessels coming out of the Gulf carrying Iranian oil. Some vessels that the Iranians have said that they've let go through. Some ships are paying a fee, like a toll, to get through the Strait of Hormuz. And we even heard President Trump talking earlier this week about a gift that the Iranians had given the U.S., apparently that was allowing some additional tankers to pass through. But when you think about the context of the global oil market, if you're relying on gifts from Iran to allow vessels to pass through the Strait of Hormuz, which had previously been an open channel for navigation, then you're already in a more negative situation than you were before, relying on one country to let through or not vessels onto the global market. So that's a problem. That's what the market is focused on. Plus, we've got this deadline delayed from earlier in the week. So let me tell you, those of us in Dubai were happy to see that deadline did not come to pass at the start of this week when Trump threatened to bomb power facilities, in Iran, and then the Iranians reciprocally threatened to bomb power and desalination here in the Gulf region. The UAE has been one of the countries that's been hit the most in terms of missiles and drones. So we're happy to see that not come to pass. That was delayed until the end of this week, now delayed again. So I think the market is kind of looking through that and looking at the placement of troops as well. The need to get the Hormuz open, Trump's comments about opening that also forcibly. So the market is potentially looking at some other action happening before we get to that deadline, and also take into account that the longer Hormuz stays closed, the more damage there is done to the oil market, Tom.
And so, Anthony, where Malaysia says that Iran has allowed some of its ships through the Strait of Hormuz, do we take that as a sign of de-escalation, or do we take it as a sign that Iran is tightening its grip on control of who goes through the strait?
Yeah, I think it's that. I think it's tightening the grip. It's obviously a conciliatory gesture, but it shows that Iran has a level of control in Hormuz that it didn't have, that it wasn't exercising before the war. So this is one bit of posturing by which Iran is trying to show that it's got a bit of an upper hand on that aspect, at least. Militarily, they are taking a beating, but they do have the global oil market by the throat by closing Hormuz. So potentially a de-escalatory move, but not enough really to help the market. And I think that the Gulf countries, we saw the UAE ambassador to the U.S. commenting in an op-ed yesterday. We saw the ADNOC CEO talking earlier this week, speaking to CERAWeek, as well as in some meetings in Washington, including with the vice president. They want Hormuz opened, and they want the situation in the Gulf really sorted out, not that the U.S. leaves the region and leaves it with an Iran that is able to exercise control over the Gulf or threaten energy facilities. The Gulf countries really want stability so that they can supply their oil and gas back into the market. That's where they make their money. They make their money by having a stable
Anthony,
environment.
we'll have to leave it there.
So
Anthony Di Paola out of Dubai. We appreciate the update. Thank you very much. Coming up next, we'll talk tech. This is Bloomberg.
for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
This is the opening trade. We're 30 minutes into today's session, and we told you that things could whipsaw this morning. It is a Friday. We started with the European futures picture in the green, but now red across the screen into the open. 30 minutes in, we've got the Stoxx 600 down 0.5%, as we've seen oil climbing above $110 a barrel on Brent and yields rising as well. Take a look as well at the US futures picture, because again, we had seen a positive picture in futures, and that's paired somewhat because of the Chinese Commerce Ministry saying that it's starting 2 probes into US trade. So the gains that we had seen, actually now futures pretty flat stateside, Tom.
I think the volume story tells a story as well. Currently down 30, close to 32% volumes versus that 20-day average. I think you're going to see investors staying on the sidelines to some extent leading up to the weekend, because goodness knows what could happen in terms of the Middle East. Yes, President Trump has kicked that deadline, that self-imposed deadline, to April the 6th. That just prolongs the uncertainty for many, at least. In terms of how it breaks down across the Stoxx 600 members, you have 122 stocks in positive territory this morning. The majority, of course, as you were saying, Lizzie, in negative territory. 465 stocks currently lower in the session so far. If we flip the board and have a look at terms of where the leaders are, there's some interesting idiosyncratic stories as well to flag. The laggards now the leaders. AstraZeneca, best performing in the Stoxx 600 so far this morning. Gains of close to 3%, as you can say, rising after news that its experimental drug for a deadly lung condition brought some statistically significant results. So Astra getting a lift on that. Pernod Ricard, we're talking about this potential merger that's in the cards, up 3.3%, exploring a potential acquisition of Brown-Forman, which is the owner of Jack Daniel's whiskey. That could significantly expand, of course, its portfolio, already significant for Pernod Ricard. SAP turning around after 3 consecutive days of losses. The software giant, of course, listed over in Germany, currently up 1.5%, is on the front foot, at least for now. In terms of the laggards, Siemens Energy, of course, a key piece of the data center story that's performed very well in the last 12 months or so on that build-out story. A different picture today, dropping 4%. Morgan Stanley analysts citing the exposure to the Middle East as a potential risk for Siemens Energy, and you can see that drop. And a significant drop for Dino Polska, down almost 15% after results showed record low margins and negative guidance. And Nokia on the telecoms equipment space dropping after it was cut to underperform this morning by Santander. That stock down almost 4%, 3.6% right now. Lizzie.
Here's what else you need to know this morning, Tom. US Secretary of State Marco Rubio is meeting with G7 foreign ministers in France today for talks on the Iran war and Ukraine. Before leaving Washington, Rubio said that other countries should support the US push to reopen the Strait of Hormuz, saying it's in the G7's interests. Elsewhere, 3 Australian plants that provide about 8% of the world's liquefied natural gas have had their output curbed by a cyclone. The disruption will affect mostly Asian buyers and comes amid an energy crunch stemming from that closure of the Strait of Hormuz and an Iranian attack on the world's largest liquefaction plant in Qatar. And Bloomberg understands that Anthropic is considering going public as soon as October. Sources say the maker of the popular Claude chatbot has held early discussions with Wall Street banks about taking leading roles on a potential listing. Anthropic has been boosted by a winning court, with a judge blocking a Trump administration ban on government use of its AI technology. Tom.
Let's stay on technology because Meta's stock tumbled yesterday, almost 8%, after the Facebook parent company was found liable in a social media addiction trial. That on a day when a Bloomberg gauge of Mag 7 stocks had its worst day since October. We're going to get a take in terms of what's happening across social media companies, AI as well, the potential societal risks, and someone who has deep insights and experience. Let's bring in Dex Hunter-Torek now, CEO of the Centre for Tomorrow. He's also a former speechwriter and advisor to Mark Zuckerberg, Elon Musk and Google's Demis Hassabis, amongst others. Dex, good morning. Thank you for joining us.
Good to be here.
We think about Meta, we think about Alphabet and Google and being found liable in this case around media addiction. As a reminder that social media has had its problems before. This is before the advent of generative AI. Not before the advent of AI, but before the advent of generative AI. You've worked with the likes of Elon Musk. You've worked very closely in the pits with Mark Zuckerberg. You've worked very closely with Demis Hassabis. When we think about the potential societal risks, the impacts on jobs, the impacts of AI and the military, the impacts of AI on the environment, these guys have a plan, right, Dex?
No, they don't. I wish they did. Look, we're in a moment where I think most people would say, if you look at how social media and the last generation of technology was managed, did we do well? I think very few people would say yes. As today's news shows. With AI, you're looking at something that's vastly more challenging for all of those systems in our societies. It's going to be transformative for our economies. It is having very unpredictable effects already on the geopolitical order. You've got AI targeting systems being used in militaries in ways that are rapidly exceeding our capacity to manage conflicts as human decision makers, as our international systems have broken down. Climate change is something that's just accelerating, and as we turbocharge economies with AI, you're actually going to see even faster consumption of resources. So all these problems are just coming at leaders now from every direction, and I think people really are missing the interconnected thinking.
And to be absolutely clear, I mean, you've been in the room with Elon, with Mark Zuckerberg, with Elon Musk, with Demis Hassabis at SpaceX. When you put those concerns to these tech CEOs, who, whatever you think of them, are incredibly smart individuals, intellectually bright, intellectually on the edge, what do they say? How do they respond? Are they thinking about these issues, Dex?
Well, I mean, you know, people are pattern recognition machines just like AIs are. They look at things, you know, in the way they've unfolded, you know, throughout our history, and they cling, you know, to those patterns, you know, and hopefully they will guide us through the future. And people often think about the moment we're going through and say, it's just like the Industrial Revolution. People worried about jobs, people worried about the future. We ended up having, you know, lots of new jobs. We had very, very different societies where we solved a bunch of our problems. This is not like that. This is not the arrival of steam power. You've got a bunch of leaders who are fantastic at developing those technologies, at racing for new innovations. They don't understand how deeply frail our societies are. In many ways, it's not their job to fix those things, but now we really need a lot of other leaders, a lot of other voices to step up and solve those problems.
So is that the government's job, then? If you've got an AI-saturated economy, people losing their jobs, we were discussing this earlier in the programme, do we need a universal basic income?
This is the sort of thinking that might be part of the solutions we need. Currently, UBI proposals are mostly fanciful. They are mostly fringe. developed by, thinkers who haven't really figured out how to actually, afford these things, especially when the effects of AI will arrive for societies all over the world. We're looking at a moment coming very, very quickly over the next decade where increasingly advanced AI is really going to have a huge displacing effect on a lot of traditional jobs. And we might get new jobs, but that means we need to transform all of our education systems, the way we are equipping young people with skills. At the moment, we're looking at unemployment in the UK for young people, soaring to, one of the highest numbers it's been in a long time. That's just a taste of the path we might be on if we don't fundamentally rethink a bunch of those assumptions that give us future growth.
Well, because some proponents of UBI would say just tax big tech more. Surely that would just drive big tech away when you need that economic growth that they provide.
Well, this is the point, right? There's a very small number of companies now which are achieving an unprecedented concentration of economic and political power. And what you've seen over the last year, right, is some of those Silicon Valley firms being utterly intertwined with government, with the US administration. Nvidia's at, a $5 trillion valuation. That's bigger than the GDP of 170 nations plus. And the idea that you're going to restrain them, you're going to be able to tax them in that way in a decade to actually power UBI systems for the whole world's nations, I think that's fanciful unless you have really put thought into what does a fundamentally different economic model look like.
We touched on, and you touched on the fact that the here and now, when it comes to the military conflict in Iran, is the use of AI, both by the US and its Israeli partners. We have seen some pushback to government aspirations from Anthropic and from Narendra Modi, a pretty monumental spat between the Department of Defense and Anthropic. Does that give you some comfort that corporate leaders at Anthropic are pushing back in terms of putting some limits around the use of this technology?
I'm going to say that I have the barest amount of comfort from that because Anthropic went into this thing eyes wide open. Did they discover, recently that the Trump administration has a fundamentally different revanchist, worldview and international agenda? No. They knew what they were doing when they signed those contracts. They then asked for very, very minor changes, in how those contracts, ultimately applied. And look, that's a very, very small sign of progress. But, ultimately, you have all the other firms pretty much, hundreds of billions of dollars being plowed into applying next generation intelligence systems to the largest military rearmament in history. And in a world order, in the way that we are today, with ballistic missiles raining across the Middle East, militaries all over the region using AI systems right now to target enemy population centers, this looks unlikely to be heading for a constructive outcome.
Do you think that European political leaders understand the realities of warfare in an age of AI?
I think European leaders understand it, but have yet to come up with an agenda for actually how to fundamentally deal themselves back into the game and prepare for that world. This is the same moment of peril for all the middle powers. When Mark Carney was speaking at Davos and he talked about a fundamental rupture in the international order, that is something that has absolutely illuminated, thinking for leaders all over the world, not just in Europe. But how do we ensure that, in the next decade, as you arrive potentially at artificial general intelligence, commercial quantum, nuclear fusion, if the United States and China are managing the arrival of those technologies, how do we ensure that the middle powers have a seat at the table? Mark Carney said, if you don't have a seat at the table, you're on the menu. And this is the challenge for all leaders now, to figure out how we are not on the menu.
So, Dex, you've started the Centre for Tomorrow. You're out of tech after what, 2-decade career,
yeah.
right at the pinnacle, and you've started the Centre for Tomorrow. What are the objectives? What are you hoping to achieve?
Fundamentally, I think now we need a dramatically different set of solutions to solve the societal problems arising from that next generation set of technologies. If we think about these problems as mostly technical with technical solutions, then we're going to fail because I want to know, where are jobs coming from in a decade? How do we ensure that we stop climate change? How do we ensure that the race for these new technologies simply doesn't push us faster into a catastrophic conflict? And these are questions you're not going to find in simply managing the technology. They are fundamentally choices about what kind of world do we want to live in, what kind of lives do we want our children to have. And that's a much larger mainstream conversation we need to have now with publics, with serious decision makers across society. These are choices that cannot be left up to a handful of billionaires in Silicon Valley.
Dex, thank you very much. indeed. Dex Hunter-Torek, founder and president of Centre for Tomorrow, on some of the risks involved around the rollout, the implementation, of course, the use of AI, and possibly some of the solutions as well to take the edge of some of the potential downside coming through as a result of that technology. Lizzie.
I just want to check back in on these markets, Tom, because we have seen some dramatic whipsawing this Friday morning since the start of trade. In Europe, we've turned negative, and stateside, where we had seen futures positive, now they're flat, and Nasdaq futures actually in the red. This partly on headlines indicating a further deterioration in US-China trade relations, that Section 301 investigation, two of them, the Chinese Ministry of Commerce starting 2 trade investigations against the US, responding to that Section 301 probe by the United States. So that's potentially what's weighing stateside. But more broadly, of course, we have got oil higher. Brent now nearly at $110 a barrel. Yields higher across the curve, across the continent, and that weighing here in Europe. Coming up, US Secretary of State Marco Rubio arrives in France for G7 talks. With the Iran conflict and Ukraine war top of the agenda, we'll bring you the latest lines from those discussions next. That's next. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Russian intelligence is helping Iran target Americans and US allies. This according to the EU's Foreign Affairs Chief, Kaja Kallas. Speaking to Bloomberg at the G7 Foreign Ministers meeting ahead of the arrival of Marco Rubio, Ms. Kallas called on the US to help Ukraine by stopping Moscow from supporting Iran.
Clearly, these two crises, two wars are linked. If you hear about the intelligence that the Russians are providing to Iran so that they could attack Americans. So, the response of the Americans should also be not to help Russia. And there it is important that the oil price is capped and they don't have the funding to actually go on.
And do you think those reports about that intelligence sharing and potentially drone deliveries we're talking about potentially to Iran from the Russians, does that make the sort of battle lines a lot clearer for the United States, and does that then put the United States on the European side of those lines?
Well, it's very clear for us where the lines are, and clearly, Russia is not on the side of Americans. That's very clear. So there should also be pressure on the Russians because they are providing drones, but also intelligence.
And also thinking about the war in Ukraine, the end game there, we're now approaching basically a financing cliff for the Ukrainians. The 90 billion euro loan still remains blocked. We have reporting now that some of the hardware from the United States is being diverted potentially away from Ukraine towards the Middle East. How do you see things progressing? Are we not just basically stuck in deadlock here for the Europeans? What is going to advance this story for Ukraine?
Yes, definitely the 90 billion loan that we agreed in December has to be delivered to Ukraine. They desperately need it, and it's also the question of European credibility. So the work is ongoing there. Hopefully still we have solutions and also working on the plan Bs on this. But what is important is that the weapons that Ukraine needs to defend themselves, that they still have, because the war is very brutal.
And there's been some reporting that maybe the European money that's been paid to buy the weapons through the Pearl program could be rerouted. Is there a reaction from Europe from that if the European money is being used for weapons that are now being sent to the Middle East?
I'm not aware of that.
And then also thinking about Ukraine and the Hungarians and the role, we've had some reporting recently about the foreign minister effectively briefing the Kremlin from some of the meetings that are being held in Brussels. Do you believe that that is the case? Is that appropriate? I think I know your answer to that. And what can you do about it?
Yeah. Clearly it's not appropriate. I mean, secret discussions or closed discussions should remain closed discussions. And there is also the obligation of professional secrecy. So I've reached out also to the Foreign Minister of Hungary to have discussion about this. And I've also reached out to the Secretariat of European Council to see what are the gaps in our rules of procedure to cover these kind of cases.
EU representative for Foreign Affairs, Kaja Kallas, speaking to Bloomberg's Oliver Crook, of course, who is at the G7. Let's bring Ollie in at this point. At the talks, of course, in Vaux-des-Aulnay, just south of Paris. Ollie, US Secretary of State Marco Rubio now in France. You told us earlier he landed, at 2 a.m. or something? What is the message? What does the US want from its allies, from its G7 partners, in terms of support for this conflict that they started against Iran?
Yeah, I mean, I think that is the question for many of the foreign ministers here, because we've heard a lot of sort of ideas articulated by the President of the United States saying that NATO is sort of a disappointment, that a number of G7 allies are a disappointment, but they haven't articulated necessarily very specifically in clear terms what they want from those allies. So Marco Rubio is now currently in this room just here behind me with a number of foreign ministers of the G7, including, we'll say also with an incredible note on this trip, which is the Saudi foreign minister, also of Brazil and India, all having discussions today. And I think for those allies, it is to get an idea, a clear idea, and a sort of articulated, concrete idea of what the allies can do to help the United States, but then also what their view is on the war in Ukraine. For the Europeans, that is, of course, front and center, as you were hearing there from Kaja Kallas, whom we spoke to yesterday, trying to link these two wars with the reports of the Russians delivering intelligence and potentially drones to the Iranians, and really saying that these really makes a clear delineation of where the battle lines are. So for Marco Rubio, it is going to be trying to enlist some of these Europeans, these G7 countries, to try to help in some way on the Straits of Hormuz. We should say that yesterday we heard from the Secretary General of NATO, Mark Rutte, saying that there is a coalition emerging of 30-plus countries, a coalition of the willing to try to aid some of the passage of naval vessels in the Straits of Hormuz. But the real question is, at what point are those nations willing to help and in what capacity? The people I've spoken to here are not willing to join a sort of kinetic, active military operation. We've heard from Emmanuel Macron that these are more sort of the day after plannings, but those are some of the conversations that are happening right behind me as we speak.
Yeah, if those G7 ministers do not want to help when it comes to the US in Iran, then what happens to Ukraine?
Well, that's the big question. And I think that what's interesting is that the Europeans are trying to link the war in Iran to the war in Ukraine, but the Americans are trying to link it in the other direction. We heard from President Trump yesterday out on Truth Social saying NATO nations have done absolutely nothing to help with the lunatic nation now militarily decimated of Iran. The USA needs nothing from NATO, but never forget this very important moment in time. So for the Europeans who have said this is not our war, this is a time for the United States to say that Ukraine is not our war. And in fact, that is exactly what Marco Rubio, the U.S. Secretary of State, said last night as he was boarding the plane in Washington, D.C., saying that a couple of leaders in Europe who said that this was not Europe's war, well, Ukraine is not America's war, and yet we've contributed more to that fight than any other country in the world. So it'll be something to examine that the president will have to take into account down the road. So again, for the Europeans, it's trying to link Iran and Ukraine and the Russians, and for the Americans, the same sort of thing. The real question is, at what point will European nations, will the G7 be willing to be involved in trying to open up the Straits of Hormuz? From all the conversations I've had here today, that is a day after, and we're still very much in the day of.
Okay. Oliver Crook, our chief Europe correspondent in France for that meeting. Thank you very much for the context.
OK, let's check back in on the markets, with European markets now off by 0.8%. US futures also negative right now. Flatlining on the S&P E-minis, Nasdaq 100 after a brutal day yesterday, currently down 0.1%. I say brutal, it was down a little over 2% by the end of the close. That's the context. Let's bring in Adam Linton for more context now from our Bloomberg Markets Live team. Adam, we're seeing a sell-off in bonds, yields are up, a sell-off in equities again. Futures have pointed higher. That is not the story that we're seeing in the session today, and US futures currently pointing lower. What is your assessment of how markets are trying to get to grips with this new deadline that President Trump has imposed and the potential risks over the weekend?
Yeah, definitely. So I think, we did see upside in stocks initially, when I walked in the office, but it definitely did look out of place with the price action we've seen in the bonds markets. We've kind of seen those brought a bit more into line now. But as you mentioned, there was that deadline extension, which at first glance is a positive for the market. But ultimately, whilst there may not be any near-term attacks on energy infrastructure, it doesn't do anything to get the Strait of Hormuz open. If anything, it potentially defers that. And then concerningly, we saw from Trump, that the Strait of Hormuz doesn't even matter to the US. We saw him reiterate that. And whilst this deadline does allow scope for talks, we've seen how far both sides are apart this week. Iran wants reparations, wants control of the Straits of Hormuz. And then at the same time, you've seen the US amassing troops in the Middle East, or reports of more troops. And then you've also seen Israel this morning continue to attack Iran. So, there's still not really lots of positives to the markets to trade off, despite that headline yesterday. And at the moment, we're just kind of following the trading patterns that we've seen throughout the conflict. People don't want to be taken on risk heading into the weekend. Neither the Stock 600 or the S&P 500 have closed higher on a Friday into the conflict. And throughout the conflicts, we've seen a lot of escalation over the weekends. So it makes sense for traders to be taking down risk ahead of that.
And Adam, I'm looking at the Spanish CPI numbers that came out at the top of the hour. Actually lower than expectations for March, both year-on-year and month-on-month. Where does it leave the outlook for the ECB? We've had lots of ECB speak this week. We've talked about the comments from Lagarde to the Economist. Are markets pricing about right when it comes to their outlook, do you think?
I think there's still just so much uncertainty. So, yes, this Spanish inflation release is of note, but it's early days. And then for Spain specifically, there's a huge caveat because they've got this absolutely massive support package of about 5 billion euros, which Bloomberg Economics estimates it could shave about 1 percentage points of inflation in 2026. If you compare that to France and Germany, which are expected to take much more targeted approaches, then Spain is ultimately a bit of an outlier. So we'll see what the full Eurozone-wide release says on Tuesday. But again, it is very much early days at this stage. And we saw from Lagarde early in the week, they want sufficient information before they take action. And we actually get another inflation report just hours before that April decision. So in terms of what we'll actually learn from how the data's shaping up and what the ECB reaction function will be, this next week probably won't provide too much more colour beyond what we already have.
OK. Adam Linton from the Bloomberg Markets Live team, thank you very much for that update. Well, Tom, we're nearly at the weekend.
The weekend. Let's tell you what's on the agenda then for the weekend, as you maybe look for some time to kick back and relax. It's NCAA March Madness. That continues stateside. Also in the US, the Miami Open Finals. That would be good to watch. F1 Japanese Grand Prix is also happening, of course, in Japan. Some excitement on the track. And when it comes to what's happening with Disney. Disney Adventure World, opening in Paris. Lizzie's booking her flights or train trip there already. Also worth noting, daylight saving times, 2026.
Is that another
Clocks
hour in
change.
bed or less?
Less, 1 hour
dear.
less.
Just what we want.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
President Trump delays U.S. attacks on Iran's energy by 10 days, claiming the two countries are negotiating, while Brent crude is on course for a record monthly gain. China retaliates with trade probes against the U.S. ahead of President Trump's visit to Beijing in May. Plus, the U.S. Senate forges a path towards ending the partial government shutdown. Lawmakers under pressure to fund the Department of Homeland Security with record queues at airports across the country. Now, happy Friday, everyone. It has been certainly a very messy week on the markets. When you look at markets overall right now, look, risk sentiment, we started actually, on the tail end of Asia was a little bit better, but risk sentiment once again souring pretty fast in European trading. There's a couple of things we need to watch out for. Of course, is everything to do with central banks. But I think traders are feeling a little bit lost on where they go next, which is why there's this volatility that we've seen. For example, Europe's economy starting to feel the pain from Iran's war. We're seeing that in some of the figures and some of the data. That's what the economic toll, I guess, of the Iran war hitting home in Europe is one of the reasons why we've seen also this downturn for European stocks. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Now, good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London. President Trump has once again extended the deadline for Iran to make a deal or face more attacks on its energy sites. Now, the Wall Street Journal reports that Tehran had not sought a pause in strikes. The president spoke to Fox News earlier.
I gave them a 10-day period. They asked for 7. You're going to say, oh, Trump's a terrible negotiator. They asked for 7, and I said, I'm going to give you 10. Because they gave me ships. We talked about the 8 ships, the president that I talked about the other day. But they asked for 7, and I gave them 10. You got 10 days, and they were very thankful about that.
Well, let's bring in Laura Davison, Bloomberg's Deputy Washington Bureau Chief. Laura, the extension allows more time for talks, but do we even know who's talking to who?
We don't. This is still continuing to be a very nebulous process. There are mediators involved, both in Pakistan and in Egypt, who have been sort of talking with both sides, but it's unclear that there's any direct talks happening with Iran and with the U.S. Trump now has given 3 different deadlines, a 2-day deadline, a 5-day deadline, and now a 10-day deadline to extend these talks, which indicate that he is not super keen on following through on the initial threat that started all of this, which is striking energy infrastructure sites within Iran. Those would have long-lasting problems for the region that would extend long beyond this conflict. So that appears to be a bridge too far. But whether there is a peace deal or at least a ceasefire deal imminent does not at all seem clear. And Trump's continuance to extend those deadlines suggests that the U.S. is not confident that something's going to come together imminently.
So, Laura, the delayed timeline also gives the president extra time to amass extra forces in the region.
Yes, this is, the U.S. has announced several successive waves of additional troops. Earlier in the week, there were about 5,000 Marines that were deployed, another 2,000 special troopers from the 82nd Airborne Division. The Wall Street Journal is now also reporting that the White House is considering an additional 10,000 ground troops. So all told, that would be about 17,000 additional forces in the region. It'll take some weeks for all of those folks to get there, and particularly if the U.S. decides to move forward with that last batch of 10,000. But this, suggests that the military options are not foreclosed at all if the U.S. is going to all of these lengths to bring new people in. This, of course, Trump has been talking about some sort of peace plan, a deal, but the military seems to be preparing for more expansive ground strikes.
Laura, turning to what's happening at home, the Senate has cleared a path towards ending this partial government shutdown, which has caused, and we were looking at the images, really lengthy airport delays.
Yes, this is a deal that passed in the middle of the night in the Senate. It will then have to go to the House and to President Trump for his signature. This would essentially open up the airport security and make sure that those folks get paid, which have led to historically long delays at airports. People waiting 4, 5, 6 hours to pass through airport security. It could still take some days, if not weeks, for this deal to get passed. But it would mean that the U.S. government would be operating largely with a budget intact. I'll note this deal does not fund ICE and Border Patrol. The Republicans and Democrats decided to separate that out and fund that at a later date. However, most of those agencies are still continuing to operate at a certain level because they have extra funds that are outside of what Congress needs to appropriate.
Laura, thanks so much. Laura Davison there, Bloomberg's Deputy Washington Bureau Chief. Now let's discuss the Iran war and the impact it's having on global markets. With us now, Henrietta Packman, Fixed Income's Chief Operating Officer at Allspring Global Investments, and Phoenix Callan, Global Head of Emerging Market Research at SocGen CIB. So thank you both for joining us. I think that the general theme is, how do you navigate all of this volatility? Phoenix, maybe let's start with you. Yesterday, we had a good panel on emerging markets. It's a bit of a nightmare, actually, especially in the emerging market FX space. I think it was only this week that we spoke to the Philippine president, who said, look, there's not worth spending too much money in propping up the peso, because actually what we're seeing will drive investors to the dollar, so it's futile. Is that across the board?
It's not across the board, but there are certainly many vulnerable economies, especially out of Asia, who are so sensitive to high oil prices and to shortages as well. They have very limited days cover in terms of the reserves that they have to kind of supply their industries. So they are in a severe stress, and we think that will be focused on a number of names in the region versus other parts of EM.
But you agree with his general assessment that actually it's not worth propping up right now, and what other countries would you worry about?
Yeah, so outside of the Philippines, we would worry about Thailand as well, India as well, South Korea and Japan. those are also huge importers of oil, especially from the Straits. They do have more reserves, but they are going to meet those kind of limits relatively soon. Lots of countries have less than 30 days of reserves left.
Henrietta, I mean, and again, how do in fixed income space, it's kind of the same. It's like there's just a lot of volatility out there. So how do you navigate that?
Correct. I mean, we're seeing incredible volatility day to day. And I think one of the striking things is just the velocity of the market moves as soon as we hear elements of news and how fast it changes. That being said, if you look over a sort of slightly longer period, there are some trends that are starting to appear. Obviously, we're sort of seeing higher rates. We are seeing sort of spreads ratchet up in a normalized fashion, but we are seeing those widenings.
Where do you see the best value in fixed income?
So if you look at what we've been doing, we actually started the year reasonably under-risked because of where spread levels were, and that set us in good stead. So we have been squaring off our portfolios, focusing on diversification, focusing on income, and also nibbling at certain areas of the market where we've seen spread widening.
I mean, to both of you, and maybe we start with Phoenix, how do you actually attach probabilities to outcome? Because we don't know if there's a ceasefire. We don't know how long is the ceasefire. We don't know about negotiations. So is it scenario planning without attaching real probabilities that guide you to what to do next?
Yeah, so it's a lot of scenario planning. Our commodities research team has put out lots of notes, very detailed notes on this. And their baseline scenario, which had been previously, de-escalation by the end of this month, as we move into April, they will have to shift that base case into not just kind of the mild alternative scenario, but the most bearish alternative scenario, where we are expecting for that paradigm shift in energy markets to occur. Brent prices go not from like the 100 type levels per barrel to 150 per barrel in April. So that's what we're expecting as kind of the next phase. And the market is going to drastically react to that because that's a whole new paradigm. And that's a world we haven't actually been in.
Yeah, and this again, are you expecting a repricing, which the market hasn't quite latched on? I don't know whether there's an optimism in the market, actually, that's quite difficult to get rid of.
I mean, it's a question of time, right? And we said that at the beginning, if it's a short event, then it's okay. But the longer it lasts, the more difficult it becomes. We're now pretty much a month in. We're starting to sort of hit some of the longer scenarios at this stage.
We also have, Phoenix, this headline in the last 20 minutes or so, China starting retaliatory trade probes against the U.S. I mean, the timing of this, giving President Trump is actually, going over to meet President Xi. What does that indicate?
Well, I mean, the timing in terms of like the May 14-15 kind of summit seems to signal that Trump wants some kind of ceasefire, de-escalation, some kind of deal reached before he has to meet with Xi and negotiate all of these trade and tariff things. So I think the market is latching on to that as thinking, okay, there is kind of something on the horizon to alleviate some of these pressures. But at the same time, we are seeing such massive amounts of U.S. troops gathering in the region, and that opens up the possibility for much further escalation.
Phoenix, I get asked actually almost on a, maybe not daily, but twice weekly basis, whether this is all a play against China, so that the Trump administration went into Venezuela to make China mad, whether they're doing Iran because they buy their oil and that would put them in trouble. I don't know how if there's any truth in that, but also how you see these two countries getting along in 2026 overall.
Well, yeah, and this year and for the years to come, there's been this huge theme around reindustrialization in the U.S., which means then that it's so much about the commodities play, securing resources, whether that's in LATAM, whether that's in the Gulf. The U.S. is going after it and wanting to get those commodities, those resources necessary for the revival of manufacturing. So I think this is a long-term theme.
Henrietta, what are treasuries today? Again, we were talking about a move away from U.S. assets. I don't know what this new war, but also geopolitics mean going forward.
It is an interesting discussion, and we have seen some diversification away from the U.S. That being said, it is a huge pool of assets, so it's actually quite hard even for international investors to sort of move away fully from the U.S. So I think it's what investors are doing with incremental allocation that they have, they may think twice before allocating to the US. And if you look at what's happening on the Treasury side, you've got a number of dynamics at play. Obviously, you've got what's happening in the Middle East at the moment, and that it's inflationary potential. So we're seeing some of that. We are sort of seeing issues on the budget side as well, right? So that is also playing on the Treasury piece. So a lot of dynamics coming into play.
I mean, which central bank has it hardest? I mean, no one has it easy, okay? So that's our basis. Yes. That's our starting point. But is it the Bank of England?
I think it probably is the Bank of England, to be honest. Why? Because the UK is such an open economy and is a little more subject, because of its size, to be pushed around by the markets.
And we've seen this huge move in gilts more than others. I mean, when does this really become problematic?
I think it probably already is problematic if you look at where levels are now. The economic growth picture in the UK was starting potentially to improve. It really didn't need the crisis that we have now. I think it is definitely not helpful.
I mean, I imagine both of you spend quite a lot of time thinking about inflation, right? Even if there is a ceasefire tomorrow, what happens to inflation? Because it takes a longer time to readjust some of the oil flows. We don't exactly know how much damage also there is in some of these infrastructures.
It's going to be quite different across the economies. For places like Egypt and Turkey, they are going to see huge inflation spikes in the short term because of how sensitive they are to commodity prices, to oil prices, and how that sensitivity actually has accelerated over the past 10 years because of their various devaluations. So some countries are much more vulnerable and will see much higher prices. CEE region relatively contained in terms of a short upward pressure on CPI, but broadly going to stay within the forecast range.
So obviously the energy side is the one that's sort of hitting the news the most. One thing we're also keeping an eye out on, and that's also the sort of question of time coming in, is the whole agricultural picture and fertilizers and what that means for the growing season. I think that is something that is sort of maybe a little more under the radar at this point in time. But I do think that the longer this stays, the more it becomes an issue.
And this is an issue across the board. Or again, are there countries that are more vulnerable, or how do you look at it from a credit perspective?
So obviously there's some countries that are going to be more vulnerable. I think it also depends, when the sort of growing seasons and the planting seasons happen. So you sort of have to sort of follow that across the globe. But it is something that is likely to start hitting in the next few weeks.
I mean, to both of you, there is a lot of people are overwhelmed by the pace of news. Is there a data point that you look at to give you a good indication of what we should be watching out for? Is it comments from the president of the Philippines or things like that really help you inform where the market is going that is different from previous crises?
Yeah, it's anecdotes about what's actually happening on the demand side and whether we have some kind of demand collapse in response to the supply shock. So I think those indications about what's actually happening with airlines canceling flights, governments announcing that Wednesday is going to be national holidays going forward, kind of thing, to curb energy consumption. Yeah, those things are quite important to see how countries are actually reacting.
Yeah, you, Henrietta?
So I think one of our focuses is really on the sort of portfolio construction and how we create portfolios that are going to be resilient and able to deal with volatility. I think that's one of our big focuses at the moment. So making sure that we've got income, so that we have that income protection, being thoughtful about what we're doing from a duration perspective, and as I mentioned, really sort of thinking about the diversification piece as well.
I mean, we're focusing so much on the war, and inflation. Does the partial government shutdown in the U.S. and the possible alleviation of that change anything?
It's helpful, right? But I think what we're also being careful about is thinking about other themes, right, that we need to have in mind in our portfolios. I'm thinking AI, and these are sort of longer-term effects. You can't forget about those, despite all the noise in the news.
And private credit. Thank you
and
both.
Private credit.
And thank you both for joining us. Henrietta Packman, Fixed Income Chief Operating Officer at Allspring Global Investments, and Phoenix Callan, Global Head of Emerging Market Research at SocGen CIB. Coming up, U.S. Secretary of State Marco Rubio joins his G7 colleagues to discuss reopening the Strait of Hormuz. We'll talk about that next, and this is Bloomberg.
is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francie Lacqua here in London. Now, U.S. Secretary of State Marco Rubio is in talks with G7 foreign ministers in France. Rubio says it's in the G7 nations' interests to reopen the Strait of Hormuz. Well, let's go back to Oliver Crook, Bloomberg's chief Europe correspondent, who's in Vaux de Cernay. Hi, Ollie.
Yeah, that's right, Francine. Before G7 foreign ministers who are gathered here, we should say the Saudi foreign minister is also here. The issue of Iran is front and center. And sitting behind me in that room, you have Marco Rubio discussing with the other allies. Standing right next to me is the voice of French foreign policy, is Pascal Confavreux, who is the spokesman for the French Foreign Ministry, the host of this meeting. Thanks so much for joining us.
Thank you.
In these conversations that we're having now with Marco Rubio, what information do you need to get from the U.S. Secretary of State?
You know, the G7 that was invented 50 years ago, a stone's throw away from here, has 2 goals, is to create a cohesion between the leaders and to have results. We want here a G7 of results on cross-cutting threats and also the big crisis internationally, namely Iran and Middle East, and second, of course, Ukraine. So that's exactly what they're going to discuss during the whole day behind these doors.
And Emmanuel Macron has been fairly deft in sort of hedging himself on the war in Iran, originally saying that the French will have no involvement, but being very quick to say that there should be a role of the French and others, coalitions, to open up the Straits of Hormuz at the appropriate time. We now understand there's discussions of more than 30 countries. Can you talk to us about how far those discussions have progressed and what this coalition of the willing is willing to do?
So it's the coalition of the willing is more for Ukraine, but you're right. It's also another kind of coalition of the willing. There are consultations taking place at the level of the chief of staff of the armed forces yesterday, including European members, regional members, and also extra-regional members states such as India or South Korea. These consultations are extremely important to see how such a mission could happen, being in mind that it would take place after the end of the bombing first, and not to be to be only in a defensive situation. So we are going on this first step. There is a second step, which are the discussions at the United Nations now.
And you say after the bombing, but of course wars don't necessarily end completely cleanly. What conditions would have to be in place for the French to join in on such a mission?
But we are preparing such a mission with all the willing partners, but we have made very clear that this war is not our war, and we don't want to be entangled into it.
And you talk about cross-cutting threats. There's going to be an effort in that room right now as we speak to link the war in Iran to the war in Ukraine, saying that the battle lines are clearly drawn and that Russia is on the other side of that line from the United States. Is that a successful message, you think, to the Americans?
But we think that there was an important cooperation between Iran and Russia. Iran has been also condemned and sanctioned at the European Union level for helping the Russian aggression of Ukraine during these last weeks and months. The Minister Jean-Noël Barrot has been part and parcel of this effort, and we have all reasons to think that this cooperation continues to exist between Russia and Iran at present, and that it can indeed hit assets that Iranians are targeting at present.
And I'd like to discuss the path forward for Ukraine, because we're reaching a sort of critical moment for Ukraine. There's a sort of fiscal cliff for the Ukrainians in terms of funding. That 90 billion euros has been blocked at the European level. There's now reporting that American hardware, military assets are being rerouted to the Middle East. How do you see the situation in Ukraine progressing?
So first, it's not what's happening in the Middle East that will make us forget what's happening in Ukraine. Second, if you look at the situation on the field, the Ukrainians are doing actually well. We all thought that they would be ended up in 4 weeks. It's now 4 years that their bravery is taking place day after day. And third, we stand shoulder to shoulder with them. The European Union is now by far the first provider of help, both economically or militarily. You said it. We have a 90 billion plans that is not adopted yet, but that will be, and we are totally sure of that, adopted in the days and weeks to come. And we will find solutions for the very short-term short-term needs that you are talking about.
And I also want to get your reaction to some reporting we've seen from the European foreign ministers' meetings, where we've been hearing that the Hungarians have been briefing directly to the Kremlin after those meetings, and there hasn't been really any sort of formal objection to that fact. Do you believe that that is the case? And if so, what should the Europeans be doing? What should France do about that?
Well, we take that very seriously. I don't want to make political comments about it. What we want to state once again is that there have been 19 packages of sanctions. Yeah. And these packages of sanctions adopted by the European Union, they have been adopted at unanimously. So you show how united also we stand, and united during the long run, because it's been 4 years that we've been into it now.
And I also want to get your perspective on how advanced the talks about nuclear deployment of the French nuclear umbrella. Obviously, there was a very big speech by Emmanuel Macron a couple of weeks ago in front of that very impressive submarine, talking about potentially deploying French nuclear assets to other European nations. How advanced are those conversations?
There has been a very good welcome by our colleagues of the member states of the European Union on that speech. It's called Advanced Deterrence, that was proposed by our president. And so these talks are now ongoing with 7 and 8 countries, and they are going in the right direction.
And you elicit the sort of birth of the G7 format was a stone's throw away from here in Rambouillet, as I recall, about 50 years ago. But since then, now we have the Trump sort of foreign policy that's sort of blowing up that multilateral sort of trade structure. Where do you see the sort of format of the G7 evolving in France as the president of that for the next period of time? What do you hope to achieve during that period of time?
More necessary than ever. To talk, to have these direct talks, even if we don't always have the same ideas. And so these moments like these, they can bring concrete results, one of which was announced yesterday, is the collective effort to fund the restoration of the dome of Chernobyl. You know that it has been hit by a Russian drone in 2025. It's a small hole actually, but it cost $500 million to restore. Yeah. So there is a common effort here to restore it, and it shows how dangerous this Russian aggression of Ukraine is.
Well, Pascal Favreau, thank you so much for your time. There is the spokesman for the French Foreign Ministry, who of course are playing as host to this G7 meeting here outside of Paris.
Ollie, thank you so much. Bloomberg's Chief Europe Correspondent Oliver Crook there, speaking to Pascal Favreau, France's Foreign Ministry spokesperson. Now, this is a picture for markets across the board. We did have a little bit of a downturn when it comes to European stocks. Stocks in general extending their route after China launched these trade probes into the U.S., adding to nervous sentiment driven by fears of a protracted war in the Middle East. I'm looking at global bonds. They're also extending their slump. Treasuries falling alongside them. The dollar actually a little changed. Gold gaining. Traders, again, fearing this broadening impact on energy supplies and oil prices, stoking fears of inflation spiraling that could force on central banks to tighten monetary policy. You can see S&P futures practically flat, as are NASDAQ and Dow Jones futures. Coming up, Iran drafting legislation to unilaterally impose fees on vessels seeking safe passage through the Strait of Hormuz. We have President Trump's reaction to that controversial draft bill. That's next, and this is Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top of the bottom, make the sushi shape the more beautiful. 3. Then, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. President Trump delays U.S. attacks on Iran's energy by 10 days, claiming the two countries are negotiating. Brent crude is on course for a record monthly gain. China retaliates with trade probes against the U.S. ahead of President Trump's visit to Beijing in May. Plus, the U.S. Senate forges a path towards ending the partial government shutdown. Lawmakers under pressure to fund the Department of Homeland Security with record queues at airports across the country. So the Iranian parliament is working on a draft bill to impose a fee on vessels seeking safe passage through the Strait of Hormuz. That's according to the semi-official Fars news agency. Now, the narrow waterway has been all but closed since U.S. and Israeli strikes on Iran began almost a month ago. President Trump was asked about the issue by Bloomberg's Anne-Marie Hordern.
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? I mean, they shouldn't be able to, but they're doing it a little bit. I don't know. Look, their capability is a lot less than it was 2 weeks ago. And with every week and every day, frankly, it gets less and less. All I can tell you is they're begging to make a deal. So let's see what happens.
Well, let's get more on the situation in the Middle East. I'm joined now by Jasmine Al-Gamal, Averos Strategies founder and former Pentagon advisor, and Paul Wallace, Bloomberg's managing editor for Middle East and Africa. So thank you both for joining us. Paul, what do we know? Who's negotiating with who? Because it's unclear, actually, and it changes quite often.
It's still pretty unclear, but the best we can say is that Iran and the U.S. are exchanging messages via Pakistan. Pakistan is essentially the main mediator at the moment, and the latest thing is Trump extending his deadline to, blow up Iranian power plants if Tehran doesn't take an off-ramp and accept a deal. He's extended that until April the 6th, so for another 10 days. Iran remains still very consistent in its message that it doesn't seek negotiations, and it's got some pretty sort of tough demands pretty much to even begin those negotiations. They include getting some kind of recognition that it controls the Strait of Hormuz. It wants reparations, and it also wants Israel and the U.S. to say they won't attack the country again once this conflict is over. Those are demands which I don't think the U.S. and Israel are likely to accept. So we're at an impasse at the moment.
Jasmine, I mean, do you think this is, again, because both sides are trying to, save face at home, or is it really that they just start from very different starting points, that the two, this is a fight for survival, and so they just want very different things?
That's right. I mean, what you're seeing right now is basically each side trying to set the stage for future negotiations. They're trying to amass as much leverage as they have so that when they inevitably sit down at the negotiating table, they're not operating from a position of weakness. So you see the U.S. trying to impose a lot of costs on Iran and vice versa. I think it's important to parse through the different objectives that Israel and the U.S. have, because they're not exactly aligned on what they want. Israeli objectives are much more long-term. They want the eventual complete capitulation of the regime. They want an entirely new structure in Iran. And as Prime Minister Netanyahu said, I think just yesterday, they eventually want the Strait of Hormuz to be completely bypassed, and they want new routes going through the Arabian Gulf and Israel. That's the way he described it. The U.S. doesn't think that long-term and doesn't necessarily want those same things. So when we look at just the U.S. and Iran, I think the biggest mistake, I'll just say lastly quickly, is that Trump keeps changing his deadlines. And I think Iran sees that as a sign of weakness on the American side. And in order to compensate for that, Trump may have to do something like military action over the weekend to restore the balance.
Yeah, what do we know the U.S. and Trump administration now want? I mean, I don't know whether the price of oil going up by so much was a shock. And so they just need to find a solution quick.
Yeah, they do. I think Trump, he needs the Strait of Hormuz to be reopened. It's as simple as that. Brent today is trading at about $110 a barrel. We have analysts at banks like Macquarie saying, if this strait is not reopened by June, then we're going to $200 a barrel, which would presumably cause chaos with the global economy. We're already seeing big signs that Western economies are being hit hard through PMIs from this month, March, and all that. So Trump needs Hormuz reopened. And just a note on Iran and its stance, that it's still taking a pretty hard line even on negotiations. Attacks continued this morning. It's fired missiles at Israel. It's fired missiles and drones at Saudi Arabia, Bahrain, Kuwait, and Doha in Qatar got its first missile alert today for days. So the war continues as normal for now.
Yeah. Jasmine, I mean, you were saying that something could happen this weekend. I mean, is this boots on the ground? Like, how would President Trump restore this balance?
Well, I think we have to prepare for all options, right? I mean, there are options all the way going from just continuing to threaten to forcefully open the Strait of Hormuz. Interestingly, you've seen the UAE over the last few days steadily release statements and op-eds and making it clear that the UAE is now firmly in the camp of using force against Iran and trying to neutralize the regime's capabilities. But there are also possibilities for boots on the ground. There are senators that have just listened to classified briefings in the U.S. that came out and said, I am not authorizing boots on the ground, and you should be really worried about this. US. So I think what's important, we don't necessarily know which way Trump will go, but I think we have to be prepared for a scenario where he does put boots on the ground, even if it's not the most likely scenario.
Do we have a better understanding now of how many weapons and drones Iran has access to, or how fast they can build them? Because this took everyone by surprise.
We do know that they're capable of replenishing at least their drones and some of their ballistic missile program, although it's a timeline, it's competing timelines. How fast can the U.S. and Israel degrade versus how fast Iran can resupply? But it's also important to note that Iran hasn't fully activated all of its options yet. As I think we mentioned before when I was here last time, the Houthis are still fairly quiet. You know, they could come out at any minute, and Iran has not played all its cards yet. Iran playing its cards has less of a cost for them domestically. Obviously, it's not a democracy. They don't answer to their people, than the U.S. playing more and more cards. So I think also time is not on the U.S.'s side if escalation is where we're headed here.
Paul, I don't know what to make of the fact that Iran is drafting this law to introduce tolls for the Hormuz transit. I mean, if you're physically in control of the Strait, I mean, do you really need to draft a law?
I think it's hard to tell exactly what Iran means by that, but I think in whatever the case, it's a show of confidence on the part of Iran. I mean, it would be a strategic disaster for the U.S. and the West and the Gulf Arab states if Iran ended up with any kind of control at all over passage of commercial vessels through the Strait once this conflict is over. I mean, that would be a nightmare scenario for all sorts of reasons. But Iran, at the moment, probably feels that this is a negotiating tactic to put the U.S. under more pressure. It's hard to tell whether it literally thinks it will be able to treat the Strait of Hormuz like like Egypt does with the Suez Canal, for example, after this war is over. But I think it just shows how confident Iran is, at the very least, that for now it can keep the Strait closed.
What's the probability, Jasmine, of a diplomatic solution?
Well, it obviously would be the best way. The best scenario here, best case, is for Trump to just declare victory, negotiate some kind of solution between the U.S. and Iran to keep the straits open, and just call it a day and take down the temperature. The problem is that if he does that, Iran comes out of this declaring complete victory, and the Gulf states remain vulnerable because Iran maintains the capacity to harm them or even just to intimidate them moving forward. That's what makes me think that we're not done just yet before we head into negotiations. I think Trump needs to restore that balance of power between the U.S. and Iran, protect his Gulf allies moving forward into the future, gain some strategic I can't think of the right word, sorry, but make sure that Iran doesn't have the ability to intimidate them moving forward. He has to get that guarantee somehow, and then they can go to negotiation. So that's what makes me think we're not over the hump just yet.
Yeah, and Jasmine, it kind of goes to a lot of our reporters are trying to figure out how this new Ayatollah will be different to the previous one and whether he's more of a hardliner.
Exactly. I mean, given his comments in the past and things, there is an argument to be said that yes, Mojtaba Khamenei is more conservative, more hardline than his father Ali Khamenei, who was assassinated on the first day of this war. It's hard to tell his thinking at the moment. He hasn't been seen in public at all since the war began, and even since he became supreme leader. The U.S. says he's injured, perhaps badly. So it's hard to tell. The Speaker of Parliament seems to be calling a lot of the shots at the moment. But I think, going back to what Jasmine said a bit earlier, time is on Iran's side. That's a crucial point. They see this as an existential fight. They are literally fighting for the survival of the Islamic Republic as they see it. And in that case, time doesn't really matter. They can keep going for as long as it takes to survive.
Jasmine, who do they have left in terms of allies? So Russia, we understand maybe there's some intelligence sharing, but unclear to how much more Russia can do given their own situation. North Korea, I mean, could they get involved in this?
I don't think you're going to see countries really getting involved. I think right now every major actor realizes that the temperature needs to be taken down. This is now affecting the entire global economy, you know, every city, every household in the U.S., to China, to Europe. This is in no one's interest to continue, except for Iran saving its regime. And so I think what you're going to see, the question is not how many allies Iran still has, but whether countries in the region, international allies of the U.S., can get the U.S. to start taking down the temperature and moving towards negotiations. Iran is going to be isolated no matter what, diplomatically, but that doesn't really matter in the situation that we're in right now. It's about who can convince the U.S. president that this is not in anyone's interest. He's going to have to end this war in a way that is not necessarily in favor of the U.S., but he's going to have to do it. Who can convince him of that remains the million-dollar question.
Well, price of gasoline of $5, that'll convince the president, right? I mean, we're almost there. If you look at, we had a Macquarie, you know, saying like, look, the price of oil could go to $200, but I think gasoline is above $4. This is problematic for him.
It's very problematic when you're heading into midterms in November, and with the economy such a big part of how Americans will vote. And, you know, I know California has its own issues with taxes and things, but we're above or very close to $7 a gallon there. So, you know, this is not what Trump wants. He is you know, throughout his time in office during term one and even the second term, he has gone on and on about gasoline prices. He said that they were too high under Biden, and he's taken pride in the fact that at least until this war, he kept them much lower, or they were much lower under his presidency than they were under Biden. That's now, you know, that's completely reversed. It's a big issue for him.
Okay, thank you both for joining us. We have a wonderful blog that I know your team are working on, and in the blog just minutes ago saying that actually Iran has also turned back 3 container vessels in Hormuz. Thank you so much for joining us, Jasmine Al-Gamal, Averroes Strategies founder and former Pentagon advisor, and Paul Wallace, Bloomberg's managing editor for the Middle East and Africa. Now, Ukraine risks running out of money to pay for its defense against Russia within 2 months. That follows Hungary's veto of a 90 billion euro loan and spat over the IMF's latest aid package. The EU foreign policy chief Kaja Kallas urged the U.S. to support Kyiv by capping oil prices, which are boosting Russia's war chest.
Clearly, these two crises, two wars are linked. If you hear about the intelligence that the Russians are providing to Iran so that they could attack Americans. So, you know, the response of the Americans should also be not to help Russia. And there it is important that the oil price is capped and they don't have the funding to actually go on.
And do you think those reports about that intelligence sharing and potentially drone deliveries we're talking about potentially to Iran from the Russians, does that make the sort of battle lines a lot clearer for the United States, and does that then put the United States on the European side of those lines?
Well, it's very clear for us where the lines are, and clearly, I mean, Russia is not on the side of Americans. That's very clear. So there should also be pressure on the Russians because they are providing drones, but also intelligence.
Kaja Kallas there, the European Union policy chief. Now, NATO's European allies and Canada both raised defense spending by 20% for a second straight year in 2025. The NATO estimate reveals a total increase of $574 billion after yielding to the U.S. president's demands and responding to escalating threats from Russia. Well, Secretary General Mark Rutte says it reflects a shifting balance within the alliance.
For too long, European allies and Canada were over-reliant on U.S. military might. We did not take enough responsibility for our own security. But there has been a real shift in mindset, a collective recognition of our changed security environment.
And President Volodymyr Zelensky says Ukraine and Saudi Arabia has signed a defense cooperation agreement focused on technology sharing and investment. During a surprise visit to the Gulf, Zelensky offered Ukraine's specialized anti-drone expertise to combat Iran's drones. Now, in exchange, he's asking for support in securing supplies of critical U.S.-made missiles. Now, traditional allies are seeing the U.S. under Donald Trump as a less reliable partner. They're looking to hedge their bets by way of China. Here's a preview of this week's Bloomberg Originals documentary.
There's a phrase which China's President Xi Jinping likes to use. The world is undergoing changes which have not been seen in 100 years.
Now these changes have appeared to arrive, but they're delivered unexpectedly by Donald Trump.
Epic fury. I said I like that name.
Amid the noise of war, the stance of another major power is speaking volumes.
中方敦促各方立即停止军事行动。
The US is demonstrating itself to be a force for instability in the world. And that gives President Xi and China a chance to present themselves as the adults in the room.
China is happy to see the United States getting bogged down in the Middle East. China has long viewed the existing order as being too dominated by the US, so Trump's challenges to that order actually presents Xi Jinping a very good opportunity, and the question is whether Xi is ready to seize it.
In many ways, he already has.
Trump's first trade war made China realize that dependence on the US is a very dangerous thing. China's exports to the US fell about 20% last year, but in the end, China had a record trade surplus hitting $1.2 trillion US dollars.
China deliberately tried to diversify away from the US as a consumer base.
So, do Trump's actions strengthen China or expose it to more risk it cannot control?
And you can watch the full piece online, including the Video Hub, Bloomberg Video Hub, and YouTube. Now, coming up, we'll talk to Amy Gower, metals and mining commodity strategist at Morgan Stanley, as gold slumps almost 17% since the Iran war began. That's coming up next, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Gold has fallen almost 17% since the Iran war began nearly a month ago, moving in tandem with stocks. Now, spiking energy prices have raised the risk of inflation, raising bets that central banks will leave rates on hold or even hike them. Now, adding to the downward pressure, Turkey's central bank has offloaded more than $8 billion worth of bullion. Well, Amy Gower, metals and mining commodity strategist at Morgan Stanley, joins me. Amy, thank you so much for being with us. I mean, there's a number of factors, right, that could lead to explain the gold trade in recent years. Central banks diversifying reserves away from the dollar, investors seeking alternatives to bonds. But then in the last couple of weeks, it's really tricky also to understand what gold represents.
Mm-hmm.
Yeah, look, I think we've had a shock clearly here with the conflict beginning, and I think it's not unusual to see gold initially pull back when we do get these shocks. We saw that in COVID, we saw that at the beginning of Russia-Ukraine, we saw this in Liberation Day, and this is where gold's liquidity works against it. You know, it is your most liquid asset. It is what you sell to free up cash, whether that's to pay margin calls or reallocate elsewhere. It does also look like we've had a bit of technical selling. You know, we've definitely found support at key moving averages, for example. We bounced off the 200-day, so that suggests that there's perhaps some technicals behind this. But I guess the difference for this shock versus maybe, say, Liberation Day is that what it means for inflation and central bank actions around interest rates. And I think, look, here we have seen the pricing on the Fed change from expecting rate cuts to rate hikes. We know gold is sensitive to that. We've had the dollar creeping higher as well. And if we remember last year, we did have arguably safe haven demand for gold, but with a weakening dollar, and that's highly unusual. So we're getting kind of the reversal of that as well.
So it doesn't fundamentally change your view on what gold could become?
I think, look, gold should still be that real asset. We should still be thinking about, you know, I think that shift in investor demand for real assets that took place last year, as you know, particularly with concerns around fiat currency debasement. I think that narrative is still there, but I guess at the moment we do have to deal with some of the changes. And one thing I would say is, if you say your two big buckets of gold holders or gold buyers have been central banks and exchange traded funds, look, we can come on to Turkey and the sale, but the exchange traded funds they can flip from selling to buying and back again. You know, in 2024 they bought zero. In 2025 they nearly bought as much as the central banks, and so they are quite sensitive to what the Fed is doing. And I'd say if the narrative does start to become that we are at risk of a hike or maybe a longer pause, you might see that liquidation coming through.
I mean, could you see more central bank selling of gold?
Yeah, look, it's always tricky to say. I mean, Turkey, obviously, it's a large amount, 60 tons of gold. You know, central banks collectively bought about 860 last year. I think already we were seeing a slowing pace of buying, so then it doesn't take much selling to start to weigh down. There were some discussions, I think, in Poland around as well, a more active management of their gold reserves. I mean, Poland was the largest buyer last year, so if they started to sell, that would obviously have an impact as well. I don't think anyone else has said it as of this point, but definitely I would expect a slower pace of aggregate buying.
And Amy, I mean, I guess apart from, you know, we focus so much on oil and gold as an asset, is there anything else in that space that you know, worry or that hasn't behaved the way that we thought it would in the mining world?
Yeah, so look, I would say base metals are having a sort of a push and pull factor as well, and maybe aluminium is the one that stands out here. So aluminium is the one where everyone's first attention was drawn to what could be disrupted by the Middle East. So the region is about 9% of aluminium production. A lot of that leaves as exports, and at the moment, obviously, that anything stuck behind the Strait of Hormuz is not really making its way out. The region is also very dependent on imports of alumina and bauxite. So again, are we running close to critical levels on those raw materials? So aluminium initially had a lot of support both to the price and also the regional premiums. That's now come off a little bit because we're starting to worry about growth. And so I think that's where the base metals have this push and pull. At the moment, it feels like aluminium is still outperforming the rest of the complex, which I think makes sense. But we'll have to see, you know, where these growth worries go.
I mean, I get it, because we're starting to think about possible demand destruction, right? If everything goes, what data points do you look at first to have a sense of, is it some of the data coming from China or elsewhere, to understand where some of these base metals go?
Yeah, look, I think China's the place where we typically get the most data. I would say actually on copper, that's been looking fairly encouraging with this pullback. So we've seen copper inventories in China pulling back faster than normal. We've seen physical premiums in China jumping. So it does actually suggest maybe that they've been buying the dip a bit here. I guess elsewhere is maybe where we'd see more of a slowdown. But what I would say is this is not 2022, which is where we had a very big demand shock. But part of that was exacerbated by the supply chain was very well stocked. We'd had the COVID supply chain shock. Everyone had started to hold a little bit more, that just in time to just in case. And then as interest rates went up, the cost of financing that went up and everyone destocked. I would not say we're there. I think if anything, this could actually prompt that restocking cycle when, you know, things have settled, because suddenly everyone's realized how vulnerable their supply chains can be.
I mean, how fast could that happen? Is it impossible to say at the moment?
I think it's difficult to say, and again, it's going to depend on interest rates because we have to think about the cost of financing. But I think, particularly as we go into 2027, I would expect, you're going to have to start hearing about stockpiling, and even at the government level, not just at the country level, company level.
Company level. Amy, so interesting. Thank you so much for joining us. Amy Gower, the metals and mining commodity strategist at Morgan Stanley. Now, again, if you look at everything that we've lived through this week, it's stocks. We've had a great roundup from Amy on everything that metals have been doing today. Stocks seem to be extending their rout after China also launched these probes into the U.S., adding to a nervous sentiment driven by fears of a protracted war in the Middle East. Global bonds extending their slump. Treasuries actually falling alongside them, and the dollar little changed, with gold gaining. If you look at traders, if you look at S&P futures, Dow Jones and NASDAQ, they're pulling lower a little bit more than they were just 15 minutes ago, down 0.2%. And it's really this fear of this inflationary spiral that could force central banks to tighten monetary policy that we're on the lookout for. Up next, it's Bloomberg Surveillance, and this is Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film? Essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
We're at a world now where there's heightened uncertainty.
If we have a peace deal, then we could have a relief rally in markets.
The market has been volatile during this period, but not a tremendous amount of downside yet.
The market is pricing in that there's going to be a resolution.
We are going into an area of really uncharted waters at this point.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday, extending the uncertainty. President Trump says he's extending talks with Iran for 10 more days as the energy market is considering a close straight until at least April 6th. It's leaving oil at triple digits, leaving bond yields at the highs of the year. The uncertainty persists.
So what have we learned this week? It has been a tumultuous week, and one potential takeaway could be that the Truth Social diplomacy plan is losing its punch when it comes to propping up markets. Yesterday, we got this Truth Social post that you were talking about from President Trump, talking about postponing that deadline. We saw the worst one-day sell-off before that posting in the S&P since the war started. Now we're still seeing equities lower. We're still seeing bond yields higher. We're still seeing oil prices higher. That is the takeaway for me.
This is the problem. We've replaced near-term escalation risk with an extension of the uncertainty. Persistence is the problem this morning. If the Strait closure persists, triple-digit crude persists. If that's the case, you don't need oil to keep going on higher. You just need oil to stay at these levels to cause sufficient problems, which is why if you check out the bond market this morning, 2s, 10s, 30s, two-year yields back to where they were Monday morning before that post on diplomatic talks. 10-year bond yields higher than they were on Monday morning.
And when you take a look at Japanese two-year yields, they're at the highest levels going back to 1996. It's not just a U.S. bond market move. It is a global bond market move as they reckon with the potential of rate hikes coming from central banks around the world in response to oil prices remaining where they are. We keep talking about asymmetric risks. The longer this goes on, the more of a sea change people see with respect to inflation, downside risk to growth.
And we're tracking the troop movement. This from the Wall Street Journal. Check out this report. The Pentagon looking at sending up to 10,000 additional ground troops to the Middle East to give President Trump more military options. That's hanging over this market as well.
Absolutely, because if those 10,000 troops are sent to the region on top of the Marines and on top of the already deployed soldiers from the 82nd Airborne Division, that would signal to this market that this potentially would be a longer, more protracted war, which is why potentially you can see crude stay higher for much longer. We should note this right now is just a report, but it does show that the president is keeping his options open.
It just eats away at confidence. It eats away at the Fed's easing bias. It eats away at potential economic growth.
Why send troops there if you aren't going to use them? If you have this hardening line from both sides, and this is already going on for a longer period of time, and ships are not getting through the Strait of Hormuz, people are pricing in a slightly new regime, which is what you're seeing coming through the bond market, which potentially could be the real signal that people need to pay attention.
I think what's going on the Strait, obviously, is of critical importance to this White House. The president talked about it a lot yesterday when I was in the cabinet meeting. But then this morning, you see Iran says that the IRGC turned back 3 container vessels through Hormuz. So you think potentially they're allowing more individuals to come in, more vessels to come in if you pay the Tehran toll. But right now, this morning, they're turning back some vessels. And this is a massive problem for this White House.
Equity futures this morning down by about 0.1% on the S&P 500. Coming up this hour, Ross Kostrick of BlackRock as the president extends talks. Kevin Book of Clearview Energy Partners with crude still pushing higher. And Joe Davis of Vanguard with policymakers warning of rising inflation. We begin this hour with our top story. President Trump extending talks with Iran for 10 more days. Leading our coverage out of the region, Bloomberg's Jumana Basechi joins us now from Dubai. Jumana, it's another 10 days of uncertainty.
Yeah, well, you know, on first blush, this actually came as a relief to the nations in the region. The strikes on infrastructure, on key civilian infrastructure, both against Iran, but also potentially in retaliation against the Gulf states, pushed back by 10 days. So that was the, I would say, short-term reaction. But beyond that, there's still a lot of skepticism about the state of these talks, whether they're actually happening, whether the Iranians do want to engage. And the Iranians, at least rhetorically, are not signaling that any discussions are taking place. And in fact, the Iranian Foreign Minister Abbas Araghchi gave an interview to local TV yesterday, and he said that they're not engaged in any talks to end the war. They don't have plans to engage in those talks. But the U.S. had sent messages to them via Pakistan, which is in line with the reporting over the last couple of days. But there is no sign whatsoever that this in-person summit that people had been talking about is set to take place. So that is the diplomacy angle. But at the same time, in light of what you were just discussing, I think we really are going into a critical weekend in terms of the mobilization of troops that the U.S. is amassing in this part of the world. And we've been reporting over the course of the last couple of days that there are 2 Marine expeditionary units making their way. Our expectation is that the first unit will arrive in a couple of days. The next unit should arrive in mid-April, just to give you an idea of the time frame here. Wall Street Journal reporting overnight that the Pentagon are also considering sending 10,000 troops alongside infantry and key vessels as well. And so the takeaway from all of this is the U.S. is preparing for perhaps another stage of escalation. And you've got to assume that once all of this new military assets, these new military assets are deployed, they are going to be in striking distance of Iran or Karg Island, which is the key export island, or there's going to be some form of an attempt to forcefully reopen the Strait of Hormuz. There are little islands situated nearby as well. So the overarching question as we go into the weekend perhaps is less about whether diplomacy is going to yield anything, but actually what the U.S.'s plans are on the ground, if there is a plan.
Jumana Basenji out of Dubai. Jumana, appreciate your time. Stay close. No doubt we'll get some news throughout this morning. The base case at the start of this war, it won't matter to markets if it's days and not weeks. Remember that? And then it was weeks and not months. And now here we are at the 1 month marker and a new self-imposed deadline of April 6th. So we'll be talking about this into April based on this guidance.
Prediction markets are saying that through the end of April, this could potentially be the reality. And the issue is, and people are watching this, you don't just open the Strait of Hormuz. You don't just say, OK, green light, go ahead. This is the issue, the lag time. And so as people try to price that in, it seems like another number of asset classes are really starting to respond.
It's the reality of production in the region. The longer some of the production is shut in, the harder it is to ramp up production coming out the other side.
And that's why Macquarie this morning is out with a note saying if this is protracted, it lasts a lot longer. You're looking at $200 a barrel when it comes to oil. We actually know and had reporting from our colleagues in Washington that the Treasury Department was modeling out what the impact would be for that number, $200. So that is another key threshold everyone is watching.
Let's get to the view on Wall Street this morning. Russ Kostrick of BlackRock writing the following. While our base case is no recession, the energy shock suggests a moderation in near-term growth expectations. Russ joins us now for more. Russ, welcome to the programme. You and a team have been de-risking. Where and what in?
Good morning, Jonathan. We've been de-risking across the board. We've really been getting closer to benchmark in our equity positions, closer to benchmark in duration. We've been bringing down some of the factor risk in the portfolio. And there are a couple of reasons for that. The obvious one is we don't know how long this is going to go, to continue. I think you used exactly the right word a few moments ago, persistence. And the longer this persists, the greater the risk to inflation, the economy. But the other reason for de-risking is that there really aren't any hedges in this context. In 22, the dollar actually was an effective hedge against the sell-off in equities. Last decade, treasuries were providing some downside when there were concerns about growth. In other circumstances, gold has been working. Nothing is working right now. So really the only thing you can do within a portfolio, other than making some adjustments at the stock level, is to bring the risk down.
I often say, in moments like this, the bonds don't work, they make things worse. Yields right now up again by 4 basis points for us. 10s at 4.45, 2s at 4%. Lisa and I yesterday spent a lot of time on a week 2-year auction, a week 5-year auction, followed by a week 7-year auction as well, Russ. What is happening there? What's behind those moves?
So this, to me, is actually maybe even a bit more interesting than what's going on in equity markets. It's very easy to understand. You have an oil shock, higher inflation, hit to growth, and what's happening with stocks. The bond market, I think, is more nuanced. Obviously, the bond market is reacting to what will be an increase in headline inflation. That said, as you point out, I think most people realize higher energy, not just oil, but natural gas, higher food prices, higher fertilizer prices, all of which leads to an increase in headline inflation. But the problem is, one, that doesn't necessarily flow into core. And two, it is also a drag on growth. And it's happening at a time when the labor market is already a bit soft. So the notion that you just want to keep selling bonds into this, to me, that's less obvious. And I do think at some point, if the concerns about growth continue to build, if we do have $100 or higher oil for a prolonged period of time, there is a question about at what point you want to start bringing bonds back into your portfolio as a hedge against weaker growth, which is going to be another risk we're going to contend with.
Part of the reason why it's been so hard, Russ, to get a handle on when that point is, when people should step in and buy duration, is it's unclear exactly what's behind the sell-off. Is it technical? Is it a question of central banks that are selling what they can to raise money for possible fiscal stimulus? Is it a potential concern for a fiscal response to any kind of slowdown in the future? What's your take on this?
So I think it's a great question. To my mind, one of the things that's clearly going on is a pricing out of what would have been a number of rate cuts from the Fed and pricing in a greater possibility of hikes, particularly from the ECB. So is the front end of the curve is adjusting. You're seeing that movement throughout all of the yield curve. But again, if we're going to be in an environment where $100 oil persists, and I think, you all raised a good point a few moments ago, it's not as if oil is going to go back to 65 the second the shooting stops. There's been damage to infrastructure. There are questions about how long it takes to open the Straits of Hormuz. There is likely to be a war premium or a risk premium embedded in oil for many, many months. So if you're going to have that period of prolonged higher energy and all the knock-on effects, you've got to start to bring down your growth expectations, most of which were high coming into the year. And at some point, that probably does suggest bringing your duration up further.
Which is something that I know others, including JP Morgan, has been thinking of doing. Given all of this and given what we know in terms of the prolonged conflict, do you think that right now we're facing a market that is overly complacent when it comes to the growth shock that's coming down the pike?
I don't think it's overly complacent because I do think you've already seen a fairly significant adjustment. I also believe that, at least in the U.S., I think the situation in Europe is certainly more serious given their exposure to higher energy prices. I think the U.S. can probably survive 80 or 90 oil, still have a year when growth is positive. Of course, the difference is going to be that we're not going to get, or we're less likely to get, the type of above-trend growth that investors were expecting just a few months ago. And if you look at what the equity market has been doing, it's actually responding to that. The rotation that dominated back in late 25, early 26 was all about the broadening out. You bought cyclicals, you bought value, you bought international stocks, you bought small caps. To my mind, those trades were predicated on above-trend growth. As you start to price that growth out, you're seeing a reversal of many of those trends. Investors have been looking for more defensive parts of the market. And interestingly enough, they've also been looking at tech, at least on a relative basis, as holding up better in a world in which economic growth is not as much of a tailwind.
Hey, Russ, always got to catch up. Russ Kostrick there of BlackRock. Certain pieces of tech, maybe, but the Nasdaq 100 down almost 10% from the highs of the last year or so, and some individual names have been hammered. Microsoft down some 30% from the highs of last year. Meta hammered yesterday, down 15% so far in March.
That was fascinating. It's frankly breaking below a lot of the technical trends, leading some people to say this has legs. Is it because of disruption coming from new technology, whether it's overseas or domestically? Or is it the lawsuits with Meta coming under pressure for some of its social media controls? Tech is maybe the haven, but it depends where you look in tech, and that is an increasingly complicated story.
It's not just the war you've got to track, it's the situation with technology, AI disruption, etc., and this in private markets. Is this a flex from Oaktree? This headline we've just seen. They'll meet 8.5% of private credit fund redemptions in full.
100% it's a flex, because that's the headline they want everyone to see. Apollo, Blue Owl, all of you people, you guys can cap things at 5% and say, oh, I'm so responsible. I'm going to meet it in full and have no problem with it. So, sure, this is definitely going to be a time where they're all kind of trolling each other. And this is how I read this headline.
More on that story a little bit later this hour. Equity futures here down 0.1% on the S&P, with an update on stories worldwide with your Bloomberg brief. Yahara has more. Hey, Yahara.
Good morning, John. President Donald Trump pushing back his deadline for a deal with Iran, saying he will pause attacks on the country's energy sites for 10 days. Trump also saying talks with Tehran are going, quote, very well. Iran saying it's waiting on a response from the U.S. after rejecting its peace plan and offering its own conditions to end the war. A legal victory for Anthropic, the maker of the chatbot Claude, winning a court order blocking a Trump administration ban on government use of its AI technology. Anthropic arguing the ban could cost it billions in lost revenue. And the Senate passing a bill to end the Department of Homeland Security shutdown. The bill still needs to pass the House and be signed by President Donald Trump. Ahead of the bill passing, Trump saying he would sign an order to pay TSA officers. That's your Bloomberg Brief. John.
Hey, Yahara, thank you. More from Yahara later this hour. Up next on the program, pushing allies to step up.
Very little of our energy comes through the Straits of Hormuz. It's the world that has a great interest in that. And so they should step up and deal with it. They should be doing something about it.
Up next, we'll catch up with Bloomberg's Colonel Wayne Sanders. He joins us next, live from New York City this morning. Good morning.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Biggest one-day loss since the war started in yesterday's session this morning. No pickup, no bounce. Even as the president extends talks, he extends uncertainty for this market. The Nasdaq is down by 0.2%, and this move continues. Weak 2-year auction, weak 5-year, soft 7-year. Bond yields up again, 2 basis points, north of 4% on 2s, on 10s. 4.46. Yields right now are higher now than where they were on Monday morning before the president declared there were talks.
We're now pricing in a 50% chance of a rate hike from the Federal Reserve by October, a 75% chance for an ECB rate hike, at least one, through the end of the year. And right now, it's a real question mark. If this goes on for a longer period of time, Christine Lagarde coming out and saying, we cannot be humble about our goal, which is getting inflation down to 2%. So even if it is a marginal move higher, we have to take action, seeming to confirm the hawkish bias.
It's pretty simple. The longer the talks go on, the longer the strait is closed. That's the view of the market right now, which means crude stays at these levels. Brent around triple digits, 110. Almost 110 this morning. WTI, 96.
Or the talks are basically just a distraction because the President of the United States is making sure that the right personnel is in place so that he can open the Strait of Hormuz. But I think one thing to really understand is that even if the U.S. military was able to open up the Strait of Hormuz, maybe also with a coalition, the FT is reporting the UAE would be willing to join this sort of coalition, it is not going to be normal flow of traffic in terms of volume that we are used to. So regardless, it is going to be weeks and months that this is going to be impacting the energy market.
Persistence is the problem. Under surveillance this morning, pushing allies to step up.
Very little of our energy comes through the Straits of Hormuz. It's the world that has a great interest in that, and so they should step up and deal with it. It can be open tomorrow if Iran stops threatening global shipping, which is an outrage and a violation of international law for all these countries that care about international law. They should be doing something about it. There was a couple of the leaders in Europe who said that this was not Europe's war. The United States is constantly being asked to help in a war, and we have more than any other country.
So here's the latest this morning. Secretary of State Marco Rubio at the G7 foreign ministers meeting in France, with the U.S. seeking support for opening the Strait of Hormuz. Bloomberg's Ollie Crook joins us now for more. Ollie, what's the update on the talks?
Yeah, for the G7 foreign ministers gathered here. You have Marco Rubio just in that room there behind me having discussions with the foreign ministers of other G7 nations, but also very interestingly and very relevantly, the Saudi foreign minister who is here as well. For them, you know, it's going to be a fact-finding mission to get from Marco Rubio not only what the U.S. war aims are in Iran, of course that has been the big question for everybody, but also further to that, what are the specific things that are being asked of European allies? We've of course heard from Donald Trump yesterday saying that NATO had been effectively useless to them in the Straits of Hormuz and that he won't forget it. The question will be specifically what kinds of things the Europeans, the G7, can present. What we understand now is under discussion at a high level is a coalition of more than 30 countries. We had the NATO Secretary General Mark Rutte speaking yesterday about that would be involved in some way, this coalition of the willing to open up the Straits of Hormuz. Now, there are several questions attached to that. The first is willing to do what and willing to do it when. I've spoken to a number of officials here, including the Canadian foreign minister, a spokesman for the French here, who had originally floated this idea of being actively involved in opening up the Straits of Hormuz, and I couldn't really pin anyone down in terms of the timing. They say really after the majority of the war is done, but as you know, the war doesn't necessarily end cleanly. I think there's also an effort here by the Europeans to link the war in Iran with the war in Ukraine, saying that the Russians sending drones and intelligence are actively targeting U.S. troops and U.S. lives. That is a line they want to draw, but as you say there, John, the line that Marco Rubio wants to draw is that everybody's saying the war in Iran is not our war. war. The Americans say Ukraine is not our war, but we're still helping.
Ollie, it's good to catch up. Stay close. We'll catch up with you later if we see any headlines. Ollie Crook there on the ground in France. Joining us now to extend the conversation, Colonel Wayne Sanders, Senior Defence Analyst at Bloomberg Intelligence. Colonel, welcome to the programme. Can we talk about the potential for a ground operation? Could you describe what that might look like and what the objectives would be?
Absolutely. When you think about ground operations, especially with the limited number of troops that are on its way, it is something that would probably be limited in scope. It's probably, you look at the two Marine Expeditionary Units that are on the way. The first one's coming from the USS Tripoli, should be there over the weekend, and then the USS Boxer in the beginning of April. But any type of insertion, right, is going to require air superiority, which we already have. So you would actually see an uptick in overflights that would allow for those type of security operations to make sure secure passage to go there. Whether or not they're being airlifted in or whether or not they're actually going into the strait. We think about like Karg Island being one of the areas where you could potentially see boots on the ground because it is limited in terms of its mainland Iran status, if you will, to be able to go there. But when you look at this, one thing I do want to bring up is the difference in troop numbers that are going out there now versus previous escalations, because people are talking about the ground strike portion of it. The U.S. troop count when in Desert Storm was 697,000. The amount of people at OIF, at Operation Iraqi Freedom in 2003 in Iraq, that was about 160,000. So we're only talking right now at about 10,000. Even if you bring in another 10,000, you're talking about 20,000 total. So a lot less. So it would be very, very surgical in terms of what they're trying to accomplish.
If it's surgical, does that mean that this wouldn't be a garrison of troops set up at one of these islands?
Well, that's about all you would be able to do with that, right? Is because you would have to be able to set up enough security, bring in logistics, refueling, everything that's required, air defense assets that you would have to set up to be able to provide security for those infantry and Marine Expeditionary Unit forces to be able to hold that. The straits are pretty long, so even when you're looking at where the choke points are and being able to do that, you still have to figure out how are you going to make sure that you can get rid of some of the asymmetric threats that can show up with shoulder-fired missiles. Because at this point in time, as you've seen, it doesn't matter. It doesn't have to be a full closing. Iran at this point in time has just had to threaten those attacks, and it has stopped most of the flow.
Does the president's new deadline of April 6 match up with the ability to get all of these troops in place?
I think it does a little bit. His original deadline of this weekend, right, was tied to the Marine Expeditionary Units coming in. There are additional capabilities that are coming in, and one of the other things we've seen President Trump do is he doesn't like to choreograph his moves. Most of the success has come from ones that hasn't been choreographed. Operation Midnight Hammer, nobody knew it was coming. And then even when the strikes originally happened on February 28th, same kind of thing here is that extension allows him to have additional options, even if he was going to do something with just one Marine Expeditionary Unit as they come in, or the 82nd Airborne, the elements of them that are coming in as well. It gives him freedom of operations at that point in time. There are more options available now as opposed to having to answer to a deadline that was set for this weekend.
Colonel, appreciate your time. Fantastic framing. Colonel Wayne Sanders there of Bloomberg Intelligence. We've talked repeatedly through this week about two-way risk. The two-way risk persists.
Even though there was a dialing down of the temperature, and this is the key point, a question of even if you don't necessarily have this bimodal outcome over the weekend, there still is a feeling that we don't have a sense of resolution. Why would anyone take big risk at this moment, especially with the lingering after effects?
You've got to remember who turned up the temperature to begin with. The original threat came from the US side to bomb energy plants in Iran, and that moved from an immediate threat to a 5-day period of talks, and that's now moved to a 10-day period of talks, taking us to April 6th. So you can turn the volume down all you like. This market's been focused on one thing, obsessively. The volume of traffic going through the Strait of Hormuz, what it means for production in the Middle East, the damage done there too. And if this persists, this story doesn't change, it gets worse.
And frankly, that is exactly why this is so different than what we saw during Liberation Day, because you could turn the temperature back down and it wasn't the Strait of Hormuz and it wasn't a physical goods. The fact that now UAE and Saudi Arabia are coming out and saying, you better not leave, and then leave this quagmire with us to deal with, gives you a sense of how this could develop.
I'm struck this morning. 2 Chinese vessels tried to go through and they had to make a U-turn.
If you're hoping for a change for the better, you're not seeing one right now. Coming up on the programme, we'll catch up with Kevin Burke of Clearview Energy Partners, with oil rising as traders brace for a longer war. Live from New York City this morning. Good morning. You're watching Bloomberg TV.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
So we had a self-imposed deadline and the president has delayed 10 more days of talks. The price action might not be what you expected. This is seen as 10 more days of uncertainty, 10 more days at least of the Strait of Hormuz being effectively closed. Equity futures on the S&P down by 1/10% following the biggest one-day slide we've seen so far throughout this month, throughout this war. In the bond market, 2-year, 10-year, 30-year yields making new highs for the year. The 2-year north of 4%, 10s at 4.46 and up 4 basis points. On the front end of the curve, up by 2. And this is following some pretty soft auctions through the week so far.
Yeah, and Russ Kostridge said it perfectly, which is you can't hedge anywhere, and it hasn't been a hedge in the 2-year yield. It hasn't been a hedge in the 5-year yield. And in the 7-year yield, when we got the auction yesterday, the similar kind of messiness, albeit even less, actually, ironically, than the 2 and the 5-year. The 60-40 portfolio, worst monthly performance right now, going back to 2022.
You don't need crude to go up a lot from here. Crude just holding on to these levels causes its own problems. And we're holding on to these levels, 110 on Brent, 96 on WTI. That's a problem. Once again, the P word. It persists.
It persists, and it is a problem because this is a global market. I was struck yesterday by the Treasury Secretary saying the global oil market is well supplied. Well, if it's so well supplied, then why are we taking all these extreme measures? Why are developed countries having to go into their stockpiles and release? And why is the president threatening all these troops to open up the Strait of Hormuz? Because it is priced globally, and right now, yes, the United States is dealing with this, but if this persists, a lot of issues are going to be prolonged. And it's not just crude. Fertilizer. You have to make these orders in the next 5 to 6 days. And we are reliant 20% on imports of key fertilizer ingredients.
There's a lot of options on the table heading into April 6th as we count you down to the opening bell. 3 hours away. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. We start there with oil, with the U.S. energy producer Battalion up 14% in the pre-market as it tracks another rise in oil prices. And I thought Deutsche Bank put it best this morning, saying that while President Trump's 10-day delay for strikes may ease immediate risk, there's still no clear path to a resolution with Iran. So that is keeping supply concerns front and center and benefiting these domestic oil stocks. And it's not just oil, gold moving higher as well, and that is benefiting mining stocks like Hycroft up 2% in the pre-market. And what's notable here is that during this conflict, we have seen oil and gold moving in opposite directions, but today we are seeing them move in lockstep, both rising. And we end on AstraZeneca, those shares up 3.8% in the pre-market after late-stage data showed its drug to treat a deadly lung disease helped alleviate symptoms. And analysts say that this one drug could bring in nearly $1 billion in annual sales for the company. So shares up on that news. John?
Yahara, thank you. Appreciate the update. More from Yahara in just a moment. On our radar this morning, President Trump extending his deadline for striking Iranian energy sites for 10 days. In a social media post, the president writing talks are, quote, going very well. Tehran insists it's not negotiating with Washington. The White House considering sending 10,000 more soldiers to the Middle East. A senior U.S. defense official reportedly saying the forces would be in addition to thousands of Marines and paratroopers already deployed to the region. And finally, the Senate passing legislation early this morning to fund most of DHS. The deal approving funding for the TSA, but not for ICE. The budget impasse jamming airports and disrupting travel around the country. The measure heading to the House for a vote as soon as today.
And really the issue for me is, does this actually matter, given the fact that President Trump has already ordered that they get paid out of a discretionary fund? Has in some ways Congress absconded its function once again to the president, who is superseding them as they wait to vote on this measure? I just wonder how much pushback they get, because suddenly there is more time that they potentially could continue negotiating this, given that perhaps TSA agents are already going to be paid.
Two things stood out for me. One, if the president had this authority and found these funds, why didn't he do it weeks ago, before we lost all these people at TSA, before TSA workers were not getting paid? How difficult is that, to continuously miss paychecks? I'll tell you this, lawmakers aren't missing paychecks. And two...
And they're cutting lines.
Yes, and they're... Yes, exactly. And GOP leaders have, for weeks, resisting Democratic calls to say, let's just do a deal, let's pay TSA, and let's come back to the table and discuss what's going on for ICE and CBP. They said no, they said no, they said no. And guess what? Last night at 3 a.m. when we're all waking up, they're voting for it.
I don't know why politicians in Washington don't realize the following. They play this game where they want to make it about Republicans versus Democrats. If you're in that line, you just hate Washington. You just despise Congress. And you see this in poll after poll. There's one great poll about the handling of the economy. Are you happy with the handling of the economy by the president right now? And you'll see in that poll, no, people aren't happy. Then you'll ask them, do you think that the Democrats would handle it even better? And they'll say no, in the very same poll. The consequence of this mess is not one wins versus the other. People just turn against Congress and the politicians representing them.
Everybody loses, essentially, is the way that this works. People lose politically, and people lose when they try to travel anywhere. One individual who went down to Washington, D.C. to discuss with them this, who actually is in the industry, asked them, why don't you just pass this bill, get TSA agents paid, we'll resolve this issue, you guys can scrabble, fight over everything else. What they said was, nothing gets done if we remove this point of leverage. It's very honest, but my goodness, it does not read well in this society.
Not good at all, is it? Not good at all. Let's focus on crude, pushing higher once again with no off-ramp in sight for the war in Iran. Kevin Book of Clearview Energy Partners writing the blockage of crude through the Strait of Hormuz could be more than offset by SPR releases in the Americas, but inventory levels in Europe could drop if current conditions persist. Kevin joins us now for more. Kevin, welcome to the programme. This situation does persist, so let's assume, and it is an assumption, things can change, it's a self-imposed deadline, but if this continues through to, say, April 6th, what would that mean for this energy market?
John, good to see you. Look, we've got 10 more days for inventories to decline. The cold mathematics of inventory depletion are much like the cold mathematics of viral replication. If you go back to COVID, the problem was building around the world. Markets and really America missed it, and it's going to catch us.
Well, how much drawdown could the United States continue to do without going back and refilling the SPR?
There's room for the SPR to come down further, but not much room. And part of that's got to do with legislation and the ability to draw further under emergency conditions versus non-emergency conditions. Part of that's got to do with the practicality of the SPR. Having it available for big crises means you want to keep some in reserve. If this isn't over in 10 days, maybe you want it around longer.
Kevin, if the U.S. administration knew that this was a possibility, and it always was, the president, I remember a year ago talking to him about this. He prefers a diplomatic route, but he was steadfast. Iran will never get a nuclear weapon. He's willing to deal with them the hard way. Why were they not refilling the Strategic Petroleum Reserve?
As you know very well on this network, the Secretary of Energy asked for $20 billion, or at least mooted the proposition last year. And in what was probably the most catastrophic mispricing of risk in recent congressional history, they gave him $171 million. So without money, you can't refill the reserve.
When it comes to the OECD stocks, how does that actually impact the price of oil?
There's a very strong inverse correlation between OECD petroleum inventories and the front-month Brent crude price. And it's one of the relationships you can count on for a reason. When there's less oil in stocks, if it can't come out of inventories and it can't come out of the ground, it can't come out of the strait, where's it going to come from? Prices go up.
Is this an oil problem, Kevin, or are we overplaying the oil aspect of this and underplaying the natural gas aspect?
I think the natural gas aspect is pretty significant at the margins. It's easy to overlook it in sort of the total energy picture. And frankly, the two are related in a very significant sense. 4% of the world's energy consumption in terms of oil and gas bottled up in the strait right now means that there's substitution fuel pursuits happening all over the world. In the last crisis 4 years ago, we went from missing gas westbound into Europe, drawing liquids demand from petroleum for generation in Asia. Now those liquids aren't available either.
We do see, though, that the United States has been ramping up the production of liquefied natural gas and had previously been exporting a growing proportion to Europe in particular to offset the decline coming from Russia. How much do you see that continuing versus maybe a little bit of restraint on that front as natural gas prices in the U.S. also climb?
Well, they haven't climbed very much, and I think that's one of the significant takeaways of the LNG story here in the United States. There's still a great deal of missing connectivity that would provide for those prices to rise. There has to be some way to expand volumes in response to the deficit in global markets for there to be that kind of price response. And even then, we have a very flat supply curve. I think that when you look at importing governments, they're all going to be asking one question after this, and that question is, how can we make sure this never happens again? One answer is to diversify sources and routes. To the extent that routes are the solution, the United States can provide an answer.
That's certainly going to take time. Kevin, I want to finish on this, just a piece of scenario analysis, if you will. If there is a ground operation to take Karg Island to try and reopen the Strait of Hormuz, how do you suspect the futures curve would price that? Would it begin to price in a resolution to this war? Would it drag prices lower or push prices up?
I think we have to ask what the Iranian riposte would be to that, John. And I think the answer might be that they'll look westward at those cargoes going to the Red Sea, and maybe we see an activation of the Houthis in the next leg up in risk. So I'm not sure that's the answer we'll see in the market.
I think I understand where you think prices will go. Kevin, thank you, sir. Kevin Book there at Clearview Energy Partners. Because if the Houthis get involved, we got another problem.
Yeah, and yesterday I thought that it was fascinating, the interview that AMH did, the indication that right now Saudi Arabia is paying off the Houthis not to interfere with the Red Sea passageway. Gives you a sense of, the rule by mob that seems to be going on over there.
But that could change because obviously their biggest beneficiary is the Iranians. And at some point, the Iranians could say, we need to escalate this. We want to put the pressure up even higher. We want to move crude prices closer to a very painful threshold for this White House. And he could tell them to get involved. And all you need is one drone, one speedboat at the Bab el-Mandeb Strait, and this east-west pipeline that Saudi Arabia has been using to move 3, 4, 5 million barrels a day. Now that crude all gets stuck.
Brent crude right now. Brent 110, WTI 96. Let's get you an update on news worldwide with your Bloomberg brief. Yahira has more. Hey, Yahira.
Hi, John. Secretary of State Marco Rubio meeting with his G7 counterparts in France. Rubio may have a hard time gaining support from U.S. allies a day after President Trump complained about NATO countries not stepping up to help with the war in Iran. Nicolas Maduro appearing in a Manhattan federal court yesterday. You can see the court sketches there. The U.S. is pushing ahead with a broad drug trafficking and narco-terrorism conspiracy case against the ousted Venezuelan leader. And Oak Tree Capital Management is meeting all redemption requests for one of its private credit funds. According to a regulatory filing, the company is allowing investors to take out 8.5% of net assets from its strategic credit fund, which is equivalent to around $400 million. That's your Bloomberg Brief. John.
Yahira, thank you. The ultimate flex. Bramo was talking about it earlier. Everything just feels like a marketing campaign right now. They're all throwing shade at each other in private markets.
This is an opportunity for people to potentially gain market share and to show who the bad apples are and that they're the good ones. To me, this is saying you have to cap it. We don't. We're good.
The Oak Tree flex early on this morning. Equity futures right now in the S&P negative by a third of 1%. Up next, the inflation warnings piling up.
Moreover, the conflict in the Middle East raises additional risks.
I still see underlying inflation as gradually moving down.
The inflation risk is greater right now as a result of the Iran war.
We'll get to that divide in just a moment with Joe Davis of Vanguard.
Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones. Some good-looking trophy.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here, where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg. Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Uncertainty extended. Equity futures down by 1/3% on the S&P, following the biggest one-day slide on the S&P 500 so far this month since the war started. The S&P at the lowest level we've seen since early September. On the Nasdaq, we're down another 0.5%. The Nasdaq 100 very, very close to correction territory, down almost 10% from the high of the last 12 months. In the bond market, new highs for this year: 2s, 10s, 30s, 10s, 446 up 5 basis points, 2 up by 3 basis points to 4.01%. This is the pain trade for me, Bremer. This is the pain trade for me. We've flipped from easing to tightening over at all these central banks, the Fed, the ECB, the Bank of England. And in this market, when you speak to anyone in fixed income, they talk about the value created in the yield curve and the opportunity to step in. There's so much doubt about this persisting, which makes it so much more painful.
If it continues to go up. And what you did see last week and this past week, long-term bonds have seen their second largest ever withdrawal, their biggest withdrawal going back to March 2020. This is according to EPFR and Bank of America data. And Michael Hartnett over at Bank of America said, expect policy panic to avoid recession. Guess what? He's looking for that yield curve steepener as a result of the fiscal response to avoid any kind of serious economic downturn. This is the potential pain trade that you're talking about.
Check out crude, Brent, and WTI. There's 3 scenarios here, and we usually only talk about 2 of them. And these are the 2. The two-way risk that crude crashes from here on the back of a resolution, or things escalate and crude spikes to 150. What about the problems caused by just staying around these levels? And that's the conversation I think we have to have this morning as we talk down another 10 days of talks between the US and Iran, and Brent crude around 110.
Well, it's going to be very complicated, and not really as much for the United States as is the rest of the world. You're already seeing some countries like the Philippines saying this is a state of emergency. Asia is still the front lines of this crisis when it comes to the energy shock, telling people work from home, take carpools, and then it's really going to start to hit Europe. And that's going to be a big problem, and I'm sure Secretary Rubio is hearing about it right now in France at the G7.
Brent crude 110.50, WTI north of 96. Under surveillance this morning, inflation warnings piling up.
Moreover, the conflict in the Middle East raises additional risks. Higher oil prices tend to pass through pretty quickly to gasoline prices, and higher gasoline prices can be particularly painful.
I still see underlying inflation as gradually moving down towards target over the next, sort of 12 months.
I would argue that the inflation risk is greater right now as a result of the Iran war.
So here's the latest this morning. Federal Reserve officials raising concerns about the impact of the Iran war on inflation. Treasury yields setting new highs for the year as investors shift expectations from rate cuts to possible hikes. Joe Davis of Vanguard writing, the key indicators I'm watching are twofold. One is clearly just the labour market. The second has always been a wild card, the price of oil. Joe joins us now for more. Joe, welcome to the programme. Two time horizons. Let's start with the first. Quite short term. I want to start with the March data and the April data. What are you expecting to see in the March and April data?
Well, we're going to continue to see inflation that's somewhat stubborn. I mean, if you look back over 2 years, obviously some progress, but our theme going into the year before the events just in the Middle East was that the Federal Reserve was going to be a little bit challenged to deliver in the cuts expected because a little bit of this stubbornness in inflation. And so, again, that's before oil has moved. So we're going to see mixed signals, and some of it is dated given what we're seeing in the oil markets.
Joe, in line with that, how do you expect central bank communication to adapt, to evolve between now and the April meeting?
Well, I think we're starting to see it. You're going to have to talk tough on inflation. This is, central banks, generally speaking, have some scar tissue going back several years. And so I think the tougher you talk, the less you actually have to do. And I think that's where we're at. I think you're going to have to address the fact that although the oil spike will push up inflation, push down growth, you have to focus on the former, not the latter, just from a risk management perspective. I don't see the Federal Reserve hiking anytime soon, just because of the cross currents it'll do in labor market. But nevertheless, this notion of easing significantly because of the downdraft in the economy, you got to be careful with that timing, even if that would ever happen, because we need to see a lot of events unfold before we go down that path.
And, Joe, this is the reason why when John says, what if oil prices just stay around here? Potentially that could be one of the more toxic scenarios for central banks, because they may have to respond more to ongoing inflationary pressure with growth continuing to hang in there, at least reduced, but at least positive. How do you see the Fed responding to oil prices staying here versus spiking higher or going back down?
I think that's the most interesting dynamic, what your conversation is this morning, because obviously if it collapses, we have obviously a risk on, and this is more of a return to other factors that we were watching. Obviously 150 price of oil per barrel starts to bring in the recession risk much more prominently, but it's a persistent around $100. You have to redo the calculus. I think that now that is a Federal Reserve that is very much on hold and is not going to get the disinflationary effect that you were banking on. And so I think that's the more interesting scenario. And I think that should be, more seriously considered than perhaps even the other two for the time being.
What do you think the bond market right now is pricing in, given the fact that we've had a repricing across the curve? Yes, there has been a curve flattening. Short end yields have risen more than long end yields, but long end yields continuing to sell off with some auctions that represent real weakness. Is this people who are gaming out growth, rate hikes that persist, stagflationary types of situations?
It is doing both. I mean, we got a little fiscal in the background at the long end of the curve, but it is really oil. Does it dominate on the growth side or on the inflation side? And again, I think there's a really healthy debate. I mean, we're talking about it this morning, 3 scenarios, not one. And so you're going to get really some volatility on the yield curve. I think the intermediate part of the curve probably looks the most attractive and potentially safest if you talk to our fixed income team. So again, I think it's premature to talk about a Fed easing because the oil hit takes down growth, just given what we've been. And the fact is inflation is not super high, but it's above target. And you have to reflect that in your timing, even if you're bearish in oil going much higher.
In the meantime, how isolated is the U.S. economy from the rest of the world? A lot of economists have come on and said that Europe faces a real problem, Asia faces a real problem. The U.S. is somewhat insulated because growth has been at a higher pace. You have the tech impulse. Is that sustainable?
It is. Again, it all depends upon where oil goes. What we would need to see to have really a downdrafting growth are really two things. It's not just the price of oil, which we all feel at the gas pump, but it's also the fact that we would need to see financial conditions really weaken. So the equity market here is actually the wild card. The equity market would have to start pricing in downdraft in earnings significantly so that it would pull back some of the business investment and high-end consumer spending. It would have to shake confidence of CEOs and on the consumer side to really, because those are the really two strong foundations for the U.S. economy, hence your point. So again, you would have to see that foundation really become rocky before we're starting to talk about Fed easing here.
Hey, Joe, it's good to see you. Thoughtful stuff and lots to think about. Joe Davis there of Vanguard on this economy and energy prices. Central bankers know what to do in extreme situation. When you hit extremes, central bankers will know what to do. If you gap lower on crude and you crash back down to 50, 60, opens the door to cuts. If you spike higher to 150, pushing 200, they'll start worrying about growth. Mike Gapon of Morgan Stanley will break this down for us a little bit later. If you persist at these levels, they're stuck and they don't know what to do. And we see this time and time again with the central banker. If you throw a recession at them, it's obvious what that central bank is going to do. You throw the middle ground at them, things get complicated.
Morgan Stanley, I'm glad you brought them up. They're the ones that say this $100 to $110 a barrel. That kind of range leaves rate hikes back on the table and potentially certainly no move from the Federal Reserve based on the ongoing inflationary pressure without that hit to growth. That, to me, is the most interesting situation, as Joe Davis said, and frankly, is one that this market is trying to grapple with.
Can we see a Federal Reserve that has to quickly hike rates to then get a growth shock and then unwind them, all while they have a leadership change at the top? I'm still confused about who will be running the Federal Reserve come May 16th.
You're not alone. Is it going to be Kevin Walsh? Is Chairman Powell going to be around for the rest of the year? Based on how things are trending right now, I'm not sure Chairman Powell wants to be around for the rest of the year, based on where things are headed.
Yeah, he would like to have this wrapped up. I think there is a sense of confusion about why there wasn't just an easy out taken so that we could resolve the subpoena, the investigation, and get on with it. Nonetheless, clearly the lack of clarity around the Fed reaction function adding to the volatility that we're seeing in bond markets and some of the messy auctions that we saw this week.
Yields up this morning by 2 basis points on 2s north of 4%, on 10s north of 440, with crude right now 110 on Brent, on WTI at 97. Coming up next, we'll catch up with Bob Michael of JP Morgan Asset Management, Tobin Marcus of Wolfe Research, the ECB Governing Council member Pierre Wunsch, and Sonal Desai of Franklin Templeton Fixed Income. The second hour of Bloomberg Surveillance is just around the corner as the uncertainty persists for global markets as the president extends talks for another 10 days between the US and Iran.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We'll really start to see that energy price shock feeding through in the March data.
It could create some real challenges for the economy.
The central banks are in a tough spot.
They need to continue to focus, very closely on the data as it evolves.
I am concerned about the fiscal outlook.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your price action and scores look like this. Negative 0.4 on the S&P following the biggest one-day sell-off so far this month on the S&P 500. We sit here now at the lowest level since early September. Coming into Friday morning, the losses continue, down by 0.6 on the Nasdaq, and in the bond market, unlocking higher yields on 2s, 10s, 30s. New highs for the year, 446 right now on 10s. And in the commodity market, crude drifting higher. It persists, and it's persistence that we need to talk about. Brent crude at 111, WTI at 97. The president saying this: please let this statement serve to represent that I am pausing the period of energy plant destruction by 10 days to Monday. This market is not celebrating the removal of near-term escalation risk. This market is wrestling with the extension of uncertainty to Monday, April 6th, 2026.
This isn't a market that can embrace a taco trade, the so-called Trump always chickens out and he can reverse course, partly because he can't. This is a now multi-party conflict that's dealing with physical assets being shipped. It is the Strait of Hormuz, this key waterway, and a question of who's going to ultimately control this. And frankly, his discussion is coming, given the reporting that we have right now, with tens of thousands of troops lining up to potentially make their way. This raises a question of what it's going to take to de-escalate and whether the persistence has already gone on long enough to create some real damage.
That's a key point. 2 Marine Expeditionary Units are already en route. And then on top of that, we have the 82nd Airborne Division that has already been deployed. And then on top of that, the Wall Street Journal this morning talking about the fact that the DOD is weighing whether or not to send 10,000 additional ground troops. So while the market is digesting the fact that this might be prolonged and the president's kicking the can in terms of these talks, at the same time, there's reporting that there is serious concern and discussions about the decision being finally made that this is actually going to escalate in a serious manner with more personnel on the ground.
Kicking the can does not provide relief anymore. Kicking the can for a market looking for a resolution is not going to provide comfort. When you kick the can, you're guaranteeing the strait will remain closed. You're almost guaranteeing the crude will hover around triple digits. And that's the additional scenario we're talking about throughout the program so far. We've been going back and forth on this. We've been talking about the two-way risk. It's resolved. Talks are a success. Or escalation. Things get a whole lot worse and you start hitting energy plants across the country. They retaliate across the Gulf. There's a middle ground. This just continues, lingers. The strait remains closed. You hold on to triple digits in crude, and that causes its own problems.
It's not exactly a growth shock to the same degree that, say, $150 a barrel would be for the United States. It's not an all clear as going back to $65 would be. As Russ Kostrick of BlackRock said, and I think it was a really good point, nothing is working in this backdrop. There is no haven trade. It is not gold. It is not bonds. It is not stocks. It is not even, as we saw yesterday, some of the tech stocks. So what does an investor do with what looks increasingly like a stagflationary type of backdrop?
And Tehran did not take that Truth Social post as a moment to maybe have a reach out through the Pakistanis and say, yeah, you know what, we will come to the table. This has been challenging for us. Our entire top level brass of individuals governing this regime have been taken out and targeted. Nope. What do you have today? You have missiles over Riyadh. You have the Strait effectively once again closed. IRG starting back 3 container vessels in Hormuz this morning. They even made an abrupt U-turn. Chinese vessels made an abrupt U-turn, wasn't able to get through safely. At this point, Tanker Tracker says that at this rate, only 2 tankers a day on average go through the Strait of Hormuz. Far cry from the more than 100 a day we saw before this war.
Yeah, and these headlines from the Israeli defense minister from moments ago aren't going to help things. They're pledging to escalate and expand the attacks on Iran, saying the escalation would be in response to Iran targeting civilians. That's the escalation we're looking for. And as you've reminded us repeatedly, this is not just a war between Iran and the United States. There's other actors involved here as well.
It's Israel. It's the UAE, which came out with an op-ed in the Wall Street Journal saying, hey, this is getting really annoying to us. We want to offer some deterrence. You're getting Saudi Arabia involved, too. This is a much more complicated backdrop.
Futures near session lows on the equity market on the S&P 500, negative here by 0.5%. Coming up on the programme, we'll catch up with Bob Michael of JP Morgan Asset Management. With crude holding on to triple digits, the ECB Governing Council member Pierre Wunsch joins us on the potential for rate hikes, and Sonal Desire Franklin Templeton with the bond market on very shaky ground. We begin this hour with the bond market struggling as crude hovers near 110. Bob Michael of JP Morgan Asset Management writing central banks are all in a terrible position. Overall, the bond market continues to struggle to manage this inflation shock, and it's testing reaction functions. Bob joins us now for more. Bob, good morning.
Yeah, happy to be here.
Good to see you, buddy. And first of all, congratulations, Mr. $1 trillion man.
Yeah, thank you.
$1 trillion in AUM, and I know what a team effort.
Business is doing well.
That has been. Fixed income itself is not doing well.
Not today.
So let's talk about that. What's behind the shakiness and the fragility in fixed income?
Well, I think there are a couple things. I think, first of all, you're right. The bond market is pricing in the worst of all scenarios, which is the administration is desperately looking for an off-ramp, and there is none available. They're not going to cede sovereignty and control of the Strait of Hormuz to Iran. So if Iran doesn't give them a palatable off-ramp, then escalation is the only path forward. I think the second thing that the bond market is dealing with is we came out of the FOMC meeting a week and a half ago with the FOMC more concerned about the labor market than inflation. They had rate cuts still priced in for this year and next year. They were willing to look through it, and now you're hearing more hawkish tones coming out of the FOMC, particularly from Waller, who's right. It's not just about energy. You have to think about fertilizers, the planting season in the U.S. and across the world, and could that ultimately pass through to finished goods and prices?
We've caught up with your team a few times over the past few weeks. Kay, Priya, Kelsey. They've all said something similar, that we're unlocking value here in bonds, that yields are higher, that this should introduce demand. But we haven't seen that at auctions this week, and I think people have found that surprising. 2-year, 5-year, 7-year auctions, soft. Why do you think that is? Who's not turning up to these auctions that would typically turn up and buy these bonds?
Because things seem to be in a free fall. You don't want to catch a falling knife. You do get concerned that there is an inflation problem that becomes broader down the road. Just stand out of the way. Keep positions that you're comfortable with riding through this. Let the market wash itself out. That's always been the best thing to do. And if it's at levels that you want to add to positions, then sure, go ahead and lengthen duration, add to a bit of credit. Right now, we're still not expecting recession. You have to go well north of $120 a barrel for a recession. So in the meantime, just let the markets go to wherever they're going.
Is it a trade, though, or is it a technical issue? With a question about some of the central banks, whether in Japan, whether in the Middle East, that are needing to raise money right now to support fiscal efforts, that need to do things like sell gold, as we've seen. Is that part of what's behind some of these auctions that have gotten somewhat messy?
I think it's a technical washing out of positions right now, that everyone got crowded into a few trades. The central banks would eventually be cutting rates. All you have to do is actually look at gold. This is the absolute ideal environment for gold. It's the safe haven, it's the risk off, and it's the inflation hedge. All of those things should have pushed gold up from, call it 5,000 to 6,000 if it were fairly priced. It was an overcrowded trade. There's exiting from overcrowded trades. You talked about the lack of a safe haven. There is one. It's Treasury bills.
Treasury bills, but not long duration. And this is, I find, very interesting, given the fact that a lot of people are saying that this is a Fed that's going to be more hawkish. The implication should be, if you have belief in the Federal Reserve, that should lower inflation over time. That should reduce growth over time. That should reduce your appetite for longer-term bonds. Why is it not working that way this time?
Well, it is working because if you look at forward curves, the 1 year forward, or the 5 year forward, actually, those yields have come down a little bit. So as more hawkish rhetoric has come out of the Federal Reserve, long-term inflation expectations are a bit more anchored than they were a week or so ago.
Inflation expectations, but not the bond yields. That's what I'm talking about. Is this sort of the fiscal response?
There is the painful path from here to there. The hawkish expectations lead to higher rates, which then dampen aggregate final demand a bit more, and that ultimately cools off.
Bob, you're talking about the recessionary level of oil around $120 a barrel. That's where the physical market is, well above that. At some point, Brent will potentially, if this is protracted, catch up. The futures market will catch up to that physical market, and that might be sooner than people expect. What happens then?
Well, the data we're going to see over the next couple weeks is going to give us a lot of information, particularly next week when we look at the labor market data, because it won't fully have the conflict priced into it. It will still be somewhat clean. And if it's softer, it's telling you that actually the labor market wasn't on firm footing heading into all of this. If you're a business and you're already struggling with trying to understand what tariffs you're going to pay, what the impact of AI is to your labor force, and you've paused hiring, now you have higher input costs and you're concerned about demand destruction. Are you really going to go ahead and do some hiring? Our expectation is it's already starting to bite in the real economy.
This all sounds super gloomy. Should we finish with some optimism?
Sure.
Torsten Slok of Apollo just published. Check this out. Markets are overreacting to what will likely be a 4 to 6 week period of volatility, which will ultimately result in 50 years of stability in oil markets, supply chains, and geopolitics. Torsten, just moments ago.
Yeah, the headline of this is sentiment destruction, not demand destruction. Always watch what they do, not what they say, given the fact that people are feeling so nervous since they have to go out and shop to make themselves feel better and travel a lot more. He talked about how this shock is not enough to eliminate the tailwinds to the U.S. economy, and that is the reason why so many people have said, actually, the U.S. turns out to be more of a haven right now in all of its assets because of that tailwind, because of its ability to still grow.
The tailwinds being AI spending, the industrial renaissance, and the one big, beautiful bill. Bob, can you envision a better world 12 months out? Looking back 12 months out, and just seeing this as a 4 to 6 week period of volatility?
I can see us getting beyond this at some point. We keep going back to 20% of oil passes through the Strait of Hormuz. Why didn't oil go from $60 to $72 a barrel? So Torsten's right. There's some emotion in this. Whether it's troops on the ground or there's some sort of peace accord, we'll eventually get to the other side of this. I don't know that I want to look out a year, but I'll look out into the midterm elections. I think no holds will be barred into the midterm elections. And what is that, 8 months away?
What do you mean by that, Bob? What do you think is going to happen?
Yeah, sure. I think when you look at the administration, they have to do whatever is possible to ensure that unemployment stays low. They've got to go back to affordability issues, particularly housing. You've got a new Fed chair sitting. You do have the tailwinds of the One Big Beautiful Bill Act. You do have all the CapEx because AI is real. Businesses know that. So you don't want to get too gloomy in here. That's why I said you just want to stay out of the way of this, see where it washes out. I think it's more technical than anything right now. Our bias is to add when we reach firmer footing.
It certainly feels painful right now with the 10-year at 446 and up another 5 basis points on the session. Bob, good to see you. And congrats once again. Thanks for being here. Bob Michael there of JP Morgan Asset Management on a very shaky bond market through the week so far.
Yeah, and he's talking about how it's a technical washout and that longer-term bonds are the haven. He talked about T-bills, not necessarily longer out the yield curve, not now anyway. Michael Hartman, I keep going back to this, expecting policy panic to support the economy heading into those midterms. I just wonder how much that's part of the reason why people don't want to go long bonds right now, if there's policy panic that comes in to flood the market.
If Bob's coming on the program and advocating for T-bills, you know it's a stressful moment, right? Certainly a stressful moment.
You know, you're also getting good yield, so I could understand it, and you are seeing some inflows into that area.
Let's get you an update on news elsewhere this morning with your Bloomberg brief. Yahara has more. Hey, Yahara.
Hi, John. President Donald Trump pushing back his deadline for a deal with Iran, saying he will pause attacks on the country's energy sites for 10 days. Trump also saying talks with Tehran are going, quote, very well. Iran says it's waiting on a response from the U.S. after rejecting its peace plan and offering its own conditions to end the war. Israel not planning to wind down its military strategy against Iran. Defense Minister Israel Katz saying moments ago attacks will escalate and expand to additional targets and areas important to the regime. Katz saying he and Prime Minister Benjamin Netanyahu had warned Iran against attacking civilians, but the firing has continued. And here's another jab. JP Morgan is planning a new private credit fund that will allow investors to redeem 7.5% per quarter. According to the prospectus, the fund will invest at least 80% in credit, including a substantial portion in private credit as well as publicly traded loans. That's your Bloomberg Brief, John.
Yahara, thank you. More from Yahara later this hour. Up next on the program, making time for a deal.
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? I mean, they shouldn't be able to. All I can tell you is they're begging to make a deal.
We'll talk about that next with Tobin Marcus of Wolfe Research, live from New York City this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gray.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujita report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The self-imposed deadline has been extended. Diplomatic efforts continue between the US and Iran, we're told. That continues, and this continues too. Equity futures on the S&P 500 pulling back by 0.5%, on the Nasdaq down by 0.6%, adding to some big losses yesterday, the biggest one-day loss we've seen so far this month. The S&P 500 closing yesterday at the lowest we've seen since early September. In the bond market, that risk aversion unlocking higher yields, not lower yields. The source of the disruption in the bond market, around 4% on twos, 446 on tens, pushed higher by this move in crude. The move persists, triple digits. Brent crude, 111. WTI, 97.
And you've heard a slew of central bankers come out and say they are worried about inflation. They have to be vigilant, and they have to get inflation back down to 2%, given that it has been more than 5 years since we've hit that target. We're repricing a Fed response function. We're repricing the ECB.
It's a lot of uncertainty hanging over this market through to at least, potentially, April 6th. Under surveillance this morning, making time for a deal.
Should Iran be able to charge a toll for the Strait of Hormuz? They're charging some vessels to go through.
Oh, yeah. Well, should they be able to? I mean, they shouldn't be able to, but they're doing it a little bit. I don't look. Their capability is a lot less than it was 2 weeks ago, and with every week and every day, frankly, it gets less and less. All I can tell you is they're begging to make a deal. So let's see what happens.
The President of the United States extending talks with Iran for 10 more days. The President saying talks with Tehran are going very well. Jonathan Tamari of Bloomberg Government joins us now for more. Jonathan, welcome to the programme. We're tracking two things. One, the talks, the status of them, and two, troop movement. Jonathan, what do we know about both this morning?
Yeah, the state of the talks, it depends on what you're listening to publicly, privately. Publicly, Iran says that there's not progress. The president says there is, that they're desperate to make a deal. Obviously, both sides are posturing there. And yes, there are reports that there are additional troops now moving into the region. And there's a lot of concern within Congress, I would say, about what that means, given that Congress has had really no say on this fight so far. And the addition of ground troops would be a significant red line, I think, for a lot of members of Congress, including some Republicans.
Do you think they're in a position to stop it?
Not right now. And in fact, they're about to be away for 2 weeks. And there's a concern among some lawmakers that while they're away on a scheduled recess, the president could escalate things and Congress would really be in no position physically to take action.
The calendar is not friendly to risk assets right now. Bloomberg's Jonathan Tamari there with the latest on the situation following two tracks, the status of talks and the status of troop movements.
Yeah, and people are watching those troop movements very closely. We talked earlier about that Wall Street Journal report. Congress, you think that they're going to actually step in here? They haven't even been able to make a move on TSA. I mean, that was superseded also by President
Trump. They're not there, even when they are there.
They're correct. Thank
you.
Even the vote last night, it was basically empty last night in the chamber when they voted at 3 a.m.
Yes, and it was just basically, yay, let's get the show on the road and let's make sure TSA is funded. That exchange I had yesterday with the president, he said that their capabilities have been decimated, but it hasn't changed the facts on the ground for the Strait of Hormuz. Every single day, according to tanker trackers, we're just at 2 vessels getting through on average since this war started, and tomorrow will mark 1 month. Before the war, it was more than 100, which is why the physical market is so much higher than what we're seeing in the paper market.
We've seen the damage done to some of the energy assets in the region. It's going to take time to repair them. And we know that when you shut in production, the longer you shut in production, the longer it takes to ramp it up at the other side. So we know this is going to go on for another 10 days and the market is responding to that lingering uncertainty. Tobin Marcus of Wolf Research writing this: we don't think either side has reached the limits of its pain tolerance. The president thinks the US is winning and the Iranian regime thinks they're winning too. Tobin joins us now for more. Tobin, where does that leave us?
I think it leaves us in largely the same dynamic that we've been in, where the president faces options to escalate, to try to de-escalate, which he's doing now, or just to stay the course. I think all of those have downsides from the U.S. perspective. And I think anything other than, a surprising diplomatic breakthrough that we don't expect is going to perpetuate and intensify stress on markets.
Tubin, the Wall Street Journal also has that Iran, this requested 10-day pause on strikes, was not coming from Iran. Iran never requested this the way the president presented it to the world. What do you make of that? Is the president negotiating with himself? Is he just buying time as he has this troop buildup?
Yeah, I mean, what we were saying prior to the announcement of this extension earlier yesterday was if we do see an extension, which seems like a very real possibility as we were approaching the end of that 5-day period, which the president himself speculated about the possibility of an extension during the cabinet meeting yesterday, that if that were to happen, it would reflect basically that the U.S. wasn't ready to choose between, to decide whether or not to undertake one of these decisive escalation options, rather than representing real, progress behind the scenes. And so I think characterizing it as having been demanded by the Iranians, even when the reporting contradicts that, largely lines up with that theory. So, maybe it's a very specific smokescreen for planned escalation, and he's waiting for more assets to get into the region. There's been lots of commentary about the first Marine Expeditionary Unit scheduled to arrive today, but there's more on the way. There's airborne troops on the way. So we could still be positioning for a definitive escalation plan, or he could just be buying time. If he's not ready to pull the trigger on either strikes on electrical infrastructure or one of these mooted ground operations, then, you can always kick the can down the road.
You have a new tongue-in-cheek alternative to taco, and you say it's a kebab. Kinetic escalation before abruptly backing off. What kind of kinetic escalation could we see?
I think the kinetic escalation that we had in mind when we came up with that kebab idea was what we've already seen, right? That we undertook this war. It's been, very high intensity so far. And then at some point, chickening out, I don't think is a great characterization of anything that's gone on here, but that at some point you could see the president try to just de-escalate. Notably, as people talk about, taco and the strike price of the Trump put and so forth, the one thing we haven't actually seen him do is make any actual move to de-escalate. We've seen him, open talks. We've seen him talk about talks, but those are all an idea that he might de-escalate if we see big concessions from the Iranians that there's been no indication that they're willing to make. What he hasn't done is actually reduce the intensity of U.S. strikes, actually, undertake a unilateral ceasefire and see if the Iranians respond in kind. And so I think, going back to the comments earlier about whether or not the two sides are at the limit of their pain tolerance, if we actually start to see the president in more of a panic about the market and economic and political backlash, which I don't think he's in right now, that option is still available of actually trying to de-escalate, short of, telling the Iranians essentially that we're ready to accept their unconditional surrender, which has been the U.S. message so far. And I don't think that surrender is in the offing.
Tobin, if this continues for weeks and possibly even months, how big is the blue wave going to be in come November?
So I think the kind of elasticity of political outcomes to how this goes is relatively low. The House, I think, is basically, foregone conclusion to flip Democratic, and we've thought that for quite some time. The Senate, betting markets are now starting to believe in a blue Senate. I personally don't really. I think it's a real long shot for them in these 4 red states that they would need to win 2 of: Alaska, Iowa, Ohio, and Texas. Those are all big reaches. And so I think we're in a universe where, even as the political situation deteriorates, as the war continues, as gas prices go up and so forth, there's not that many more seats you can lose in the House based on the way the maps are drawn, and similarly in the Senate. So if I'm President Trump, and I suspect that there are people around him telling him this, if the House is lost, the Senate's not that losable, that does give him room to have the courage of his convictions. If he thinks that this is a generational problem that he can, either substantively or as a way to kind of enshrine himself in the pantheon of American presidents by dealing with this, I do think that has some appeal looking past the midterms.
Tobin, it's good to see you. Thanks for catching up with us. Tobin Marcus there of Wolf Research on the sentiment shock. You, Mitch, consumer sentiment coming a little bit later on this morning. Look out for that number. Might not be pretty. Up next, ECB Governing Council member Pierre Wunsch on Europe's path forward.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Equities declining here near session lows. We're down by 0.4% on the S&P, on the Nasdaq negative 0.6. The losses yesterday notable, the biggest one-day loss we've seen since this war started. But one thing that hasn't been talked about enough, it's not just about the Middle East. There's something else happening here. It's also about tech and tech names. Microsoft having a really difficult go of it, down by 30% from the highs of last year. Meta down 15% this month, hammered yesterday. The Nasdaq 100 basically in correction territory.
It's down about 10% from its recent highs, but the idea that it hasn't seen a new high going back to 2025 gives you a sense of just how far we've fallen. They've lost their leadership. What does it mean at a time when we talk to a lot of investment managers saying that big tech is the haven, that we are not seeing that actually play out at a time of stress?
We've thrown so much of this market, tech problems, the Middle East, private credit, and bond yields just squeeze higher, making everything worse. Tighter financial conditions, yields up by 4 basis points, 4.45 on 10s, 2s around 4%. The president removing near-term escalation risk, but introducing longer-term uncertainty with 10 days of talks.
Especially because oil prices still are around that $100 a barrel, presenting a quagmire for central bankers. Do they hike rates? Do they keep rates where they are for a prolonged period of time, even as you do get some demand destruction? And you talk about how you do have financial conditions tightening. They're not tightening very quickly, but around the margins, just steadily increasing, with mortgage rates hitting their highest levels so far this year.
Going into spring salad season.
5:30 होने वाला है, almost 5:30 is there. New York session is going to open. Both bullish crude oil, natural gas थोड़ा sell off expected है crude oil में. Natural gas मुझे लग रहा है थोड़ा और ऊपर जा सकता है, resistance से काफी दूर है अभी भी. देखते हैं, पहले resistance पे जाता है, थोड़ा pull back दे देता है यहाँ से, and then goes upside. डाउन जरूर हुआ था, बट कंटिन्यूसली बाइंग ही आ रही है. आधे बुलिश हो गया नेचुरल गैस. डाउन क्या देखोगे, ऑलमोस्ट 3% अप होने वाला है. CX नीचे आ जाए तो बढ़िया है, 284 के आसपास, नहीं तो वहां से बाइंग प्लान करेंगे. ट्रेडिंग सेशन फॉर दिस वीक. परसों और कल मार्केट वैसे भी क्लोज है, ज़्यादा रिस्क मत लेना आप. भी करते रहो गाइस, डोंट फॉरगेट टू लाइक द स्ट्रीम। कोई और न्यूज़ भी नहीं आ रही है फिलहाल। ट्रम्प ने 10 डेज डिले कर दिया, मुझे लग रहा है मिलिट्री एक्शन हो सकता है। मोस्टली यूएस ट्रूप ऑन द ग्राउंड इन ईरान, उनके बहुत सारे जो आइलैंड्स हैं मुझे लग रहा है वो कैप्चर कर लेगा शायद यूएस। तो आगे अब सीधा 7 बजे फिर यूएस मार्केट ओपन होता है, उसके बाद एक डेटा है, वी विल सी दैट कंज्यूमर सेंटीमेंट यूएस में इंक्रीज हुआ है या फिर क्या है। एक्सपेक्टेड है थोड़ा सा डिक्रीज होगा, देखना पड़ेगा। मार्केट भी कंटिन्यूसली आज सेलिंग में ही था कंप्लीट। थोड़ा सा नेचुरल गैस डाउन ही आ जाए ये भी चलेगा. ऑलमोस्ट मिडिल ऑफ द लेवल है बिटवीन सपोर्ट रेजिस्टेंस. कल भी मार्केट ने काफ़ी अच्छा ब्रेकआउट किया था. सपोर्ट रेजिस्टेंस पे कंसोलिडेशन करने के बाद वहाँ भी आ जाए तो वो भी अच्छा सपोर्ट रहेगा. ओके 5:30 1 मिनट रह गया गाइस 1 minute is left in 5:30 5:30 की कैंडल का ध्यान रखना थोड़ा सा नेचुरल गैस डाउन आए या फिर अपसाइड जाए तो एक अच्छा ट्रेड बन सकता है नीचे 200 सपोर्ट है मुझे लगता है होल्ड करने चाहिए एक ना एक इनमें से ओके 5:30 इज देयर 5:30 हो गया है देखते हैं कुछ मोमेंटम और करता है अब
And we'll buy a home, of course.
And it does come to the forefront in times of uncertainty like this. And certainly, as we think of an environment where the U.S. dollar is rising, there are winners and losers there as well. But overall, we think the diversification is going.
Look at the Bitcoin. Wow, 66,000 trading around. $66,700 अभी 66,000 का लो बना के आया है. प्रीवियस लो भी शायद इसने ब्रेक करने के काफी करीब पहुंच गया. देखते हैं क्या 60,000 की ओर वापस नीचे जाता है क्या. ठीक है, वैसे ये है तो सपोर्ट पर ही. वैसे हायर टाइम फ्रेम पे देखोगे इट इज ऑन सपोर्ट. नीड टू सी कितना डीप लेवल से सपोर्ट लेने जाता है. वीकली देखोगे डेली टाइम फ्रेम पे इट इज ऑन सपोर्ट. मैक्स टू मैक्स 50,000 टू 60,000 या 52,000 के नीचे सस्टेन तो नहीं होना चाहिए हायर टाइम फ्रेम पे. से देखोगे बिटकॉइन में सेलिंग ही चल रही है, रुक ही नहीं रहा प्राइस. अभी क्रूड नेचुरल गैस बोथ कंप्लीटली बुलिश. नेचुरल गैस तो रुक ही नहीं रहा आज. हायर टाइम फ्रेम पे देखोगे थोड़ा सा ऐसा लग रहा है बुलिश डाइवर्जेंस बनाता हुआ एक प्राइस चार्ट पे. लेवल के ऊपर कहीं ये भी सस्टेन करता है तो फिर इसमें ही ब्रेकआउट अच्छा हो सकता है, बिकॉज इसमें अगर थोड़ा ध्यान रखोगे तो ये हायर लोज में चल रहा है अभी फिलहाल के लिए. ऑलमोस्ट कंप्लीटली रैली है वन साइडेड. मॉर्निंग से पुल बैक भी नहीं आया है इवन एट द सपोर्ट. क्रूड ऑयल भी नहीं आ रहा एग्जैक्टली रेजिस्टेंस पे। क्रूड ऑयल को भी देखोगे काफ़ी दूर है अभी भी रेजिस्टेंस एरिया से। ठीक है, देखते हैं। अभी 6 PM तो हो गया है। इस कैंडल में अगर आ जाना चाहिए मेरे अकॉर्डिंग। काफ़ी देर से वेट कर रहे हैं। अगर इस कैंडल पे भी नहीं आता है तो फिर एक पॉसिबिलिटी हो सकती है कि प्राइस थोड़ा सा और ऊपर चला जाए 9440 के आसपास। मतलब आपका जो ऐसा लगा रखा है जहाँ पर हमने, उस एरिया के आसपास जा सकता है, क्योंकि रेजिस्टेंस एरिया पे मॉर्निंग से बैठा हुआ है। यहाँ पर देखोगे 230 से अभी ऑलमोस्ट 630 हो जाएगा। नॉट गुड। परसों वाला ही लेवल है जहाँ से वो न्यूज़ के बाद मार्केट में सेलिंग आ गई थी सडनली ट्रम्प के ट्वीट के बाद। तो मैं सेलिंग ही एक्सपेक्ट कर रहा हूँ इस जोन से। इस कैंडल का वेट करते हैं नेचुरल सॉरी क्रूड ऑयल में। अगर ये नहीं आए लेवल पे 9340 तो फिर हमें थोड़ा सा अपना रेजिस्टेंस शिफ्ट करना पड़ेगा। ज़्यादा देर वेट नहीं कर सकते। काफ़ी देर से वेट कर रहे हैं। अभी तक रेजिस्टेंस के अराउंड आ जाना चाहिए था अपर लेवल पे। बिटकॉइन को भी देखें तो डेली टाइम फ्रेम पे भी कुछ खास दिख नहीं रहा है, रुकेगा नहीं रुकेगा डोंट नो, रे 60,000 के आसपास में 66,600 आ गया ऑलमोस्ट। नीचे ये सपोर्ट तो ठीक ही है आपका 61,000, डेली टाइम फ्रेम पे देखोगे 61,600 टू 64,000 के बीच में सपोर्ट जोन अच्छा ही है। जब तक 61,000 के नीचे मार्केट प्रॉपर्ली डेली टाइम फ्रेम पे दो कैंडल लेके नीचे क्लोज नहीं करता, इट इज गुड। 61,550 के नीचे मुझे लग रहा है अगर डेली टाइम फ्रेम पे कैंडल क्लोजिंग बेसिस पे आ जाती है दो कैंडल, तो फिर थोड़ा सा प्रॉब्लम हो जाएगी इनको, मार्केट देन फॉल मोर। कि अपसाइड जाने के लिए भी मुझे लग रहा है अब जब तक प्राइस वापस बिटकॉइन में डेली टाइम फ्रेम पे 71,600 650 के ऊपर सस्टेन नहीं करता, आई एम नॉट बुलिश नाउ। 71,650 के ऊपर कहीं जाएगा डेली टाइम फ्रेम पे, क्लोजिंग एक दो कैंडल क्लोज करेंगे उसके बाद ही देखेंगे, वो भी एक के ऊपर एक। रिएक्शन लेके गिर गया वहां से, मुझे लग रहा है वापस आएगा 63,500 से 61,500 के बीच में डेफिनेटली। 1 मिनट रह गया, देखते हैं। क्रूड ऑयल मुझे लगता नहीं आएगा लेवल पे अभी। अगर नहीं आया तो फिर लेवल चेंज करेंगे, ध्यान रखना क्रूड में स्पेसिफिकली। देखो कैंडल हो गई क्लोज क्रूड में, ठीक है। नहीं आया अभी भी, हो सकता है यहीं से गिर जाए, बट इट इज नाउ टू रिस्की टू सेल ऑन दिस लेवल क्रूड ऑयल। कैंडल गैप डाउन बनी है, ओपन इक्वल टू लो, ठीक है। आ जाना चाहिए था अभी तक क्रूड ऑयल को, नहीं आ रहा है, इसका मतलब कहीं ना कहीं चांसेस हैं और ऊपर भी जा सकता है। अब इस लेवल पे सेल करना अब सही नहीं है। होगा कुछ नहीं, बस थोड़ा सा शिफ्ट कर देंगे एसएल को और एंट्री पॉइंट को, नथिंग एल्स। इतना वेट नहीं कर सकते एक ही लेवल पे। जहाँ पर एसएल पॉइंट था वो आपका एंट्री पॉइंट बन जाएगा, नथिंग एल्स। लगता है इसी सेलिंग आ जाए, बट आई एम नॉट इंटरेस्टेड। बट याद रखना, अभी अगर अपसाइड आया तो जरूरी नहीं है कि बिल्कुल टॉप तक जाएगा, लेवल को टच करके भी सेलिंग आ सकती है उस केस में। आधा घंटा रह गया. US market also going to open at 7:30. तो अभी देखोगे 67, 60, 60 to 70 रेंज बना दी है इसने भी लोअर एंड के आसपास. बाकी देखो एक पॉसिबिलिटी बन सकती है सिल्वर अगर रिबाउंड करता है इन केस तो वापस 78 टू 88 नहीं 78 तो 88 बहुत लाइक 80 टू 86 डॉलर फिर से जा सकता है राउंड नंबर लोगे तो लाइक 80 टू 83 वहां जा सकता है वैसे वहां से सेलिंग कंटिन्यू है नीचे कोई सपोर्ट अभी मेरे को दिख तो नहीं रहा है लाइक 4 आवर एंड उससे अबव टाइम फ्रेम पे तो कोई सपोर्ट नहीं है तो मोस्टली 1 आवर टाइम फ्रेम या उसके नीचे ही कहीं सपोर्ट मिलेगा इसे ठीक है, क्रूड ऑयल ओपन इक्वल टू लो। ठीक है, मुझे लग रहा था, इसलिए मैंने थोड़ी देर पहले आप लोगों को बोला यहाँ पर सेलिंग आनी होती ना, रेजिस्टेंस पे काफ़ी देर से रुका हुआ है, इतना देर रुकना नहीं चाहिए, प्राइस सेलिंग में आ जाता है रेजिस्टेंस जोन के आसपास ही ट्राई करेगा, पहले एसएल उड़ा दे और फिर आए नीचे, थोड़ा ऊपर जाके नीचे आएगा तो सेलिंग करेंगे यहाँ से, अच्छा लेवल है। बीच में मुझे और कोई सपोर्ट नज़र तो आ नहीं रहा जब तक ब्रेकआउट नहीं होता ये लेवल अब। नेचुरल गैस भी देखोगे रिबाउंड हो गया, कोई न्यूज़ तो नहीं आ गई, लेट्स सी। Iran new supreme leader Mosbata Khamenei has not agreed to negotiations as per the Axios report. Not good. IRGC published a list naming offices tied to Google, Microsoft, Palantir, IBM, Nvidia, and Oracle across Israeli and Gulf location as a new target. कोई मेजर न्यूज़ तो है नहीं फिलहाल के लिए. दैट इज़ द ओनली न्यूज़ राइट नाउ. Okay, US market is also going to open. Natural gas भी sideways हो गया, नहीं आ रहा है resistance पे.
Results that beat expectations. Shares are still down 3%. CEO Josh Weinstein says the company delivered a strong start to the year, driven by healthy fundamentals and solid execution across the business. But maybe the greater concern is what's happening in oil markets. Let's go back over the desk, because joining us now, and
sitting here patiently waiting is Sarah Hunt, Chief Market Strategist at Alpine Saxon Woods. Sarah, great to see you this morning. Thanks for joining. Just staying on the idea of Carnival earnings, because it's still down and there's been so much sour sentiment towards travel stocks because of fuel, because of consumer appetite. How are you looking at the sector as the war drags on? Is this a place that you can play in this market?
I think that ultimately we've seen when you get shocks like this, the stocks have a bad reaction, and if things resolve themselves, but also in general, they will tend to bounce back. The question is it too early to start that? And I don't know that we know the answer yet. It's certainly a good time to be looking at these and choosing what you would like to be in when you sort of feel like there's some sort of stabilization. But for the most part, you want to look at balance sheets, you want to look at cash flow and understand, can they get through some sort of period of softness? But generally speaking, that's generally been a good opportunity to look at those.
The thing that I'm kind of struggling with is you want to look for a safe balance sheet and where cash is to protect you and safety. And that's brought up with a lot of people saying maybe big tech is the place for safety. But I'm also looking at the NASDAQ this morning, down 0.7%, which means it's now in a correction, down 10% from its October highs. What do you make of this? Is this not currently a nice little safe, cozy place to hide out in the midst of geopolitical strife?
So this is definitely a time frame issue, right? Because we came into this year on valuations that were pretty high, looking for a year where you thought you were going to see expanded capex and things were going to move along and the economy was okay and labor markets were okay. And now we have a number of exogenous shocks, including what's going on with Iran. Interest rates have gone higher. There's a number of things going on. Private credit is having some problems. There are a number of things that are going on. So from a longer term perspective, are those good places to be? Yes, they are. Can they have some near term pain? Absolutely. Because you see that the growth issues are being there's a lot of concern about that, and then interest rates add to that. So I think in the near term, they're a little bit stuck, but longer term, not so much.
By the way, it does feel like whack-a-mole. Private credit, concerns of geopolitics, what AI is doing in general tech. I mean, on the AI point, I mentioned this before, that Fortune had out some story about Anthropic releasing a new model that seemingly is putting pressure on cybersecurity stocks. Are we? I thought we were past this, Sarah, that we were past the world that like one tiny announcement comes out and it crushes stocks. What do you make of the fact that we're still so sensitive to AI disruption for software?
I think that the general level of uncertainty and all of the things that are going on makes everybody especially sensitive. I think absent some of the other things that maybe people would look through that. But with AI, that revolving threat has been going after different segments of software, different segments of other things, and people get really worried about it. And then you already have reasons, I think, to the extent that sometimes when there looks like there's a relief to the situation, the market wants to go higher, tells you people want to buy. The fact that they're so sensitive to things also tells you that people are worried and they're worried about valuations. So it's easy to see sectors get moved around, which is, again, a time frame issue. Because from a longer perspective, I don't think it's much of a problem. On a near-term perspective, it obviously has some sensitivity.
And it's a good point, because we had also been hearing in terms of the time frame issue that people came in before the war broke out, that they were short some of these tech stocks. War breaks out, they get low to the ground, so they unwind a lot of those shorts and they rally. Maybe that's over and they can add back. How much are you looking at general market positioning as driving where we are right now versus fundamentals?
Well, I think that this was one of the big issues about coming into this year. We expected some volatility. We didn't expect this much volatility, and I don't think anybody had this on their bingo card of what was going to happen. But I think that you had people positioned for, again, some pretty benign outcomes, and I think right now we're looking at the potential for some outcomes that are less benign than we started the year with. So I think that gives you some problems. And as people work through those, then you start to see some room and some possibility. You also don't want to get to the point where everything is so short, you could end up with a short squeeze. That can happen in a lot of different sectors. So I think, you want to look at positioning because it gives you an idea of where people are starting and how much room there is.
There is also a continued sell-off, and it's actually a curve steepening today. The 10-year yield is up 5 basis points at 446. It's easily up 0.5% since the war broke out. As we creep closer to 4.5%, do certain trades start to become under pressure? Does a 10-year yield at 4.5% break anything?
I think in the same reason that does oil at any X price break anything, the question is, are we staying at these levels or have we run to these levels because of what's going on right now? And I don't know what the answer is. If we stay at these levels, it could be a problem for all of the things we've talked about. Certainly the small cap trade that was having trouble in the beginning of the year as people were starting to worry about what was going to happen. I think that there is always a reason to think that there could be problems. The question really is how long does it stay there? And I don't think we know the answer to that yet. But the longer this goes on, the more it feels sustained.
Do we have an answer to the length at which it becomes a problem? Is this like it needs to last a year? Is it months? Because we've seen that corporate America is incredibly resilient. I mean, Barclays was just on surveillance raising their price target, saying that the fundamentals and the bottom up look really strong. So how well equipped is corporate America to weather through any sort of sustained energy price increases?
I think the combination of higher energy prices and higher interest rates is much harder. But I also think that if you got some sort of a resolution where at least you started to see things transit through the strait, right? Because I don't know what else the resolution is going to be, but you have to see energy start to move for those prices to come down. If that comes down and it takes interest rates with it, then I think that you don't really have that much of a problem. And corporate America is enormously resilient and has managed to, I mean, I go back to when they started raising interest rates to begin with off of zero. And everyone said, well, we're going to crush the economy because we've gone from zero to where we are. I think that there is a lot of resiliency there. I think there was some dry powder there. I think the question is the longer it goes on, the more tenuous that becomes.
Sarah, just before I let you go, I would love to know how you're thinking about general portfolio construction at this moment. 60-40 is on track for its worst run since 2022. Gold's it's a momentum asset, I guess, now. It's not really providing any sort of hedge. Clearly, bonds aren't either. How are you thinking about the construction and what actually makes for a diversified, well-hedged portfolio in this type of scenario?
So, you know, when you get a couple of years in a row where everything is ridden by tech, and tech is the one that's driving all of the performance, it's much harder to look at the portfolio and say, we really like where we are. But we have been dividend people. We have been capital return people. We have been looking for companies that can grow their cash flow, grow their earnings, and do the kind of things year in and year out under a variety of circumstances. I think that's a time for that sort of construction to shine that is across industries. It's not only certain sectors. You know that certain sectors are going to get hurt by this, but you want to be, again, this is a long-term positioning question. This isn't what do I need for 6 months? Because what you need for 6 months, some of that should have been liquid already. Gold had a huge run, and so it looked like it was going off to the moon. The fact that it's acting the way it's acting right now tells you that there was probably a lot of speculative fervor in there, and so some of that is coming off. But longer term, does it still have a position in the portfolio? You know, we like the miners as opposed to simply gold exposure because they will do well from that, and some of them pay dividends as well. So there's a lot of ways to express an opinion.
It sounds like some good opportunities in that too then.
Absolutely. If you take a look at some of the mining stocks, they've come off quite a bit. I mean, Newmont has come down from 120s to sub 100. There's a lot of places where if you think that some sort of price above the 2,000 or 3,000 level is going to be positive for these stocks, you've got some room there. I think energy's become reinvestable again because for a while it wasn't investable. Everybody thought that we were getting away from hydrocarbons. I think this is an example of that, how that is not the case. But it means that maybe you have some in there. And again, this is a dividend paying group. This is a cash flow generating group. So I think that there's some room for people to look at sectors that have been sort of left by the wayside here. But longer term, you know, we've been doing that anyway. So we think this is a good year for that.
Sarah, thank you so much for joining. Please enjoy the rest of your Friday and your weekend. Sarah Hunt of Alpine Saxon Woods. Let's get a check on your equity market about 10 minutes into your trading day, down 0.6% for the NASDAQ. If we close at these levels, we are going to hit a correction down 10%. I just want to point out Apple at the top of the stack in terms of points added. It's only up 0.4%. But Mark Gurman had this really good story that Apple plans to unleash its Siri with AI, and basically you can choose the LLM. So they're not going to be spending a bunch of money on OpenAI or Anthropic. Maybe Apple is going to win the AI race by not spending any money. Maybe that was the genius move all along. Elsewhere, we are seeing a rebound in some of these chip stocks that have gotten hit. The memory stocks like SanDisk, Lam Research on that report that we saw earlier in the week about Google's release, Exxon doing well, energy stocks doing well. That's not a surprise. In the down ledger, look at these big cap tech having a really tough day. Microsoft, Amazon, Alphabet, all of them down at least 1.5%. Tesla, it is the Mag 7. A who's who minus Apple of selling off and selling off hard. Just want to point out, you can see Palo Alto at the bottom there. That was an issue that we've been talking about with a Fortune report about a new release from Anthropic. Looking at the sectors, staples are having a really good day. Michael Hartnett from Bank of America recommended staples as a place to hide out when we get more government stimulus to try to avoid a recession. Energy and utilities do well. Energy up with the price of oil, and consumer discretionary with Carnival falling at the bottom of the pile. Coming up, we're going to talk about that. Carnival issuing weaker full-year guidance as fuel costs rise. We're going to take a deep dive next. This is Bloomberg Open Interest.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies. 1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The losses stack up for this week. We are now down for a 5th consecutive week, the longest losing streak since 2022, as Brent crude inches higher by 2.5%, and 10-year yields sit at just under 4.45. Now time for some top calls. Let's look at the analyst action this morning. First up, JP Morgan. They upgrade the power plant builder Argan after reporting a strong fourth quarter. The firm sees several potential catalysts on the horizon, up a whopping 22.5%. Next up, Evercore, they raise its rating on the trucking company Knight-Swift Transportation, citing its valuation and saying it will benefit from an upturn in the trucking business, but shares fall 0.5%. Finally, Bank of America, they upgrade TripAdvisor to a buy, saying pressure from the activist investor Starboard is increasing and could unlock more value, up 3.2%. By the way, I spoke with Jeff Smith of Starboard about his plans for TripAdvisor on the Bloomberg Deal Show. You can find that conversation on the Bloomberg terminal or on Bloomberg.com. Let's get a check-in on Carnival shares because they are down only 0.8%. They were worse before. They're bouncing around. They reported first quarter results. Its full year adjusted EPS missed estimates. Bloomberg consumer reporter Red Brown joins me now for more on the results. Red, you've been looking through these. What do you make of what we had to hear from Carnival?
Yeah, well, I think this is kind of jumping off the page. Just across the board, they missed with their outlook. They're still saying that there's demand is going to be really strong. They're saying kind of record levels of demand. This is something we've been hearing from cruise companies for a few years now. But I think we're starting to see maybe some of these costs kind of creep in, especially the fuel costs. One thing to keep in mind with Carnival, in comparison to its rivals, Royal and Norwegian, is Carnival actually doesn't hedge its fuel prices. So we are going to see like a little bit of that impact from the recent change in fuel prices impact them a little bit. They said in the second quarter they're expecting to see fuel costs around $610 million. Analysts were expecting $540 million, So yeah, we're definitely seeing that impact kind of hitting the bottom line right away for Carnival.
Yeah, because I was just looking at what's in their assumptions for their guidance for the price of oil. So $90 for the remainder of April and May, $85 average for the third quarter, $80 for the fourth quarter. Presumably that is an assumption to make. If the Strait of Hormuz remains closed, maybe we stay more towards the 90 region. What does it mean for a company like Carnival? Do they have the capacity to raise ticket prices if all of a sudden they're going to see higher fuel costs?
Yeah, no, that's a great point. And they can, because the demand is so strong. I think, if I'm remembering correctly, they said they have 85% of their trips already booked for 2026. So once it's in that final 15%, they can still raise prices because the supply is so limited. Like they said, the demand is at record levels. So there is still that lever that they can pull on, but it kind of remains to be seen. You know, maybe demand does change as we move through the year. If the economy does start to wobble a little bit more with the elevated prices as well. So there's still a lot of things that could, it's very dynamic, I think, still for them.
Yeah, I mean, the market is maybe concerned. I think they're down like 20% since the war broke out. So that's not necessarily great. What are you seeing from other consumer-facing companies and their ability to raise prices? Because you're starting to see it creep in. I mean, a government company, USPS, for example, is talking about a surcharge. According to a Wall Street Journal report, Delta, 20% increase too. Where are you seeing those price increases come in, and whether the consumer is able to handle them? Is it just like traveling, for example?
It's really tough right now. So if we think of just like the CPG companies, they've been so reluctant to raise prices now because they have done for so long. They're really focused on increasing volumes, right? But now with the costs coming up, you know, you're in a difficult position. The packaging costs are going to be rising, fuel costs are going to be rising, transportation costs are rising. So what do you do in that situation when you're so focused on improving your market share, improving your volume? So I think it will probably take us another earnings season before we start to get a really good sense of how companies are going to navigate this. Whether or not, you know, we can use Carnival as an example. They say that they're going to find $150 million of efficiencies, of operational efficiencies this year. So maybe they don't have to pass those prices on. But I don't know, you know, those can sometimes be a bit of a guess, right? It's an estimate for them. So it depends whether or not they're actually going to be able to achieve that goal and not pass the prices on.
Yeah, because we haven't had a complete rethink like we had in COVID or in tariffs of completely altering supply chains. Will be interesting to see if we get to a point where there is a reaction like that. Red, thank you so much for joining us. That's Bloomberg's Red Brown, as Carnival shares are slightly lower after a miss across the board. Coming up, a historic shift. Investors are pulling record amounts out of commodity ETFs, defying their safe haven role. That's next up on ETF Fridays. This is Bloomberg Open Interest.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back to Bloomberg Open Interest. Let's get a check on your markets this morning. About 20 minutes into your trading day, still a negative session, still on track for a fifth consecutive weekly loss, being led by tech. It's a tough day. It's like all the fears come together. You have war, you have AI concerns weighing on the cybersecurity stocks, and still private credit a concern too, with Oaktree meeting all of their redemptions in one of their BDCs. So S&P falls 0.7, NASDAQ down almost 1%, now in a correction. Russell not doing well either because of what we're seeing in yields. Yields continue to creep higher, but this time it's not necessarily the front end, it's the long end that's leading it. In fact, we're rallying on the front end. We're down by 1.5 basis points, but we are pricing in now maybe longer term uncertainty, maybe longer term inflation as this conflict drags out, as President Trump says, not 5 days of a pause now it's 10 days to allow more room for negotiations. What does that do to the long-term uncertainty? 10-year yields at 4.45. What happens if we get to 4.5%? What breaks? NYMEX crude, that's up 3.2%. Brent crude not gaining as much. That's an interesting thing too. Brent crude only up 0.7%. And great news, everybody. Gold is rallying. I mean, it's fallen quite a bit since this war broke out, but it's up 1.2%. The Gold Trust ETF also up 1.5%. There have been so many questions as to whether this is still a hedge, but we did see commodity ETFs a record outflow as the Iran war rattles global markets. Roughly $11 billion has been pulled, with gold-focused funds taking the biggest hit. Let's get more insight now from James Safer, ETF strategist analyst for Bloomberg Intelligence. James, I got to say, okay, maybe the gold ETF makes sense because there was so much momentum. The air comes out. But broader commodity ETFs, what gives as the price of energy moves higher?
Yeah, I mean, part of it is people were trying to, bet on it going up and they're taking profits. I think a lot of it has to do with the fact that you kind of saw this in major crisis, right? Like if you go back to 2008, the funds that bet on the housing crash, like they actually saw redemptions because people were going what has done well and taking their cash out. I mean, we've seen that all these things are not great hedges. As you just talked about, gold is down pretty hard right now. It's rallying slightly today, but over the last month, it hasn't been great. If you look at gold ETFs from the start of 2025 through the end of February, they had record inflows, 65 billion. But as you pointed out as well, 15 billion has come out so far in March. So I think a lot of it is, one, the hedges aren't working that great, whether it's bonds in general or gold. The only hedges that are really working are cash, and we see that with record money market assets, record money going into ultra-short bond funds like T-bills. But again, people are taking money. They're seeing gold go down a little bit, and they were like, it's already up. So why would I sell something that's down pretty hard when I can sell something that's up? And that's what I think contributed to what happened in March.
Yeah, we've seen some of that in the fund manager surveys from Bank of America, that cash has been really attractive to rotate into. The biggest rotation into cash, I think, since 2022. James, another area that people like to talk about is kind of a safe place to hide out when there's geopolitical uncertainty is tech. That hasn't really been working out. I was just talking about the NASDAQ entering into a correction. What do tech ETF flows look like?
Yeah, so it's funny. To absolutely nobody's surprise, tech usually is the #1 sector for ETF flows. That is going to be upended for the first time since like early 2023, where energy has taken in the most money, or energy, specifically equity. Industrials is doing well, materials is doing well. Thematic ETFs that invest in things like infrastructure and natural resources, basically anything in the real economy, that's where most of the money is going. People are betting on, these supply chain disruptions and people actually having to build real things. But it's not like tech is seeing outflows. They're still seeing inflows. It's just that that's not where the money is necessarily going.
Right. I mean, maybe it's a good buy the dip. NASDAQ down 1.1% this morning. James, more broadly, there have been some reports about how retail investors haven't really been buying the dip this week for the first time. They sold NVIDIA for the first time since July on a net basis. Are you seeing any of that hesitation to dip buy starting to come through to the broader ETF universe as well?
Maybe a little, but there's nothing that's like jumping off the page. I mean, people are still trading these 2X products. They're still jumping into, yes, there's been recent outflows, some broad commodity stuff, but specifically broad commodity-based ETFs, there's people still allocating to them, diversifying. People are still betting on oil going up in many ways. It's just that you're never going to see these traders step away, but we're not seeing like massive, people trying to bet on what's happening from retail in the way that we were when this first started, a month ago.
All right, James, thank you very much. That's James Seifert from the Bloomberg Intelligence team. As stocks continue to fall, now falling on a report of a U.S. strike on a steel plant in Iran. We're looking at stocks down 0.9%. The NASDAQ falls 1.1%. We'll keep you up to date with any headlines as they come. You're watching Open Interest.
Nobu-san, would you say, when you look at your career, that the pivotal moment was actually that meeting with Robert De Niro? It took him 4 years to convince you to open a restaurant near him. You eventually did, and that started a partnership that has lasted through the decade.
You know, I met him 1988 after my first restaurant opened. He asked me to come to open a restaurant in New York. And beginning, I didn't know what he did.
You didn't know he was an actor?
No, I don't know what he doing. Because I never watched the movies, you know, I was traveling the business. But of course, after, you know, people, hey, Nobu, so you must know him. And then I understand.
How is he as a partner?
He's for me, and a great partner. He understands to my concept. He support me 100%. But he's a very smart people. Sometimes, so strange idea, but it's good idea. So, example, Nobu Hotels, idea come from him. He said, hey, Nobu, so we have a lot of new restaurants coming in somebody's hotel. For him, doesn't make any sense. Then we start Nobu Hotels in Las Vegas 11 years ago. Now it's a big success. So next step is the residence.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Lawmakers on Capitol Hill have made a move to end the crisis at airports. Correspondent Nicole Killian.
Just after 2 a.m. here on the East Coast, the Senate voted to unanimously fund most of the Department of Homeland Security. That includes TSA and other parts of DHS like FEMA and the Coast Guard. But funding for ICE and CBP or Customs and Border Protection is not included.
The House could vote as early as today before lawmakers break for the Easter Passover holidays. More airline passengers are donating to help TSA workers who've been on the job without getting paid. Ellen Dean dropped a gift card in a box at Birmingham Shuttlesworth Airport in Alabama.
I don't think it's fair at all. I think these people should be paid. They're the ones for our security. And to not be paid, I give the ones credit that are showing up.
So far, no comment from Iran after President Trump announced he was giving Tehran 10 more days to reopen the Strait of Hormuz in a new bid to bring the war to a close. Correspondent Chris Livesay reports from Dubai.
Publicly, the Iranians certainly are denying that they are, quote, begging to make a deal, as President Trump has characterized it. Instead, they're doubling down on their previous demands. They want the United States, of course, to cease hostilities. They also want to basically own the Strait of Hormuz.
Brent oil tops $110 again after 2 ships from China, an Iranian ally, were turned away from the strait today. Things will heat up across the South today. Meteorologist Craig Allen.
Dozens and dozens of record-high temperatures are expected at least one more time in the east. So Augusta, Georgia, South Carolina, it would be Charleston, North Carolina may see a city like Charlotte getting into the mid to upper 80s to near 90 degrees.
There is a cold front moving east, and that's expected to have temperatures plunging tonight into tomorrow. A baseball star is suing his parents. CBS's Michael Wallace.
It is gone! Opposite field, home run, Alec Bohm!
The Philadelphia Phillies third baseman led his team to an opening day win Thursday, a day after he sued his parents for $3 million. Bohm claims they misappropriated his funds while managing limited liability companies on his behalf and misrepresented their stake in those LLCs. An attorney for the parents says they have always acted in their son's best interests and are saddened by the false narrative he is painting.
Savannah Guthrie is set to return to the Today Show. NBC says she'll be back a week from Monday, following a 2-month absence after her mother's kidnapping. The Dow is down 495. This is CBS News. As March Madness revs up, a court rules on that pervasive 2-word term, and others like it.
A federal judge has denied the NCAA's motion for a temporary restraining order to stop DraftKings from using registered trademarks associated with the men's and women's basketball tournaments. The NCAA requested DraftKings stop using March Madness, Final Four, Elite 8, and Sweet 16, and variations of those terms to promote its business. The judge indicated it was not demonstrated how the online sports wagering platform's use of those terms would cause irreparable harm. Steve Kathan, CBS News.
Love was in the air at the iHeartRadio Awards when Taylor Swift picked up one of her 7 prizes.
This album probably also feels very happy and confident and free because that's the way that I get to feel every single day of my life because of my fiance, who's here.
Deborah Rodriguez.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Friday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We are streaming live on Bloomberg.com as well. Coming up, we're going to check in with Joanne Shu. University of Michigan surveys. The UMich survey came out today. Headline a little bit weaker than expected. We'll break that down coming up with Joanne. Nancy Daoud, a private wealth advisor at Ameriprise Financial, will join us, give us her thoughts on these markets going forward. And then Brendan Murray, Bloomberg News global trade editor. Talk to us about U.S.-China global trade. We got a summit coming up, and how's the trade situation look? Wendy Schiller will give us the latest on what's happening in Iran, U.S., Israel. She's at the Brown University as well. Randall Williams, Bloomberg Business and Sports reporter, is going to talk to us about the NBA. It looks like the NBA wants to expand here, talking about maybe Vegas, maybe Seattle. It's going to cost you some big money if you want to get into this league. So we got a lot coming up over the next couple hours. It's Scarlett Fu and it's Paul Sweeney, and this is the Bloomberg Intelligence Program. Let's kick it all off with Charlie Pellet.
Hi, thank you very much. And here's what's going on. This Bloomberg Business Flash is brought to you by IBKR. Will the price of gold exceed $51.50 on March 31st, 2026? Turn your view into a trade at ibkr.com/forecast. Last trading day, March 31st. As Paul mentioned, just getting word that consumer sentiment slipping to a 3-month low in March, and year-ahead inflation expectations jumping as the war in the Middle East drives up gasoline prices. A whole lot more on the University of Michigan's final March sentiment index coming up in just a moment with Joanne Shu. The Dow, the S&P, NASDAQ all lower. NASDAQ 100 index moves into a correction. S&P right now down 61, 64.15 where we stand, drop there of 0.9%. The Dow down 454, drop of 1%. Nasdaq Composite Index down now by 275, down 1.4%. Nasdaq 100 Index down 1.2%. The VIX with a 30 handle right now. The 10-year 4.44%. The 2-year 3.94%. Gold up $79 the ounce, up 1.8%. West Texas Intermediate Crude, the big story, 97 a barrel, up 3%. Brent pushing higher as well, 110.27, a gain there of 2.1%. Bitcoin down now by 3.8%, 66,331. Again, recapping, stocks lower, S&P down 0.9%, the VIX at 30. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here with you in the Bloomberg Interactive Broker Studio, streaming live on YouTube and streaming live on Bloomberg.com. As Charlie's just reporting, we've got a broad sell-off in the marketplace here today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Christina Aquino. Christine, what are you looking at today?
All right, let's start with Halliburton, Paul. Ticker HAL. That share is doing well today, up 2.7%, and that is because J.P. Morgan raised its price target on the company, saying that it expects limited first quarter earnings impact from the Iran war compared with its other peers. So J.P. Morgan rating the stock overweight, so maintaining that rating, but they did raise the price target to $40 from $35. Current stock price around $39. And so analysts from J.P. Morgan citing that the fact that Halliburton maintained its guidance for Saudi Arabia and North America compared with lower guidance by some of its peers helps keep up its rating there and the outlook as well. Although second quarter earnings could see some impact from the war, but not majorly so at the moment.
All right, and let's move on to your second stock in the tech space.
Absolutely, Scarlett. Let's take a look at Meta. So ticker META. Those shares are down today, extending some of those opening declines, now down 2.7%. And of course, we all know that Meta and Google were found liable in the first social media addiction trial. So companies, of course, have responded to the verdict. They disagree. And Meta says that it is evaluating its legal options. We do have Bloomberg Intelligence analysts weighing in on the verdict and its impact for the company, saying that ultimately it's unlikely to have a material business impact, given that the case, while it was strong, it wasn't a unanimous decision. And so that could potentially poke some holes in the arguments depending on how the appeal process goes.
Carnival Cruise Lines.
Carnival Cruise Lines. We just got the report earlier today, and that is not boding well for the share. So ticker CCL, those shares are down now more than 3% at the moment, and that is because we did get some disappointing outlooks for the company for both the second quarter period and the full year period. So first quarter adjusted EPS actually beat estimates. That came in at 20 cents versus 18 cents, but it's the outlook that investors are worried about clearly. So for the full year, EPS outlook is about $2.21. The estimate was $2.35. I also note that their fuel costs bigger than expected, as one would expect. So now they're seeing their fuel costs for the second quarter $610 million versus $539 for the estimate.
Good stuff. Thank you so much. Christina Aquino is Bloomberg Managing Editor for Markets Live. She just got back from Asia, too. How'd that go?
I did. I loved it. 2 weeks in Asia. Fantastic. 90-degree weather, 100% humidity all the time. But at the end of it, I was like, you know what? I miss sleeping in my own bed and I miss my cat.
Yeah. Makes sense. All right. Welcome back, Christina. And for, of course, more conversations like this, subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We got some data today, Paul Sweeney.
Yes.
And consumers are, as you might expect, worried about rising oil prices and what that means for inflation.
Yeah, U.S. consumer sentiment slid to a 3-month low in March, and year-ahead inflation expectations jumped as the war in the Middle East drives up gasoline prices. So there you go.
There you go. All right, let's bring in Joanne Shu. She is University of Michigan Surveys of Consumers Director to walk us through what we've seen in this data. And by the way, this is the final read for the month of March. Just kind of sum up for us, Joanne, what this report tells us.
Essentially, after the start of the Iran war, we have consumers being quite worried about the trajectory of the economy. Primarily, this is coming through worries about both gas prices and inflation overall. We have a pretty large surge in short-run inflation expectations, and we had a deterioration in one-year expectations on multiple dimensions of the economy. But interestingly, consumers don't necessarily think that this is necessarily going to pass through to long-term deterioration in the economy. They think it's primarily focused on the short run.
So talk to us about, Joanne, just kind of how the labor market plays into this, because the labor market's still pretty robust. We got some jobless claims yesterday that were pretty much in line. So how's the labor play into it?
So consumers perceive that labor markets are much weaker now than they were a few years ago. And a majority of consumers are still expecting unemployment to rise in the year ahead. So consumers don't think that labor markets are going to be super strong over the next 12 months, but there hasn't been too much of a deterioration from February. The primary deterioration we saw from last month was with inflation, as well as personal finances and business conditions.
When you look at the inflation outlook, is it surprising that most of the concern is focused on the short term and not on the long term? At what point would you start to maybe see some of that spill over into long-term expectations?
There are a couple of reasons why consumers might not think that the current conflict may pass through to long-run inflation. And one is that they might think that the conflict is not going to take that long. So if the conflict ends quickly, that would be consistent with limiting the long-term implications of this current conflict. And there are also a subset of consumers who believe that the conflict itself might lower energy prices relative to where they were before, or lower inflation. So there is kind of a mix of views. If the conflict continues to drag on, consumer views could very well change quite quickly.
Is this data skewed in any way by political affiliation?
You know, as always, people across the political distribution don't always agree or see eye to eye on how things are going. It's always the case that if your party's in power in the White House, you tend to see the economy more favorably, and right now is no different. That being said, this broad-based deterioration in business conditions, personal finances, inflation expectations from February, we saw that among both Democrats and Republicans alike.
Have you started to see any kind of convergence between Democrats, Republicans, or independents? I mean, they've kind of all gone in their own direction, depending on whether Biden is a president or whether Trump is president. But after a while, do you start to see any kind of convergence?
So both in the previous Trump administration, the Biden administration, and now, even though there are level differences between consumers of different parties, they tend to move in parallel, and that continues to be the case now. Consumers across the political spectrum see the short-term economic outlook as worse than it was prior to the start of the Iran conflict, even if they may differ on their beliefs about what that might do to the long term in terms of lowering gas prices in the long term.
Joanne, thanks so much. Appreciate it. Joanne Shu, Surveys of Consumers Director at the University of Michigan. A stock-specific story that got my attention, Scarlett. Microsoft set for its worst quarter since 2008 as AI takes 2 bites. And the story goes on to say, you know, first of all, people are concerned about all this software CapEx on AI. That's number one, and Microsoft's all in on that. And then second, investors are selling software stocks over fears that AI startups like Anthropic and OpenAI are creating agents that can replace products made by companies like Microsoft. So, I mean, Microsoft is a story. If you talk to any tech investor, like a Dan Ives, for example,
right,
you ask him, hey, top pick, and he says, a lot of them are just reflexively over the years have said Microsoft because they have such a deep moat around their products.
And for a long time, it was a proxy to OpenAI as well because of their relationship with that startup. You know, I was just looking at the price action for Microsoft, and in the past 3 weeks, that stock has risen only one time each week. So you have 15 trading days, and the stock has gained in 3 of those instances.
Yep, stock's down 2% today, down about 25% year to date. So you don't typically see that for this stock. Again, kind of a bellwether here, but it goes to that issue that we were talking about before the Iran war news, and one of the key topics was AI. And the market now seems to be in a position where the market is trying to figure out who are the winners and losers potentially from greater adoption of artificial intelligence. And the software stocks broadly defined we're feeling some of the wrath there.
And Microsoft, again, was one of the better performers when the AI story really began, right? It was seen as, I don't want to say as resilient, but just certainly holding up better because it was able to take advantage of its position with OpenAI. Of course, that kind of changed in 2025 when Alphabet became kind of the poster child of companies that were really pressing their advantage with AI.
Yeah, and I think the consensus coming off of Wall Street as it relates to these software stocks is if you've got a software stock that's got a big, big moat around it, where it's really entrenched in enterprises, probably okay long term. And I think that's where you would put Microsoft, clearly put that at the top of the list.
A utility software maker.
Yes, if you're kind of a one-off, standoff, one-trick pony, two-trick pony, where you're not really entrenched, maybe that's the ones that are at risk. But again,
I'm pretty sure we're going to be talking about Microsoft in 5 years' time or 10 years' time.
I think so. Again, the sell-off continues here with the S&P off 0.75%. The Nasdaq off about 1.1%. That's in part because oil is up about 2.5% here on WTI crude oil. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. The NASDAQ 100 index in correction territory. This after a 10% decline from its peak. Right now, the NASDAQ 100 index down another 1%. Dow, S&P, NASDAQ all in the red with the S&P down 48. Drop there of 0.7%. Dow Industrials down 362. A decline of 0.8. NASDAQ down 1.1%. Again, correction now for the NASDAQ 100 index down 1%. The VIX right around 30, the 10-year 4.44% with the 2-year currently yielding 3.95%. Spot gold up $83 the ounce today, 44.60 where we stand, up 1.9%. West Texas Intermediate crude. Keep it locked into Bloomberg. We will continually update you throughout the day on what's happening with crude prices. WTI right now 97.58 a barrel, up 3.3%. Brent, the global benchmark, above 110 now, up by 2.2%. So again, the Dow, the S&P, NASDAQ, all trading lower. We're keeping an eye on Netflix shares. Netflix gaining again today, up another 0.3% after announcing price increases yesterday of its standard streaming subscription with ads going up by $1 to $8.99 a month. Recapping, S&P down 0.9%. The VIX right around 30. And a 10-year 4.44%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. I mean, when Charlie Pellet tells you that the NASDAQ's into correction territory, that gets your attention. That means something's going on out there. And I guess it's that old higher for longer as we think about energy prices. That's what the experts told us a month ago. Hey, if it's higher for longer, there could be some problems. Well, here we are. Nancy Daoud, she's a private wealth advisor at Ameriprise Financial. She joins us via Zoom from Miami, Florida. And I guess if you're into sunny and 80 degrees, I guess Miami's okay. Those of us, yeah, exactly. Hey, Nancy, what are the conversations you're having with your clients over, the last several weeks? Because this is starting to get old here.
Yes, headlines are clearly overwhelming, and the market is grappling with conflicting narratives around the war and what's going to happen. And of course, oil prices are in the driver's seat, and that's what's causing the ups and downs in the markets. The advice really is to, yes, it's been 4 weeks. Yes, it's overwhelming, but stay level-headed and don't let the headlines scare you. Staying the course is the best course of action if you're fully invested. And if you're not fully invested, what an incredible opportunity. Because, by the way, this too shall pass eventually. I mean, it's not going to last forever. The key, though, is how long will it last? If it gets wrapped up within the next few weeks, then the prospects are very positive. If it does linger on to a much longer time frame, that could certainly cause some problems.
Certainly, there are a lot of areas where there's opportunity, but is there any area, sector, for instance, where it's still not time to get in because things still look pretty lofty?
Well, it will always look lofty. There's no way to time, this is the best day to get in. So my advice would be to do some dollar cost averaging, because as you could see, the volatility is pretty heavy. I mean, it's big swings every day. So if you're looking to be opportunistic and to get in, I would do it periodically, not all in one day. That would make much more sense.
Nancy, we had a little bit of a rotation starting towards the end of last year out of some of the larger, high cap, maybe higher growth technology names into some more cyclical, maybe into some small and mid cap stocks as well. How do you think about that rotation play versus sticking with what's kind of really worked for investors over many, many years, which is those big cap growth names?
Yeah, I think it's actually exciting. And we always like a broadening of the market. We don't like it when just a handful of stocks or one sector dominates the market. I do like the broadening and the diversification. And the reason that that's happened, of course, is because AI is touching every sector and every single kind of company. It's not just technology. If you're a corporation that's not engaging in AI in some way, shape, or form, you're going to become a dinosaur. So it's pretty much spreading across the board. and that's good news for stocks, because then you could be well diversified and not feel those big swings up and down like we did with just tech.
Of course, it's a midterm election year, and we're going to start to see elected officials start talking up, including President Trump, talking up certain sectors, perhaps promising better prospects for certain industries than others. How are you thinking about positioning ahead of the midterm election, or is it too early for something like that?
Well, it's never too early because election seasons seem to take forever and they're exhausting. But right now, the headlines are really around the conflict in Iran and what's going to happen. We just don't know. There's a great deal of uncertainty and a great deal of unknowns. And it really depends on who you're listening to. There are very, very wide opinions about this. Some people will say, oh, yeah, we're about to finish this up and we've won and everything is going to be great. And then you hear the other side and it's like, well, it's not quite as good. So it really is depending on who we're talking to. And the reality, and people forget this, is that we're not supposed to know exactly what's going to happen, because if we did, then that would actually be adverse for us. We have to rely on the fact that these people have information that the general public does not have, and that's what they're acting upon. But that's lost in the translation. And of course, the midterm elections will really hone in on that. The oil prices, the inflation, the fear mongering of the whole affordability conversation is going to be exhausting in the next few months.
Right.
So we'll see. It's no different than any other election.
Yep, just with a war in the backdrop, I guess. Nancy Daoud, private wealth advisor, Ameriprise Financial down in there in Miami. She's a UConn grad, so she's all dialed in for both the women's and men's NCAA basketball, that's for sure. Let's get back to trade here. It's going to be, we have President Trump going over, scheduled to go to China in the next several weeks, and trade will certainly be front and center. And China, they've started a pair of investigations into U.S. trade practices, so they're not going quietly. They're
taking a page out of President Trump's book,
his
playbook.
Yep. So we'll see how that plays out. Brendan Murray, global trade editor for Bloomberg News. He joins us from London. Brendan, talk to us about kind of current trade between the U.S. and China and maybe what both sides would like to achieve in this upcoming meeting that is scheduled between President Xi and President Trump.
Right. So things are pretty stable right now between the U.S. and China when it comes to trade. They announced a truce in their tariff wars last year, and that has pretty much held intact. And we're going to see if it continues to hold heading into this summit in mid-May between Presidents Trump and Xi. What we saw from China today was basically the mirror image of what the U.S. did to China 2 weeks ago, and that is launch an investigation into what they consider to be unfair trade practices. And those investigations can lead to tariffs of as high as they want to go. And so what we're seeing is basically the typical kind of jockeying for leverage ahead of the summit, and the both sides saying, this is how I can hit you if you don't give me what I want in these discussions leading up to the meeting between the leaders. What we're really going to be interested in finding out next is, what are they going to ask for? What is China going to want in return? And what is President Trump going to want from China in return? Both sides will try to hammer those details out over the next several weeks.
And of course, you also have the war in Iran as a backdrop here. It's delayed this summit between Xi and Trump until May. It was originally scheduled to take place earlier. How else has the war on Iran affected and influenced what will be these critical trade talks? Because obviously China does business with Iran and China gets oil from Iran.
Yeah, exactly. It really has highlighted the fact that China and much of the rest of Asia is very dependent on oil from the Mideast. And so the Chinese will be looking for some sort of off-ramp if we aren't there, if the war is still going on in several weeks from now, because the price of oil is really hurting not just China, but other countries across Asia. And so there's leverage there that you could say that President Trump could apply, and China as well could say, look, you could do us a favor and try to stabilize the situation sooner, as soon as possible.
Brendan, some folks are speculating that by setting a date here, President Trump is signaling that the war won't go up to that date, that he wouldn't necessarily visit China, engage in those talks while a hot war was going on. What do your sources say about that?
Yeah, I mean, we've heard President Trump throw out dates and deadlines all the time and then shift them as he needs to. So I wouldn't put too much stock in the fact that the mid-May date is something that signals when the war would be over. President Trump figured out that he couldn't meet with the Chinese leader while there was a war going on, and so they had to sort of save face and push that meeting out. China has not confirmed that that's actually the date of the meeting, and that's not unusual for China, but still there's some flexibility in there. You can imagine if the tensions and the conflict in the Middle East are still going on.
Brendan, do you expect Taiwan to show up in any way in these trade talks?
Yeah, absolutely. I mean, this is what China wants. It wants some, it wants the U.S. side to give it some of what it's asking for in regards to Taiwan, and so that the geopolitics and trade are all kind of interwoven into these, and you can bet that's what will be front and center for China with these trade talks.
Who has the leverage in a trade talk right now? I have no idea, the U.S. or China. How do you read it?
Yeah, I mean, it's difficult to game this out because, last year we saw China with a lot of leverage, and they used it in the critical minerals monopoly that they had in the global marketplace. And so you could argue that, President Trump has midterm elections coming up, and, raising tariffs really isn't going to be in the interest of the U.S. economy in the short run. And so you could argue that China is feeling pretty confident that Trump doesn't have the big tariff card to play this time around, at least in the short run, until the midterm elections are over with. But then again, President Trump has shown that he's undertaking these investigations. From those, the tariffs that he could impose could be very high, and so there is some leverage on the U.S. side as well.
All right, good stuff. Brendan Murray, thank you so much, global trade editor for Bloomberg News. And of course, I'm sure he is getting ready for the weekend where anything could happen. The president could announce something related to trade. He could announce something related to the war in Iran.
Yep.
He has a habit of what our reporters are calling kind of dropping a seismic Saturday news development for everyone to respond to and maybe get ready for the following trading week.
Yeah, it's a 24-hour news cycle with this president. We learned that in the first term, and if you're covering him, you better have a big team of people covering this administration, because it can make news. This president can make news at any time. The sell-off continues here. The S&P off 0.9%, the NASDAQ off 1.2%. This is
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. The NASDAQ 100 index moves into a correction. Right now down 1.3%. The Dow, the S&P, NASDAQ, they're all in the red. S&P keeping it all in context, down 1%. The Dow also down by 1%. S&P, by the way, dropping 63 points now to 64.14. NASDAQ down 1.4%. Again, the NASDAQ 100 index in a correction, down 1.3%. The VIX at 30. Even 10-year 4.44%, the 2-year 3.95%. Gold is up $83 the ounce, up 1.9%, 44.60 now. West Texas Intermediate crude just above 98 a barrel, up 3.8%. Barrel of Brent holding above 110, up now by 2.5%. The University of Michigan is out with its Consumer Sentiment Index, and it slipped to a 3-month low in March. And year-ahead inflation expectations jumped as the war in the Middle East drives up gasoline prices. Joanne Shu is Director of Surveys at the University of Michigan. She was a guest right here on Bloomberg Intelligence.
Essentially, after the start of the Iran war, we have consumers being quite worried about the trajectory of the economy. Primarily, this is coming through worries about both gas prices and inflation overall. We have a pretty large surge in short-run inflation expectations, and we had a deterioration in one-year expectations on multiple dimensions of the economy.
Joanne Shu of the University of Michigan, interviewed right here on Bloomberg Intelligence. Pernod Ricard and Brown-Forman, the owner of Jack Daniels, are discussing a merger as the alcoholic drink companies look at ways to consolidate amid an industry downturn. A combination would bring together Pernod's brands like Martell Cognac and Absolut Vodka, along with Brown-Forman's whiskeys and other brands. ADRs of Pernod are up now by 6.4%. Brown-Forman, the Class A shares are up by 3.8%. Recapping, stocks move lower. We've got the NASDAQ 100 index in correction territory, down 1.3%. The S&P down by 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube and on Bloomberg.com. Finishing up kind of week 4 here of this war in Iran. The Pentagon has reported that they have inflicted serious damage on Iran and have achieved most of the military goals. But if you're in the Republican Party, a leadership position in the Republican Party, you got to wonder at what political cost to the president and what political cost potentially to the Republican Party. Our next guest can help us frame that out. Wendy Schiller, professor for Brown University. Wendy, again, if I put myself in a leadership position in the Republican National Committee, this war is not a good thing on any level. What are you hearing from the RNC and leaders in the party?
Well, you know, the RNC, Paul, has done very well with fundraising. So, you know, last week we saw sort of celebration. They have far more resources than the Democratic Party does at the national level, the DNC. So when you look ahead to 2028, I think they're thinking we're still really raking in the dollars, you know, and where do we get positioned to keep the White House in 2028? You know, how long can this war go before there's sort of reverb on 26, but also reverb on 28? So I think that's where they are. But you can see the members of Congress on the Republican side understanding that they, you know, they're basically going to end the shutdown. The Republicans made a big concession, keeping the ICE funding off the table and just letting everything else get funded. That's a concession to the Democrats' objections about ICE tactics. But they recognize that they're in negative territory with the president, who's in negative territory. And as you mentioned in the run-up, on the economy. And I think the war in Iran is not as troubling to Americans yet because we don't have massive ground troops. But certainly the prospect of increased fuel costs, in particular gas costs already, that is really starting to hurt Republicans who are running at a more local level, which is to say Congress.
But the idea is if this war can be wrapped up, you know, by the summer, in a couple of months, by November, everything should go back to normal in terms of the war has ended and oil prices will be on their way back down, if not back to prices that we had seen before the war began.
Carla, I think that all depends on how you calculate the beginning of summer. Memorial Day weekend is typically what AAA always talks about in terms of driving. If consumers are paying a lot more money for gasoline in May and June, and even through July 4th, our 250th anniversary, that will not go away. That kind of pinch will still, voters will remember that. Oh, my summer vacation cost me a couple of $100 more. So I think it's got to end before Memorial Day in terms of the reverb on the economy.
What is the support level, I guess, within Congress for the president and this war? We know that his approval ratings are low, but boy, the military's had some tremendous successes so far.
Well, certainly, I think that President Trump can make an argument that he has done more damage to the political infrastructure and even the nuclear capacity of Iran than his predecessors Biden or Obama did. I think he can walk away with a victory on that now. But, decapitating that leadership, really regime change is not going to happen without ground troops and hundreds of thousands of ground troops. That's not something they've finally realized now. I think shortly after they started this thing, you can't do it without ground troops. And I think that's an area Trump does not want to go. So I think that the members of Congress have said they support the president. Iran's an enemy. Iran's the largest sponsor of world terrorism that we know of. But they have said they have strong concerns about any plan for massive ground troops. And I think they're sticking with that. And they're hearing from their Republican voters in their districts, do not do this. We do not support this. Even MAGA is split nationally. Some very loud voices in MAGA are saying, we didn't sign up for this. It's not what you promised us. We don't want any part of it. And also looking like he's pressured from Israel is also a liability in MAGA. In ways, the Democratic has its own liability, the Democratic Party with Israel, but the Republicans have a liability with Israel in the Iran war as well. So I think we're getting a lot more loud discontent that could absolutely reverb on the Republicans with people staying home in 2026.
It's kind of hard to understand what victory looks like because the public didn't really get a full explanation of what the war was meant to achieve. So is it a victory for the president, for Republicans? Is it mission accomplished if there is no regime change in Iran, if there is no seizure of Iranian uranium?
Well, that's absolutely the point about the messaging around this war. Unfortunately for the Trump administration, their messaging was mixed. You can't have that and then claim a clean victory. The messaging was we were supporting our ally Israel, or the messaging was Iran poses a direct threat to the United States. And those people who are old enough to remember the Iraq War under George W. Bush, when that same messaging came out, and we later learned after 15 years of war that they weren't really a direct threat to us, that is the big fear, I think, amongst a lot of members of Congress, Republicans who remember that as well. So is it a threat or not? We can certainly say that the terrorism that's been funded by Iran has threatened not only Israelis, but people all over the world, in France, all sorts of terrorist attacks, Africa, America, that there is a threat and that it's a continuous threat. And that has to be visibly stopped. And then in terms of nuclear progression, that's going to depend on access. Can we get in to verify how far we have set them back? And that will be a condition of any cessation of hostilities that I think the Trump administration would insist on.
30 seconds left. Wendy, what do you think the strategy for the Democrats should be leading up to the midterms?
Democrats also face the problem with simplifying their message. It has to still be affordability. It has to be gas prices. It has to be housing. And it has to be health care, because that's when they win elections. Those messages win them elections. When they get into international relations, as we saw in 2024, it gets very divisive and very difficult for them. So they have to critique this, but they have to really always come back to how it's affecting the daily lives of Americans.
All right, Wendy, thank you so much. Appreciate that. As always, Wendy Schiller, professor at Brown University, joining us via Zoom from Providence. Markets continue to sell off here, Scarlett.
Yeah, I like what she said about how the Democrats have to critique this, but I feel like they also have to offer a solution. You can critique and win elections, and then if you don't do anything about it once you are in office, then you're part of the problem again.
Yep, absolutely. So we'll see how that messaging goes, and we'll see what happens over the next coming days. This is probably a war that lasting longer than most people thought, at least initially, or certainly wanted, but we'll have to see kind of what breaks over the weekend, because news tends to break over the weekend for this president, particularly when it goes down to Mar-a-Lago. Looking at the markets, S&P is off 55 points. That's 0.9%. The NASDAQ down even more, down 270 points. That's 1.25%. The big culprit here, we've got oil pushing higher yet again. WTI crude oil up 3.9%. We're at $98 per per barrel. WTI crude, Brent close to $111, close to the high of the day.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good Friday morning, everyone. We are, of course, Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. And because it is Friday, let's just take a step away from the market action, at least for a few minutes,
Sure.
the war in Iran, and talk a little bit about the business of sports, because the owners of NBA teams have voted to consider expanding their league and adding franchises in a couple of other cities. Let's bring in Randall Williams, our Bloomberg Business of Sports reporter, on this story. And Randall, we're now looking at possibly a Las Vegas franchise, a Seattle franchise?
Yep, and it was always going to be those two cities. The league was open to listening to more offers from other cities. You think Nashville, you think Kansas City, you think maybe Vancouver or Mexico City. But Seattle and Vegas are proven sports towns. Seattle used to have the Supersonics, and Las Vegas has a bunch of different sports teams. I would consider it the sports capital of the world right now. So they'll be listening to bidders over the course of many months, and if they find the right price and if the bidders get the right number, then we'll go from 30 to 32 NBA teams.
All right, if I want an NBA team, what's it going to cost me to get in the door?
I would guesstimate it is going to cost you at least $8 billion. They're saying 7 to 10 is the range. I think Seattle will go for probably between 7 and 8.5, and I think that Vegas team could easily reach 9 to 10.
And who are the obvious bidders here? Who are the people who are right away going to be putting together packages?
Sure. So Samantha Holloway, who is David Bonderman's daughter, is the owner of the Seattle Kraken. She just formed this holding company called One Roof Sports and Entertainment. She owns the arena, or that has partial ownership of the arena, which is Climate Pledge Arena in Seattle. She's the heavy favorite in Seattle. In Vegas, you have Bill Foley, who is the Vegas Golden Knights owner. He controls alongside MGM and AEG, T-Mobile Arena. And so I think if you have arena ownership and you don't have to spend another $1.5 billion to $2 billion, then that's going to enable you to get a bit ahead.
Yeah.
Now, who knows? Maybe someone does come in and say, look, I'll build a stadium in Las Vegas or in Seattle. I think it would be difficult, but those two would be my leading favorites right now.
All right, so we're just had opening day for Major League Baseball. Let me take it down to the dark side.
Uh-oh.
Are we going to get a work stoppage next year in Major League Baseball?
Absolutely.
You think so?
I think
Absolutely.
so. I think so. I mean, look, you think about the collective bargaining sessions that we just finished with the WNBA. I think we talked about it last week. Everyone that I've talked to around sports has said that that is the prelude to what is coming with baseball, which is really a war of, do they want to have the owners have a salary cap, or do the players who are probably going to be negotiating for a minimum floor spending, because you have teams that are just content with not spending any money and being loser franchises. And then you have those same owners complaining about how you have franchises like the Yankees, the Dodgers, the Blue Jays, who spend so much on players that there's nothing left. So it's really going to be an argument for the heart of baseball.
Feast or famine in the MLB, essentially.
Right.
Is there parity in the MLB? I mean, are there changes they can make to create more parity?
I'm in favor of having a minimum floor spending, and the reason for that is because, like, you think about the NFL, and the NFL turns over playoff teams literally every single year. That doesn't mean that that team is able to win the Super Bowl, but we see a lot of turnover. Different teams make it, and in baseball, it does feel like the same teams are winning. Now, I'm definitely rooting for the Dodgers in terms of the dynasty effect. I think having a franchise to chase, having a franchise to beat, then gives the hero and the villain side of things. The city of Los Angeles thinks they're the heroes and everybody else thinks they're the villains. At the same time, there are other franchises out there. You think about the Pittsburgh Pirates, you think about the Miami Marlins. Like, these are franchises that no one really talks about, and it's because of the fact that we might not see the investment from their owners in terms of how, you compare that to the Yankees, the Dodgers, and maybe they don't have the deep pockets. But, you want to be competitive, I would think, and that's not happening right now.
But this will, if there is a work stoppage, it will be because the owners are bringing it, because the owners, by and large, is it fair to say the owners want a floor here, or do the owners are going to take this work stoppage because they want a cap?
They want a cap, I think. The players, the MLB Players Association scored probably the biggest win of any Players Association ever with not having a salary cap, because that's how you get a $700 million deal or a $500 million deal. Like, it's not out of the ordinary if someone were to one day get $1 billion contract. Shohei is going to top that right now in terms of, we're not paying anyone more than Shohei, but for owners, like, you think about the Dodgers, they just retool every single year because they can. They don't have a spending limit. And if you have an owner who's willing to pay tremendously more than another owner who might not have that, then there's going to be complaints and be like, listen, we need to get control of this spending, because at the end of the day, this is going to become a game in which if you spend the most money, then you're going to win.
Let me just bring this full circle. We're talking about NBA expansion to 32 teams from the current 30. The NFL already has 32 teams, as does the NHL. Baseball has 30 teams. I mean, are we going to potentially see expansion of MLB franchises?
I think that baseball will consider expansion after collective bargaining, when that ever ends. All of these things seem very dire at the beginning because they are clashing. You think about the conversations we were having about the WNBA a year ago. It seemed like they were never going to come to a deal. But the reality is they will at some point.
They need to.
Right, exactly. They both have a vested interest in playing. And I think baseball will probably expand to Nashville. I think Nashville's could be a good baseball town, and they'll find another city/location, and they'll go from there.
But it took Major League Baseball half a decade to get back the goodwill, and it took juiced baseball players to do it.
Yeah.
This would be bad for Major League Baseball. I mean, like, fundamentally, generationally bad, potentially. Randall Williams, U.S. sports business reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. We appreciate that. There's always stuff to talk about the business of sports, that's for sure. Big, big dollars. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just moments with a sell-off continuing in the marketplace here. Stocks near their intraday lows. The S&P is off 0.8%. NASDAQ off 1.2%. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Friday morning. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu, as well as Charlie Pellet. We are in the Bloomberg Interactive Broker Studio here in Midtown Manhattan, and it looks like nobody wants to be long before the weekend and the prospect of some Saturday surprises from the White House. You see equities selling off right now. We also see bonds, at least at the short end, selling off. We'll get into all of that in just a moment, but we have a big show today in the second hour of Bloomberg Intelligence. Nathan Dean will be joining us. We're going to get the latest on the Homeland Security deal. The Senate has passed a deal, and now we're waiting for the House to do the same. George Ferguson, our senior aerospace, defense, and airlines analyst, will be joining us on the latest airline news to follow up on that theme. There is some talk, perhaps, that JetBlue is interested in making a deal with someone. Elizabeth Rember is our Muni reporter. She's going to give us the latest in the Muni bond market. And we're going to check in with Ryan Egger, our senior gaming and lodging analyst, on earnings out of Carnival. In addition, Dana Dioria, co-CIO and group president at InvestNet Solutions, will be joining us for her take on the markets. And then we're going to wrap things up with Matthew Schettenhelm, our media litigation analyst on Meta and Alphabet. Of course, losing that trial over social media addiction and what happens next. First, though, let's bring in Charlie Pellet for our Bloomberg Business Flash. Charlie.
Hi, thank you very much, Scarlett Fu. Here's what's going on. Do want to begin with a developing story headline on the Bloomberg Professional Service. FBI Director Kash Patel's personal email said to be breached by hackers linked to Iran. That, according to sources. Again, the report from CBS News and Reuters. The Dow, the S&P, NASDAQ, all in the red. S&P down 50, drop there of 0.8%, 64.27 where we stand on the S&P. NASDAQ down 1.2%. The Dow down 0.7%. The NASDAQ 100 index, it is official, now in correction territory, with the NASDAQ 100 index now down by 1.1%. The VIX at 29 now, with a 10-year 4.42%, the 2-year 3.93%. Familiar market themes. We do have traders driving global stocks and bonds lower ahead of the weekend on concern that a protracted war in Iran will keep oil prices elevated. Gold up 3% now, up 133 the ounce to 45.08. West Texas Intermediate crude 98.04 a barrel. WTI up 3.8%. Barrel of Brent 110 a barrel right now, up by about 2.6%. Well, as for the U.S. stock market, yes, a down Friday here. Michael Darda, the chief economist and macro strategist at Roth Capital Partners, told us on surveillance this morning you cannot ignore this market's resilience.
If we listen to what individual committee members are saying, they're just very uncertain. They're not sure how this oil shock is going to play out, how long it'll last, what the overall impact is. I mean, let's not forget the U.S. since 2018 has been a net exporter of oil and energy products. And so, I don't want to say we're completely insulated, but it's certainly going to hurt other economies in Asia and Europe far more than it hurts the U.S.
Michael Darda of Roth Capital Partners discussing oil and the Fed this morning on surveillance. Again, WTI up 3.8%, 98.07 a barrel. Brent 110.77 now, up 2.6%. The NASDAQ 100 index in correction territory, down 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Looking at the market here, the sell-off is continuing, as Charlie was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
We can go ahead and start off with CrowdStrike. That's ticker CRWD. It's falling about 5.6% right now. That's after Fortune reported earlier today that Anthropic is testing a new AI model that could pose significant cybersecurity risk. As we already kind of know, this year has kind of been a question of how will AI impact security and also software names. And they are definitely falling with the rest of their peers. Piper Sandler saying that while CrowdStrike hasn't been spared from that sell-off, they still feel incrementally positive about their strategic positioning. So we'll keep an eye out.
It just continues to roll through the entire software sector. All right, let's move on to something not involved in software, Carnival.
Yes, Carnival, ticker CCL, sliding also about 4.2% and continues to be down more than 20% this year.
Ouch.
That's after Carnival's full-year outlook disappointed investors as the Iran conflict continues to drive up fuel costs. The firm forecast adjusted earnings per share and adjusted EBITDA for the year that fell well short of expectations. As we already know, it's been a very tough year for cruise operators and just other travel stocks across the space as they face higher fuel costs and potential hits to routes because of the war.
And we're going to have Brian Egger from Bloomberg Intelligence joining us later here this hour. He covers Carnival, so we'll get the latest analysis there. Entergy, ETR.
Yes, finally found a green spot within a ton of red, gaining 7.2% to hit a record high. That's after Meta agreed to fund 7 gas plants to provide electricity to a data center it's developing in rural Louisiana. The deal continues to build on a previous partnership that they had with the company. Entergy says that the deal is structured to ensure Meta pays its full cost of service and expects the partnership to deliver more than $2 billion in customer savings. That's fairly important considering earlier this month, President Trump did demand that companies pledge to pay for their own electricity to help make sure that power bills don't rise too much. We'll continue to keep an eye out for that as well, but the AI infrastructure boom continues.
All right, good stuff. Thank you so much. Avalon Purnell is our Bloomberg Equities reporter. And for more conversations like this, be sure to subscribe to our Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Paul, you and I both have children who are going to be flying this weekend.
Yep. Mine's en route as we speak.
En route. So she got on with no problem? How long did she wait?
Yeah, but she got in there at 3:30 a.m. to LaGuardia. TSA opened at 4:15, so she was right at the front of the line. She said it was fully staffed, so she felt like it was fully staffed.
Oh,
so
okay.
We'll see how that goes.
All right, that's encouraging.
Yeah.
I have a child who's going on a plane on Sunday.
Okay.
It'll be 4 p.m. JetBlue out of JFK. Oh, boy. I know. So let's bring in Nathan Dean. He is our senior policy analyst on the top political stories. And I think the one that gets everyone's attention right now, Nathan, is the eternal lines for TSA at the airports across the nation, particularly places like JFK, Houston as well, LaGuardia to a lesser extent. What is the latest here? Because we know that the Senate has passed a deal to fund Homeland Security, to fund TSA, and the House has not yet done so, right?
Yeah, that's right. So just this morning, the Senate passed a bill that would actually fund the bulk of DHS minus ICE, which, as a reminder, gets its funding through the One Big Beautiful Bill through fiscal year 2029, and now goes to the House. The problem is that there's some logistical House issues, namely that under the rules of the 119th Congress, you can't consider a rule this quickly on Thursdays, Fridays, Saturdays, or Sundays, and you need unanimous consent to just get past that. The problem is that the House Freedom Caucus, certain members aren't happy with this bill because it doesn't include the Save America Act. This is the bill that President Trump's been pushing about voter ID rights. So they have to go through this decision of, okay, does President Trump need to get involved here and tell the House Republicans you need to pass this en masse, or do Democrats get involved here to try and bypass that Rules Committee? Long story short is that it's either going to pass later tonight through some very messy logistical issues, or it may have to wait until Monday when they can actually come back and consider it under suspension of the rules.
You can't make this stuff
Wait,
up.
which days can they not do that? Thursday, Friday, Saturday, Sunday?
Thursday, Friday, Saturdays, and Sundays under the Rules Committee. And this is partly because, you know, the House Freedom Caucus in particular has a couple members in the House Rules Committee, and this is where they get their leverage. So they can actually get leverage on a bill before it gets to the floor. And they, in the past, have been very upset about the fact that, you know, in order to pass something quickly, it bypasses them, goes straight to the floor. So they put it into the rules when they began, you know, this congressional session. But you can always change the rules, but it takes a 2/3 majority to do so. And that's where the struggle is, because you would need Democrats, and the Democrats right now haven't opined on where they're thinking at the moment.
You would think, Paul, that they want to get this passed so that they can go home themselves for their recess.
Yes, that's a good point. So how do you think this is going to play out, Nathan? You're good at putting probabilities on things.
Yeah, so, you know, for, you know, Scarlett, for your child on Sunday, you know, I think, look, It's going to get funded early next week. By early next week, this will get funded. There's really not going to be any more drama over this. And, for all the talk that President Trump has said in terms of the Save America Act and, the filibuster, that is going to transform from this debate into a reconciliation debate. So think of the One Big Beautiful Bill, Part 2. Now, this is where the Iranian supplemental defense package of reportedly $200 billion is going to go. And so you're going to see Republicans over the next week or so, when they get back from recess, so in 2 weeks, you're going to see Republicans really try and hammer out what this idea of a reconciliation bill looks like. Because if it's small and narrow, tied to that $200 billion, I think the Senate can ultimately pass that. Senator Majority Thune has even said that he thinks he can get there. But, these bills start small and then they balloon big. And if you get a $1.5 or a $1.2 trillion reconciliation bill with a margin of only one vote in the House, the Republicans are going to really struggle to get that past the finish line.
I'm at a loss.
Yeah, I just
That's why I depend upon Nathan just to tell me what I need to focus on.
Well, I mean, the takeaway here is that it's kind of a big mess.
Yes. So, all right, talk to us about this $200 billion Iran defense ask here. Is this something that can get done, or as you suggest, it'll get passed, but it'll have a lot of other stuff on it too?
So I think it will get passed, but let's talk about the process and the amount. So right now it's been reported the Pentagon is looking for $200 billion. The bulk of that is for anti-missile and counter-drone technology. So look at Lockheed, RTX, and Northrop Grumman. Those are the programs in particular that would be applicable to this. Now, the Pentagon is going to ask the White House. The White House then has to ask the Congress, and the Congress has to try and pass it. Now, at each stage in that process, this number can go from $200 billion to $300 billion. We've even heard House Republicans say that they want to attach $15 billion worth of farm aid to this. So if they pass it via reconciliation, I would expect for this price tag to increase. But once it gets past like the $300 to $500 billion number, then Republicans are going to start getting a little bit concerned here, because if you go through reconciliation, which allows you to bypass the filibuster, every dollar you spend has to be offset somewhere else in terms of like economic growth or tax, increases or anything like that, or budget cuts. And that's just very difficult, because at the end of the day, if anything that they were considering a reconciliation was easy, they would have done it in the One Big Beautiful Bill last year.
Yeah. Now it's all the complicated stuff. Nathan, fantastic summary of everything. Nathan Dean is our Bloomberg Intelligence senior policy analyst on the top political stories. So it looks like there will be some kind of deal to fund the TSA part of DHS, but probably not till early next week.
Nathan puts out a note, I think it's Friday afternoon or something, just kind of like, hey, this is what happened this past week. This is what's going to happen this week. I just read that over the weekend. I figured that's enough. I mean, that's all I can take coming out of Washington.
At least for those who are going away for spring break next week, things should be better.
But the Congress still gets their spring break.
I know, this is so unfair.
Their recess, their recess. Like
it's a spring break.
Like they're going out.
It's their spring break. All right, let's bring in George Ferguson. He is our senior aerospace defense and airlines analyst. And George, there was a headline earlier this week that got my attention, which is JetBlue looking to team up with someone, looking for a partner in some capacity. It was reported from Semaphore, and JetBlue has tried this before. It tried to merge with Spirit Airlines, or tried to buy Spirit Airlines, and it failed in that quest. What do we know about JetBlue's M&A ambitions?
Yeah, so we haven't heard anything out of JetBlue, right? But when you look at JetBlue, I think that one, sort of their financial performance hasn't been great since the pandemic, partly due to this failed merger with Spirit Airlines. And so you could see, as they're looking out at the U.S. market right now, fuel prices have doubled. They're probably thinking demand's going to come down pretty hard. It's going to be hard to sort of turn around financial improvement in that environment. And so I'm not sure, who Semaphore talked to inside, but I don't think it's hard to see how JetBlue would be starting to think about what might be different permutations of how they could get the carrier through what I think is going to be a difficult summer for the business.
George, typically, can airlines pass along fuel increases like we're seeing here, these huge jumps in fuel prices? Can they pass that along to consumers, or that goes into their bottom line?
So I think the opportunity to pass it along is pretty good this time. And typically they do. Typically, they pass it along at a lag. And so the airlines usually will go through a bumpy ride, in their profits for a little period of time, for, I don't know, a quarter or something like that, as they're getting ticket prices up. If you look at the U.S. airline business right now though, nobody hedges inside the business anymore. It used to be there was a smattering of airlines that hedged. Southwest was one of the bigger ones that hedged, and you might have some Alaska, some JetBlue hedging. Nobody really hedges anymore, and that means everybody has to increase ticket prices so that it can remain profitable. And I think that means the move to higher ticket prices it goes faster this time.
So when they increase ticket prices, is that something that's kind of static? It once it goes up, it goes up. It doesn't come back down. Or would any of them consider adding kind of a fuel surcharge the way a UPS or FedEx does?
Yeah, I mean, look, I always think of a fuel surcharge as a way of reminding your customer that the reason you're increasing the cost of the product that you're delivering to them is because of fuel. And I think fuel
not your fault,
surcharges
in other
always
words.
yeah, exactly. So FedEx goes, hey, look, sorry about it. The world economic environment is such that I'm going to have to charge you more because fuel prices are higher. Look, I think at airlines are a very competitive business. And so airlines see a lot of movement up and down in ticket prices. And so I think because of that competitiveness, yes, you could see where they would rise here. And then, as soon as you start to get decreases in the price of fuel, we typically see some of the airlines that want to take market share, they'll lower fares, they'll add to the airplane, add people to the airplane, and then the game starts over again, right? We start moving the wrong direction in fares if you're a shareholder.
George, what are the airlines doing in terms of capacity? Are they adding capacity to the system? Are they taking it down? What are they doing?
Yeah, so we're not seeing much yet. My colleague Francois Duflo put out a report this week. It's on our AIRLN dashboard. We haven't seen much movement. And my guess is that the airlines are probably waiting to see if this war could end quickly. If it ends quickly, maybe they don't have to take any capacity out for summer season. Summer's their peak season. They've probably sold a lot of it already. But I think if these higher fuel prices persist, I think you'll see as you get through summer, they'll have to start to cut capacity to keep fares higher. And that becomes part of the risk as well for the companies like JetBlue, Spirit, Frontier that cater to the lower tier of the traveling public. The challenge is their customers are probably going to be their budgets will be stretched a little bit more. And I think if you're United and you're American, especially United and Delta, and you've got a fair amount of premium travelers flying on your airplanes, they're not going to really be bothered, right, by a 20 or 30% increase in their fare price. They're going to keep flying, and those airlines are going to continue to subsidize the back of the airplane, that discount traveler, and it's going to make it harder to fill airplanes, I think, at the low-cost carriers here for a bit. So we'll see how it all develops.
I don't think they'll like the 20% increase in fares. They'll keep flying, though, because, they have places to go. George, thank you so much. George Ferguson is our senior aerospace defense and airlines analyst on the latest in the world of aviation. This is Bloomberg Intelligence. We're looking at declines in equities on this Friday, with the S&P lower by almost 1%, the NASDAQ off by 1.4%, and yields at the short end moving down. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks in the red. We've got the NASDAQ 100 index in correction territory. This Bloomberg Business Flash brought to you by Golden Quest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. Get a free gold and silver info guide. Learn how to add metals to your IRA or 401k tax and penalty free. Go to goldenquestmetals.com/guide. That's goldenquestmetals.com/guide. S&P 500 index down 59 now, dropped there of 0.9%. The Dow down 404. Right now, down 0.9%. S&P on track for another losing week. We are looking for a fifth weekly decline on the S&P. NASDAQ is down 1.3% now. The NASDAQ 100 index, as I mentioned, in correction territory, down 1.2%. The VIX just above 29 now with a 10-year 4.42%. The 2-year 3.92%. Gold up 3.8%, 45.43 the ounce. Brent right now at 110.80. That's a gain of 2.6%. West Texas Intermediate crude right around 98 a barrel, up 3.7%. Meta Platforms is paying for the construction of 7 new natural gas-fired plants to fuel its most power-hungry data centers, increasing its reliance on fossil fuels amid a fast-moving artificial intelligence race. The company has reached a new agreement with Entergy. Meta Platform shares today, right now we do have Meta trading down by 3.6%. Entergy is surging 7.1%. Recapping, stocks lower, correction territory for the NASDAQ 100 index, S&P down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. This is the time of the week. It's Friday. We talk municipal bonds. Today we do that with Elizabeth Rembert, municipal finance reporter for Bloomberg News, joining us here in studio. Elizabeth, I noted that you are a University of Nebraska graduate, right?
Yes.
Okay. Tough night last night for you guys, right?
Devastating. And all Nebraskan fans know we would have rather lost to any other team.
Than Iowa. So talk to us about that rivalry, because we don't really get that here in the East. Big rivalry, Nebraska, Iowa.
It really is. We're both in the Big Ten. We are neighbors.
Yep.
We play each other in football on every Friday after Thanksgiving. It's pretty intense. There's a rivalry over who has better corn, and the answer is Nebraska, of course.
Nebraska corn. That's awesome, fighting over quality of corn. All right, in the world of municipal finance here, I see some U.S. municipal borrowers are opting for shorter dated debt to cater to investors that prefer those maturities. What's going on there?
Yeah. So that's been something that we're watching in the market. A big theme last year was that there was just a lot of supply in the long end of the curve, and issuers were having to pay to incentivize buyers to buy out on that long end of the curve. And now it seems like the supply has been moving inward to take advantage of a bespoke type of muni account called separately managed accounts, which tends to focus on shorter maturities. So it seems like instead of wanting to lock in those rates for 30 years, have more time to pay back their debt, issuers are wanting to minimize the cost of capital and coming down to cater toward that investor preference.
Doesn't that create more risk for the borrowers?
Yeah, it does. But it seems like for now they're willing to take that on instead of paying for more to borrow money.
Because usually for this municipal borrowings, there's to build a highway or a bridge or something, long dated assets. So you want to get long maturities to kind of match there. But they're just saying, hey, they're doing the cost benefit analysis. Maybe it's a little bit better to go on the shorter end.
Exactly. Yeah, I've talked with some folks who have been in conversations with underwriters who are helping issuers sell this debt and with issuers themselves. And yeah, the calculus is just shifting more into let's minimize the cost of borrowing and come in shorter instead of trying to lock in that stability, minimize that risk. Instead, they're minimizing the cost of capital.
How short are we talking about? I mean, you've gone from what, 30 years to how many years?
Well, we ran some numbers on our using our Bloomberg data, and we saw a big jump in the issuance in bonds underneath 15 years. So inside of 15 years of maturity, we've seen a big jump compared to last year's numbers looking at sales this year.
All right, I see what you're doing here, you guys on the Muni team. You're getting into the March Madness here. I see. The best college basketball teams in the nation all have one thing in common. They're housed at universities with powerful financial resources. Yeah, so talk to us about that.
Yes, like Scarlett just said, big endowments. So we ran some numbers, and 24 of the 28 schools that made the Sweet 16, both on the women's and the men's side, have more than $1 billion in their endowments. And there's some huge endowments at the University of Michigan and the University of Notre Dame, and we know them as very powerful recruiting powerhouses. And let's compare that to what endowments typically look like across the higher education space. A survey that polled 650 schools on their endowments found that the median fund was just over $250 million, and more than a quarter of those participants had endowments of less than $100 million. So thinking about 24 of the 28 schools having endowments that are over $1 billion, these are very powerful schools with huge, deep pockets.
I didn't know that Michigan's endowment was that big. $18.9 billion for Michigan.
Yeah, it's pretty
Holy
mammoth.
cow.
They have a very loyal alumni base. And of course, speaking of loyal alumni, talk about Duke, because Paul is going to go there anyway, so I'll just beat him to the punch.
Yes. Duke is a powerhouse, and they certainly have a lot of resources as well at their disposal. They've got a prime credit rating. They've had great enrollment, and they're getting a lot of payments from their students for tuition and housing, and that helps pay student athletes for their salaries. That helps get coaches. It just helps have a really successful program.
Yeah, tuition and housing for 2024, Paul?
$90,700. I mean, unbelievable. Now they've got a $12 billion endowment, but here's the big but for higher education: the threat to funding from the U.S. government, the federal government, particularly as it relates to healthcare. So for the universities that have big healthcare components to them, like the Duke Medical Center is massive, and that's a big. It gets a lot of money from the federal government, from the Department of Health, and that's the flow that's been at risk, and that's been
Duke has not been targeted, really. I don't recall it kind of being in the headlines, right?
No, they haven't. But again, the NIH funding has been threatened, has been delayed, and that's had a monstrous impact at Duke. And so they've cut costs and done all that kind of stuff because they're kind of preparing for the worst. So anyway, so we'll keep an eye on that. But good stuff. Elizabeth Rembert, she covers all the Muni stuff for Bloomberg News, and she's a proud graduate of the University of Nebraska. Tough night last night for the Huskers, but they had a great. I'm 62 years old. I've been following college hoops since I can remember. By far the best year Nebraska's ever had. So
absolutely,
maybe we're on something. Elizabeth, thanks so much for your
Thank you.
That. Let's turn our gaze to the cruising business. I know nothing about the cruising business. That will change in October when I take my first cruise.
I know, he's finally taking the plunge.
Finally taking the plunge. But with the guy we have here now, our next guest is an expert on all this stuff. Brian Egger, he covers all the fun stuff: gaming, casinos, hotels, and cruises for Bloomberg Intelligence. Carnival, what's going on in Carnival here?
So they came out with what otherwise would have been a very good quarter in terms of bookings demand, 85% of the year sold, actually raised revenue yield guidance, but they had to cut EBITDA guidance because the cost hit from fuel due to the war in Iran. And so the underlying demand part of the business is quite good. You know, the concern would be if that war persists, they are modeling in a level of fuel cost assumption for the second half that might not be conservative enough.
The thing that people like about these cruise lines and cruise line operators is that they have a lot of visibility into their bookings, because people book years in advance or months in advance, as in the case of Paul Sweeney and his upcoming cruise. But that also locks in the revenue that they brought in. Do cruise lines add a fuel surcharge later on because, you know, oil prices have gone up so much, or is it something they just have to eat?
Well, I think the revenue yield management part of it is always the science behind it, because 85% of bookings sold. If you oversell too much and demand goes up, you're left with inventory that could have been sold at a higher price, or you're missing inventory. You're not seeing so much in terms of a fuel cost surcharge, but I mean, the reality is, even with $150 million in offsetting cost savings from efficiencies, their estimate is that the full year impact on their adjusted net income from the fuel price increases we've seen since December could be about $500 million. And our concern is that assumes 80 to 90 Brent in the second half. And what if that's much higher? That's the concern.
What are these cruise lines saying about their underlying demand at some point? Some of these inflation pressures, if they do remain here a little bit longer than maybe we initially thought, fuel in particular, but other areas as well, when does that typically impact the top line for those guys?
So I think, generally speaking, cost inflation can have an impact. The assertion of the industry would be that they are relatively affordable as per day compared to other forms of vacationing and travel. And so that's been a big underpinning behind their assumption they continue to get more consumer penetration.
And, you know, people might have pre-booked their cruises, but the amount that they spend is also another big revenue increase for these cruise line operators. I mean, that's where they make up a lot of ground. How do you expect that to play out if oil prices stay high? I mean, people are still going to go on their cruises, but they're not going to spend for the all-you-can-drink package.
Yeah, I mean, that may be a concern. Right now, the yield outlook is quite favorable. It's still solid, low single digits. Over time, an increasing portion of the overall revenue has come from either onboard ticket spending or pre-cruise purchases of excursions and other amenities. And all of that could be subject to vulnerability if there's a major change in discretionary spending.
On fuel for these big cruises, they don't use a lot of the alternative fuels, do they? They're just burning that big bunker fuel kind of stuff.
The mixes over time increased more towards LNG and other forms of, I guess, more efficient fuel and cleaner fuel. I think one of the cruise lines just announced its first hydrogen-powered ship. So they are looking at alternative uses, and a big offset to these cost increases has been fuel cost efficiencies. You know, the amount of metric tons of fuel consumed per passenger capacity day has over time gone down. So they've tried to get some offset and have gotten some offset from increased efficiencies, both from just the general way they operate, but as well as more efficient ships.
All I know is I'm sitting on the beach in Aruba, and I can see the smokestack from the little port there of Aruba, and as the shops are docked, and it's just billowing out the black.
And you're thinking, well, I'm going to join those people one day.
Exactly. But boy, that's just brutal. And they don't hedge, do they? Or do they hedge?
Carnival has not hedged historically. They've had in past years, have had some collars. Norwegian and Royal Caribbean do hedge. Okay. And so, you know, there's a cost benefit analysis to whether or not you put hedges in place.
Yeah, because George Ferguson was just telling us that the airlines don't hedge anymore.
Well, they got messed up during the pandemic, right? Yeah. And they all came out worse for it. So.
Yep. All right, Brian, thanks so much. Brian Egger, appreciate that. Senior gaming and lodging analyst, Bloomberg Intelligence, joining us live here in our Bloomberg Interactive.
Wait, I have a cool question. How many cruises do you go on a year?
A year? Oh, that's over time. I have gone on a number of cruises.
Double digit?
Well, it may be. Of course, I've been covering this sector for longer than as long as Paul's been doing this too. So yes, long time.
Long time. Yeah. So I've been out on the Disney cruise a couple times when they have a new ship. We'd fly out to LA, hop in the thing, they take us out overnight.
Oh yeah, but that's as an analyst.
Exactly, as an analyst. So yeah, I mean,
I have taken a vacation cruise separate from my role.
Yeah, there you go. All right, Brian Egger, thanks so much. Appreciate it. S&P down 35 points. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow, the S&P, NASDAQ all in the red. NASDAQ 100 index in correction territory. All of this as the escalating war in Iran boosts oil prices. Treasury yields are climbing. Right now we got the 10-year 4.41%. Equities lower. S&P down 42 at 64.34. Drop now of just about 0.7%. Wall Street on track for a fifth week of declines. Dow Industrials down 304, drop there of 0.7. NASDAQ Composite Index down 1.1%. The NASDAQ 100 Index down now by 1%. The VIX holding at 29 with the 10-year, as I mentioned, 4.41%. The 2-year, 3.91%. Spot gold up 3.6%, 45.32 the ounce, while West Texas Intermediate crude 97.48 a barrel, up 3.2%. Brent 110.34, up now by about 2.2%. So oil continues to advance. That means questions about how consumers will adjust to higher gasoline prices and ultimately what that will mean for economic growth. Stuart Paul is U.S. and Canada economist for Bloomberg Economics.
In the U.S. context, the thing that's going to matter most and where the rubber really hits the road is with gasoline prices and the consumer outlook. Where gasoline prices are now, it ends up equating to about a $12 billion a month drain on consumers' pocketbooks. That ends up going to gasoline retailers. It ends up going upstream to refiners, producers, into the energy infrastructure. But all of that money needs to be taken out of real spending elsewhere, and so we should be marking down our growth forecast by almost a percentage point.
Stuart Paul of Bloomberg Economics. In the meantime, Carnival Corp marking down its outlook of surging crude prices, driving up fuel costs. Carnival down 3.7%. Rival Royal Caribbean down 3.5%. Norwegian Cruise Line Holdings down now by 4.5%. Microsoft stock on track for its worst quarterly performance since the global financial crisis. Microsoft shares today down 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. All right, let's talk about the markets right now because it is a Friday, and what we've noticed is the president likes to come out with announcements over the weekend that kind of shake up the board completely. He has a pattern of this. The June 2025 bombing of Iran, the capture of Nicolas Maduro in Venezuela was also over the weekend, and of course the start of the Iran war took place over the weekend as well. So I guess it's no surprise that you're seeing a decline in risk assets. Equities are red heading into the weekend. So let's bring in Dana Dioria. She is co-CIO at InvestNet Solutions, and she joins us now from Hartford, Connecticut. I guess it makes sense, Dana, that people do not want to be long before the weekend because anything could happen. But you're of the mind that perhaps the worst of the oil spike, the price spike, may be behind us. Walk us through how you're seeing things right now.
Yeah, well, so I mean, it's not to say that oil is, going down or even might not continue to leg up, but we've probably seen, in terms of the big, price spike, we've probably seen what we're going to see. Unless this conflict widens, unless you really start to see direct targeting of energy infrastructure, which, you really can't rule out, right? I mean, the hostilities are obviously at this point past, at least from my perspective, obviously past what the administration thought they were going to get into when this started. The problem part of it, I think, is that Iran and Israel, to a certain extent, both appear more than willing to continue, right? Whereas I think the Trump administration, because of the impacts on the market and the economy, would like to see, some out here and is certainly looking for an off-ramp. I don't think the same can be said of the other two combatants here. So I caveat it with, obviously, if you start having energy infrastructure targeted, that's a different scenario.
So what's the message to your clients these days? I guess is it's, we're trying to adjust here on the fly, or we're looking past this to the other side. Don't make any changes. What are your conversations like?
Yeah, it's funny. I was just at a event with a bunch of advisors, and obviously this was sort of top of mind for everybody. I think, we're often accustomed to conflict like this sort of being looked through. There's an initial assumption that the powers that be have understood what the risks are, planned for it. There's an exit strategy. We're going to go, and something like what happened this summer, right? Where what happened in Venezuela, right? It's an in and out and an expectation, that markets aren't going to be too discombobulated. You can kind of look past it. I think what the market is starting to price in, and maybe hasn't entirely priced in, is the notion that we actually could be mired for a period of time, that there isn't a plan here really for an off ramp. And if that's the case, and I think, there's plenty out there now concern about the Strait of Hormuz, the fact that it's not just oil, it's fertilizer, it's potentially food impacts, there's other products, et cetera, that means inflationary concerns. And so I think, in terms of how you talk to clients about it, it obviously, one, volatility, right? The volatility is probably going nowhere. Two, you could start to see past the initial direct impact of energy, you could start to see this permeating more and more into different sectors, particularly the longer that it goes on. We all know it's going to take months, if not years, to repair the damage that's already done there. But if we knew that there was an off-ramp, if we knew the timeline, I think you could put some arms around it. The market could do its job. It could price the impact. I think the problem now is the uncertainty. And so for clients, that means making sure you're not overly invested in markets where you can't handle that volatility, because we could be in for a bumpy ride.
We could be in for a bumpy ride. It also complicates the picture for macro policy from the Federal Reserve. And in fact, traders are now starting to price in 50% odds for a rate hike later on this year. How are you thinking about this push from the administration for lower interest rates and the prospect that the Fed can't do anything about it?
Yeah, what a way we've come, right? In a month. We started this year with an assumption of 2 rate cuts. We've certainly, markets then pivoted to don't expect rate cuts. And now you're actually starting to see talk of rate hikes, of course. And, even suggestions around some of the great strength that we've had in terms of growth. Are we even looking at a recession? So I think at this point, you certainly can't count on rate cuts. Obviously, I've said in the past, this Fed's fail would be to let inflation take root again. This Fed has overseen, a huge spike in inflation. They don't want that to happen again. So notwithstanding, unfortunately, we do have cracks that we're seeing in the jobs market. I think they're going to focus more on inflation. And so again, if there's a clear timeline to this, I think the Fed historically has looked past an oil price shock, and you wouldn't have to worry about rate hikes if they could see, okay, this is going to end. We can get past this. But if there's not a clear off ramp, I think the Fed, just, in the same vein as the markets, is going to stay its hand and potentially even consider a move that it feels it needs to take to prevent inflation from ramping again. I know the president obviously has made clear his preference for rate cuts, but it will be very hard to make a case for rate cuts if we're still in conflict and energy prices are still ticking up.
Is this a time to go to your clients and say, hey, here's some names we like. They've traded off with the market here. We think this is a good entry point. Are we at that point? So
I do think that, diversified, careful sort of, hey, we're down. And, there's obviously an argument here, right? It's sort of binomial outcome. If we do see an end to the hostilities, or a timeline that we can actually trust and believe in for an end to the hostilities, then yeah, you could see markets kind of go back up and really refocus on, where are corporate earnings, which have been strong and are strong, right? So I do think that there's absolutely a branch of this decision tree that says that markets could be fine and this is a buying opportunity, but that's the chance you take, right? Is that might not happen now, like market timing, like any other time. It's not an easy thing to accomplish. In terms of particular names, I'm typically not a proponent in general of trying to take a bet on particular names. I'm even less a proponent of it during a market like this, because what you see is that it's not just the time series volatility of the market that increases, but you see cross-sectional dispersion increase. And so if you're wrong and you're taking a concentrated bet, you're more likely to really suffer the outcome. So we're working with retail investors who these are their retirement assets, right? I'm not a proponent of picking names. If anything, I'm a proponent of spreading it more.
All right, Danny, thank you so much. Appreciate it. As always, Dana Dioria, Co-Chief Investment Officer of InvestNet Solutions, joining us via Zoom from Hartford, Connecticut. Looking at the market, we're off 42 points on the S&P. That's 0.6%. The Nasdaq's off 225 points. That's 1%. A little bit off the lows, but still pressured. Oil higher by about 3% here for WTI and Brent.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com as well. Well, if you're anything like me, you probably feel like you spend too much time on your phone, particularly with the scrolling through the social media sites. New Year's resolutions every year usually include, let's spend some less time on the personal device, but that doesn't always work. It's tough to do. There's actually been the subject of a lot of litigation against some of these social media platforms, Meta, Alphabet, those types of folks. And there's been some cases coming down against these companies as well. So let's see what it means for a lot of these social media companies and tech companies in general. Matthew Sheltenhelm joins us here. He's media litigation analyst of Bloomberg Intelligence. Hey, Matt, it seems like we've had a couple of court rulings come down against some of these social media companies. Summarize what's going on out there, and does it pose a risk to these companies?
Yeah, so this is litigation that has been developing for the past 3 to 4 years, and it's finally, in the first couple cases in line, reached the stage of juries making decisions. So Meta had a loss in New Mexico state court when a jury announced a verdict of $375 million. We also, as you said, had this California jury come down with a personal injury suit on behalf of a woman who claimed that she was harmed by the social media's features. There, the jury came down with an initial $3 million award against Meta and Google's YouTube, and then added $3 million of punitive damages on top of that. These are just the very tip of the iceberg. There are a number of other cases lined up to go to juries this